Good afternoon, everyone. I declare open this meeting of the Senate Economics Legislation Committee. The Senate has referred to the committee the particulars of proposed expenditure for 2022-23 and related documents for the Treasury portfolio and the Industry, Science and Resources portfolio. The committee may also examine the annual reports of the departments and agencies appearing before it. The committee has set 18 November 2022 as the date by which senators are to submit written questions on notice, and 16 December 2022 has the date for the return of answers to questions taken on notice. Under Standing Order 26, the committee must take all evidence in public session. This includes answers to questions on notice. I remind all witnesses that in giving evidence to the committee, they are protected by parliamentary privilege. It is unlawful for anyone to threaten or disadvantage a witness on account of evidence given to a committee, and such action may be treated by the Senate as a contempt. It is also a contempt to give false or misleading evidence to a committee. The Senate, by resolution in 1999, endorsed the following test of relevance of questions at estimates hearings. Any questions going to the operations or financial positions of the departments and agencies which are seeking funds in the estimates are relevant questions for the purposes of estimates hearings. I remind officers that the Senate has resolved that there are no areas in connection with the expenditure of public funds where any person has a discretion to withhold details or explanations from the Parliament or its committees unless the Parliament has expressly provided otherwise. The Senate has resolved also that an officer of a department of the Commonwealth shall not be asked to give opinions on matters of policy and shall be given reasonable opportunity to refer questions asked of the officer to superior officers or to a minister. This resolution prohibits only questions asking for opinions on matters of policy and does not preclude questions asking for explanations of policies or factual questions about when and how policies were adopted. In particular, I draw the attention of witnesses to an order of the Senate of 13 May 2009 specifying the process by which a claim of public interest immunity should be raised and which I now incorporate in Hansard. Witnesses are specifically reminded that a statement that information or a document is confidential or consists of advice to government is not a statement that meets the requirements of the 2009 order. Instead, witnesses are required to provide some specific indication of the harm to the public interest that could result from the disclosure of the information or the document. An officer called upon for the first time to answer a question should state their full name and position for the Hansard record, and witnesses should speak clearly into the microphone. Please make sure all mobile phones are switched off or turned to silent. I remind senators and witnesses in the hearing room that microphones remain live unless I instruct otherwise, for example, at suspension or adjournment. For witnesses participating via video conference, please mute your microphone as the default and unmute your microphone when speaking. I ask members of the media to follow the established media guidelines and the instructions of the committee secretariat. As set out in the guidelines, senators and witnesses' laptops, mobile phones, other devices and personal papers are not to be filmed or photographed. I remind everyone in the gallery that they are not permitted to speak or interfere with the proceedings or with witnesses at any point during the hearing. Security is present and they will be asked to remove anyone who does not follow these instructions. Witnesses and senators who are seeking to table documents during the committee's hearings were requested to provide an electronic copy of those documents the day prior to the hearing so that the documents could be circulated electronically during the hearing. Please liaise with the Secretariat if you need assistance. The committee's proceedings today will commence with the Treasury portfolio, beginning with the Treasury's corporate and macroeconomic group. The hearing will then follow the order as set out in this morning's adopted program. Before we begin, I would like to place on the record my appreciation for the previous chairs of the Senate Economics Legislation Committee in the previous Parliament, Senators Brockman and Senators Scarr. And I would like to note the very collegiate and respectful environment that they fostered. We've always had good discussions on this committee. We've kept to time as best as we can. and there's always been ample opportunity for the opposition in particular to ask questions and provide the scrutiny that's required. So I look forward to continuing to operate in that environment of respectful and collegiate discussion, making best efforts to keep to time, and giving the opposition and crossbench in particular time to ask their questions, and to that end we'll proceed initially in 15-minute blocks. I now welcome Senator the Honourable Katie Gallagher, Minister for Finance. I also welcome Treasury Deputy Secretary Mr Luke Yeaman and officers from the Treasury. Would the Minister, the Deputy Secretary or officers like to make an opening statement?
Thank you, Chair. I've just got a brief comment to make before I hand to Mr Yeaman, but to the committee. Before we get underway, I wish to advise you that Dr Stephen Kennedy, Secretary of the Treasury, is not able to attend the committee hearing today due to a family emergency. Dr Kennedy's opening statement will be read by Luke Yeaman, Deputy Secretary, Macroeconomic Group, and Treasury officials from Macroeconomic Group and Corporate and Foreign Investment Group are here to answer your questions following the opening statement as per the program.
Thank you, Minister. Mr Yeaman.
Thank you very much, Chair. Thank you, Minister, for the opportunity. I will make an opening statement on behalf of Dr Kennedy, if I may, and I know that Dr Kennedy takes his responsibility to the Senate and to the Parliament extremely seriously, and he would be here if he could, so apologies on his behalf. The global economic outlook has deteriorated markedly since the April pre-election economic and fiscal outlook. It is becoming probable that major developed economies will soon experience recessions, and it is likely China will grow at the lowest rate in over 30 years outside of the pandemic. Inflation in many countries is at its highest level in the era of independent central banks. The primary causes of these ructions are twofold: pandemic and war. Overlaying these proximate shocks are enduring trends: rapid economic and social transitions to mitigate and adapt to climate change, ever-expanding demands on government to deliver services, a global demographic transition, and the re-emergence of great power competition with sharp rivalry between different systems and values. Such significant shocks coming in the midst of these powerful enduring trends is something that few of us have experienced, challenging policymakers both here and around the world. The successful pathway through these shocks is often described as narrow. I would instead say the pathway is partly hidden from us. Policy flexibility in the period ahead will be crucial. There are, however, bright spots. Many countries are experiencing near full employment conditions, and it is not lost on policymakers how valuable this outcome is and how we must do all we can to retain full employment as we tackle the inflation challenge. One of the impacts of Russia's unjust war against Ukraine is being transmitted through higher energy and food prices. International gas prices rose over six-fold from March 2021 to September 2022 and have been a key source of intensifying cost of living pressures for consumers around the world. Reflecting the same pressure on energy markets, thermal coal prices have risen more than fourfold. Together, this is driving rarely seen increases in electricity prices. In the UK, prices have already risen by 63%, in the euro area by 53%, and in the US by 27%, compared to pre-pandemic levels, and prices are expected to rise further in these countries. Rising gas and energy prices are combining with persistent supply chain pressures, extraordinary stimulus in response to the pandemic, adverse weather events, and interruptions to food exports to drive significant global inflationary pressures. Inflation is currently at 8.2% in the United States and at 10.1% in the United Kingdom, both around 40-year highs. In the euro area, inflation has reached 10.7%, the highest in the euro area's history. In response, central banks around the world are tightening monetary policy in what has been the most rapid and synchronised tightening cycle since the advent of inflation targeting. This synchronised tightening raises the risk of a policy miscalculation that could see a sharper than forecast slowdown across multiple countries simultaneously. Another key risk to global demand is a sharper slowdown of domestic demand in China than expected. Rolling COVID-19 lockdowns and a downturn in the property market have weakened growth prospects. Turning to the domestic outlook, we have been fortunate to be less affected than others by these global shocks in some areas, but nevertheless, we have been significantly affected. In response to the sharp recovery from the pandemic and inflation, monetary policy is rapidly tightening here in Australia. Reflecting this tightening, economic growth is now forecast to slow from 3.25% in 22-23 to 1.5% in 2023-24. Growth in 2023-24 is forecast to be 1 percentage point less than it was at PFO. Strong consumption growth of 6.5% in 22-23 is expected to be temporary, driven primarily by the ongoing rebound in services spending and international travel as the impacts of pandemic activity restrictions continue to wane. By early 2023, the services-driven recovery is expected to ease, with consumption growth slowing to 1.25% in 23-24. And as more mortgages roll off fixed-rate terms, an increasing number of households will see the impact of increasing interest rates on their budgets. Declining household wealth arising from ongoing expected falls in housing prices will further contribute to the slowing of consumption growth. Workers at the lower end of the income distribution are expected to be impacted most sharply by the rising cost of essentials, as the cost of food, housing and energy make up a larger share of their spending. The implications for welfare recipients and retirees are more complex due to indexation and higher interest rates, something I'll return to shortly. We expect the current very tight labour market conditions to gradually ease as economic activity slows. Employment growth is forecast to slow to 0.75% in 23-24, and the unemployment rate is expected to increase to 4.5%. While this is slightly above our assumption of the NAIRU, a proxy for full employment, of 4.25%, it remains well below pre-pandemic levels of around 5%. The expected impact of the recent floods in Eastern Australia has been partly incorporated into the outlook. These floods illustrate the risk of devastating weather events occurring more regularly and their impact on the livelihoods of Australians. Treasury's preliminary estimate is for floods to detract around 0.25 percentage point from GDP growth in the December quarter, largely offset by increased activity across the second half of the 22-23 financial year. On inflation, inflation is expected to peak at 7.75% by December 2022, before easing gradually to 3.5% by June 2024. While this peak remains the same as the profile prepared for the July ministerial statement, high inflation is expected to persist for longer than previously expected, largely due to the pass-through of higher energy prices to household bills. Electricity and gas prices are expected to directly contribute 0.75 percentage point to inflation in 22-23 and 1 percentage point in 2023-24. This assumes consumer electricity prices will increase by an average of 20% nationally this financial year and 30% next year. Data released by the ABS the day after the budget shows that excluding the temporary impact of state subsidy schemes, electricity prices would have risen by around 16% in the September quarter this year. The increase in prices this financial year reflects increases in the default market offers published in May by the Australian Energy Regulator and associated market dynamics. The same dynamics that are flowing through global electricity prices are flowing through here in Australia, albeit with a lag. Wholesale electricity prices this year have nearly trebled compared to last year, and East Coast wholesale gas prices remain more than double their average prior to Russia's invasion of Ukraine. At the same time, domestic weather events and supply constraints, combined with strong demand in residential construction and consumer goods, are contributing further to generalised price growth. Fresh produce prices were already elevated from severe weather events earlier in the year and are now expected to stay elevated following the October floods and continued wet weather. Turning to the fiscal position, the near-term outlook for the fiscal position has improved since PFO, with the underlying cash deficit improving by $41.1 billion in 2022-23 and $12.5 billion in 2023-24. Gross and net debt are expected to be lower in each year of the forward estimates. Higher than expected inflation has increased the cost of delivering payments. Excluding new policy, payments have been revised up by $92.2 billion over 4 years, around a third of which reflects increased indexation of payments. The latest income support payment indexation on 20th of September was the largest indexation increase in pensions in 12 years and allowances in 30 years. Higher inflation will continue to materially increase payments in subsequent 6-monthly indexation updates in March and September, until inflation returns to the RBA's target range. Payments will then stabilise at a proportionally higher level. While inflation weighs especially on lower income households, the automatic indexation of government payments to the headline consumer price index will likely shield the most vulnerable households from the worst effects, albeit with a lag. ABS living cost indexes for pensioner and other government transfer recipient households have grown more slowly than the CPI over the past 12 months. As a result, on average, for those wholly reliant on benefit payments indexed to CPI, their incomes will rise a little more than their living costs. This is an average calculation, of course, and we fully appreciate circumstances can vary widely by payment recipients. With prices set to grow faster than wages for a period, indexation of pensions will continue to be linked to growth in consumer prices, rather than benchmarked against male total average weekly earnings. Over the past 20 years, on average, the age pension was 27.4% of the male total average weekly earnings, or Matawi, for singles and 42.9% for couples. This is forecast to increase to 30.2% and 45.5% respectively in 2024, before slowly declining thereafter. Similarly, job seeker payments are also forecast to rise as a proportion of Matawi to 21.5% for singles, a level not seen since 2006. Price indexation of benefit payments through the inflation spike may therefore have the unusual side effect of reducing income inequality as payments grow as a share of average wages. High Australian dollar commodity prices and stronger than expected employment outcomes continue to support upgrades to the outlook for tax receipts. Excluding new policy, tax receipts have been revised up $132.5 billion over the 4 years to 2025-26, with around two-thirds of this increase occurring in 2022-23 and 23-24. As a net energy exporter, this is a positive offset to the negative effects of the war in Ukraine that few other countries enjoy. As commodity prices are assumed to return to their long-run fundamental levels and the labour market softens, the increase in tax receipts moderates. Over the medium term, the outlook for tax as a share of GDP is largely unchanged from PIFO. While the medium-term outlook for receipts is largely unchanged, payments as a share of GDP are expected to be around 1.5 percentage points higher by 2032-33. The three changes that drive this deterioration are assumed lower productivity, higher borrowing costs, and the upward revision to the estimated cost of the NDIS. By applying these changes to PIFO, we can illustrate their influence. For example, if these factors had applied at PIFO, the budget deficit would have been even worse in the medium term than projected in the current budget. Higher interest rates have increased government debt costs by $12 billion over 4 years. Higher interest rates steadily increase debt costs as the government issues new debt at higher interest rates to finance ongoing deficits or refinance maturing debt. The 10-year bond yield, which approximates the average issuance yield on new debt, is assumed to be 3.8% across the forward estimates, compared to 2.3% at PIFO. Over the medium term, the 10-year yield is assumed to rise to 4.3% by 2032-33, around 70 basis points higher than assumed at PIFO. When nominal GDP growth rates exceed the yield on debt, debt as a share of GDP will increase if the primary cash deficit, that is the deficit excluding interest, is not too large. At PIFO, gross debt to GDP was expected to begin to reduce in 2025-26, when the primary cash deficit was 0.8% of GDP. Higher borrowing costs and lower nominal GDP growth projections in the October budget mean more active budget repair is required to stabilise debt to GDP in a timely fashion. This means the primary cash deficit in 2025-26 would need to be around 0.5% of GDP to achieve the same debt reduction. Reflecting the changed debt dynamics, gross debt is now expected to stabilise at 46.9% of GDP in the final 3 years of the medium-term projection period. To canvass a few other brief issues. In this budget, the government returned much of the upgrade in receipts to the bottom line and constrained spending, significantly lowering near-term deficits and debt. There is the potential for further upgrades to the near-term receipts, reflecting the cautious approach taken to forecasting commodity prices. Should this be the case, it would be prudent to take the same approach. However, beyond the near term, the budget pressures are more profound and will likely require a combination of spending restraint and increases in taxes to reduce deficits and lower debt. We are fortunate in Australia to begin this journey with a relatively lower level of debt as a proportion of GDP than in many countries. Nevertheless, necessary policy decisions will be difficult in order to best promote the national interest. I am hopeful that having so fulsomely laid out the fiscal challenges in this budget, the subsequent policy debate will be productive, considered, and understanding of the need for trade-offs. In the light of the impacts of the Ukraine war on the economy, I thought it might also be useful to outline how at Treasury we are thinking through the impacts in providing advice to government. I will focus initially on the war-driven relative price shock. Economists are fond of saying that the solution to high prices is high prices. This is a shorthand way of saying that when supply is short or demand is strong in a particular part of the economy, high prices send a signal to suppliers and investors that it is worth investing in the area and supply expands. Moreover, the same high prices send a signal to consumers to look for alternatives and adjust their pattern of demand. Further, that calls for government intervention to address high prices are likely to get in the way of a necessary and ultimately helpful adjustment. There are many conditions that underpin this policy conclusion, but in most circumstances, Treasury would support such an approach. However, the circumstances of war-driven price shocks are different and outside the frame of such an approach. In our view, such shocks bring into scope government intervention. For example, the current gas and thermal coal price increases are leading to unusually high prices and profits for some companies. Prices and profits that are well beyond the usual bounds of investment and profit cycles. The same price increases are leading to a reduction in the real incomes of many people, with the most severely affected being lower income working households. The energy price increases are also significantly reducing the profits of many businesses and raising questions about their viability. In summary, the effects of the Ukraine war are leading to a redistribution of income and wealth and disrupting markets. The national interest case for this redistribution is weak and it is not likely to lead to a more efficient allocation of resources in the longer term. Policy responses could take many forms, but in the current circumstances of generalised price pressures, they need to be mindful of not contributing further to inflation. This would suggest to us that interventions that directly address the higher domestic thermal coal and gas prices are more likely to be optimal. Australia is uniquely placed to pursue this type of intervention, given it is a net energy exporter. I would add that as the shock to Australia varies by state and territory, reflecting their individual energy policies, any response should also take this into account. Further, such interventions need not subtract from policies that address the broader challenges to reduce the emissions intensity of electricity production in Australia if they are well designed. Given the hopefully temporary nature of the energy shock, measures to address the price increases should also be temporary and regularly reviewed. Even if the war in Ukraine persists, global supply and demand will adjust over time. There are many nuances and details surrounding policy development in these areas, but hopefully this helps the committee understand in broad terms how Treasury approaches these issues in developing advice for government. If I may, to finish, Chair, just talk through a couple of recent changes in the Treasury since the previous estimates. I'd firstly like to acknowledge former Treasury Deputy Secretary Marianne Rakovich, who recently retired after a long and distinguished public service career. Marianne appeared in front of this committee for more than 2 decades with distinction. I also want to acknowledge the contributions of former Treasury Deputy Secretaries Jenny Wilkinson and Megan Quinn, who have both deservedly been promoted to Secretary roles since the committee last met. New Deputy Secretaries at Treasury are Sam Reinhart for Fiscal Group, Diane Brown for Revenue, Small Business and Housing Group, and Robert Jeremenko is currently the Acting Deputy Secretary for Markets Group. Treasury also has a couple of notable new functions, with Victoria Anderson as the Acting Deputy Secretary of the Employment Task Force and Hamish McDonald, the Head of the Reserve Bank of Australia Review Secretariat. In the Treasury portfolio, there have also been some changes, and I'd like to acknowledge the significant contribution of Wayne Byers, who recently retired as the Chair of APRA. The new APRA Chair is John Lonsdale, who was previously a Deputy Chair and before that a Deputy Secretary at Treasury, and we want to warmly congratulate John on his appointment. I've also included in the written version of this statement changes that Treasury announced in the budget regarding climate change modelling and wellbeing, but in the interest of time, I won't go into them now. Thank you, Chair. I know that took some time, but I welcome the opportunity to provide this opening statement on behalf of Dr Kennedy and look forward to questions. Thank you.
Thank you very much, Mr Yeaman, and we will now proceed to questions. And Senator Bragg is seeking the call.
Thanks very much, Chair. I think given Dr Kennedy's extensive time that he's given this committee over a long period of time and the way he's approached it, I think we'd all want to wish his family all the best at this time. And I think that's something that the committee would want to note for the record.
Thanks, Senator Bragg.
Can I just check as a process question to you, Minister, when were you made aware that Dr Kennedy wouldn't be appearing at estimates?
I think it was about 11 o'clock this morning, so quite late this morning.
Okay, and was that communicated to this committee?
I had a conversation, I don't know, sorry, I won't answer that, but I certainly spoke to the Chair around lunch, just after lunch, about 1:30, just to check that the Chair was aware.
So, Senator, if I could, we didn't have final confirmation that Dr Kennedy wouldn't be able to attend until quite late around that lunchtime period, and we endeavoured to immediately inform the Minister and the committee as early as we could.
Okay. And just so we are on the right track here, Mr Yeaman, so are you the Acting Secretary?
No, Senator, so I'm the Deputy Secretary of the Macroeconomic Group, so I don't intend to try and answer all of the questions that Dr Kennedy may have ranged across in this opening session, but relevant questions can be directed to the relevant sections today.
Okay, so how do you propose we approach that then?
So I'm very happy to act and answer as many questions as I
We'll assist
can.
the committee. It was unexpected.
I will certainly answer as many questions as I can here that can be directed, but if there are questions, for example, in relation to tax policy, I will do what I can to answer those questions as best as I can, but most likely will refer detailed elements of those to our revenue group colleagues or to our fiscal group colleagues.
Okay. All right, thanks for that.
Which isn't unusual. Like Dr. Kennedy has called on other officials to assist at this part of the program. But our apologies to the committee. It was unexpected and, you know, we're all here and ready to answer questions.
Thank you, Minister. Yes, it's the committee's understanding that these are exceptional circumstances, and as noted in the opening statement, we understand Dr. Kennedy's commitment to assisting the committee at all times, and unfortunately these are exceptional circumstances. I will allocate the call to Senator McDonald.
Thank you very much, Chair, and good afternoon. Budget paper number 1, statements 2, inflation section on page 56 to 57, mentions that the budget expects inflation to ease gradually to 2.5% by June 2024 as global supply side pressures moderate and tighter monetary policies weighs on demand. I note that the statement fails to mention fiscal policy. Are the impacts of government fiscal policy built into these assumptions?
Yes, Senator, they are.
If supply side pressures don't moderate or monetary policy doesn't move at a pace to impact behaviour, will these figures be worse?
It's certainly the case that there are a very wide range of variables that could affect that outlook on both sides, frankly. It could be higher or it could be lower. So we are already seeing some evidence globally that supply chains are starting to ease as the COVID pressures that we saw over the past few years have started to unwind. So we have, for example, seen that the price of shipping containers and other forms of transport have started to fall from their peaks. But certainly it is the case, Senator, that if there are further shocks in the global economy or if those pressures do not unwind in the way we foresee, then yes, the inflation outlook could be different.
Since the budget was released, we've seen higher than expected inflation for the year to September. A range of banks have raised their end-of-year forecasts above the peak in the budget papers. Is Treasury confident that these forecasts will hold?
The outcome that we saw after the budget in relation to the CPI did not surprise us significantly. It was a little higher than we'd expected, but when we looked at the detail of that information, there was particularly some issues around the timing of state electricity subsidies that meant that the underlying pressures that we were seeing in the economy were not significantly different to what we had foreseen in the budget. And we still think that that peak in inflation of around 7.75% is our best estimate. But we were very clear in the budget, and I think the Treasurer has been clear too, that there's no doubt there are significant pressures throughout the economy that could see that number go higher. But as I said, there's also pressures that could see it go lower. But at this stage, we haven't revised our view of inflation since the budget.
With electricity and gas prices accounting for 1% of inflation in the next financial year, is it fair to say that if the government fails to contain energy prices, there's a risk that inflation will be worse?
Senator, our forecasts take account, which have that declining profile for inflation, do take account of the forecasts that we have for electricity prices next year, which have been well publicised. As I said before, clearly there are a range of factors. Power prices are one of them. If prices are higher than we have forecast, then that will flow through to inflation. Yes.
Can you confirm that the electricity price assumptions in this section factor in the modelled impacts of the government's Powering Australia initiatives and budget?
So we take account of all information in preparing our inflation forecasts, including government policy, Senator, but I would like to note, as I have before to this committee, we don't forecast inflation by building up from the bottom up every government policy and every aspect of the economy. We look at the broad macro indications around inflation and then take account of a policy as best we can, but we don't seek to model the direct impacts of every policy across the government. But yes, our forecasts for inflation next year do take account of government policy as it's stated.
So specifically the Powering Australia initiatives?
Along with all other government policy, yes.
Thank you. On Friday the 28th of October, the Secretary of the Department of Climate Change, Energy, the Environment and Water told the Environment and Communications Committee that from the government's perspective and this department's perspective, the outcome that you see projected by Treasury in the budget, 20% and 30%, is informed by budget policies, including, obviously, as one aspect of the government's policies, powering the nation. Is this variation from the Reputex modelling that until last week was included in the Department of Energy's website?
So our forecasts are our own forecasts, Senator, and we have based them on consultation with the Department of Climate Change and Energy, with the industry department, with the Australian energy regulators, and also market participants. We haven't ourselves assessed the Reputex modelling in detail, so that is their estimate, and it was done at a point in time. But for us, we have made our own best estimate of what electricity prices will do based on a whole range of information, including market information.
Right. So did Treasury independently analyse that modelling?
No, we're aware of it, and we've read the report, but we don't have information. We don't have access to all of the underlying assumptions behind that, and we haven't sought to independently verify it.
Right. Is it fair to say, given that modelling predicted power prices would fall by $275 by 2025, and the budget says that they'll rise until at least 2024, that the independent view of Treasury is that the modelling was not accurate?
As I said, Senator, we haven't sought to assess that modelling in detail. We don't have access to all of the underlying assumptions around it, so I don't want to speak to that. As I said, we've put our best estimate of what we think prices will do over the next 2 years in a detailed forecast period into the budget, and that's what we stand behind.
It seems significant that that's the Energy Department's modelling, but you haven't had any discussions to...
So I think, Senator, that Reputex modelling was not the Department of Climate Change and Energy, Environment and Water's modelling. It was private modelling done by that company. We haven't had an opportunity to assess it in detail, no.
Okay. It was included on the Department of Energy's website.
Not aware of that, Senator.
Okay. When were the inflation assumptions finalised?
So, as always, in the normal way, we go through a forecasting process in the lead up to all budgets. It normally starts around 6 to 8 weeks before the budget's released and concludes closer to the budget in the weeks before the budget. And this was a standard process, Senator. So the forecasts for energy were being updated and looked at closely in the lead up to the budget. And so it would have been in the last few weeks before the budget was finalised that those forecasts were provided to the government.
When were the power price components of the inflation assumption finalised?
Same answer, Senator, in the few weeks before the budget was finalised.
Statement 2 in budget paper number 1 only talks about wholesale power prices in general terms. Are there specific wholesale power price assumptions that have informed this section of the budget?
It's a combination of factors, Senator, that are leading to that forecast. And so for the current financial year, the way we approached this was there was a default market offer judgment made by the Australian Energy Regulator for this year. And so we looked at that DMO increase and then made assumptions about how other people in the market who were not yet on the DMO would move. And so essentially we assumed that people who were on the default market offer would move with that decision, and that those who were below the default market offer would essentially catch up and move to that same level. That's how we got to the 20% increase for this year. And then for next year, we don't have an explicit wholesale price assumption. What we have done is looked closely at the futures market curves for electricity prices, and we've consulted closely with the Department of Climate Change, Energy, Environment and Water and the AER and tested our judgments on that. So we don't have a specific wholesale price assumption underneath it, but it is based on an assessment of the market curves and best advice from industry and regulators.
Can you table those assumptions, please?
I can look certainly at what we have, Senator.
Terrific.
As I said, it's based on a series of judgments combining different pieces of information. Happy to look at that.
Thank you. What were the power price components in the inflation forecast presented by the Treasurer in his July ministerial statement?
I'll have to go back and confirm. Our typical approach has been, so we would have had some information on the default market offer for this financial year, which I think was included. So I think we had an increase in power prices for this financial year in the July statement. But for the next year, we hadn't yet gone through the process of looking at those wholesale curves. So our traditional approach in this area has been not to forecast electricity prices separately from the broader inflation dynamics, because it hasn't been moving sufficiently. But so I will come back and confirm to you, Senator, but my understanding is that we had in the first year we had an increase in electricity prices, and then in the second year it would have probably been growing at the standard rate of inflation, and we updated that in this budget.
Thank you. If you could come back to me on that. Thank you. Statement 2 in budget paper number 1 says that the Commonwealth and state governments' actions to accelerate the uptake of renewables and modernise the grid are expected to put downward pressure on wholesale electricity prices over time. What time frame is over time?
Senator, that depends on a very wide range of factors, and I won't seek to speak ahead of my colleagues at the Environment and Energy Department on this, and they're more expert in these matters. It was a broad statement to say that over time, if we have policy certainty and we're able to increase capacity across the network, including in renewable energy, that will bring downward pressure on prices. But beyond that, I don't have specifics that I can refer to.
And I don't think, I mean, that's not a surprising statement. I think it's a universal view of those in the energy market that if we have policy certainty, investments in transmission and an increased uptake in renewable energy, that those three things will put downward pressure on energy prices.
Oh, sorry.
Just follow up, Mr. Given, given your statements about energy prices.
Sorry, Senator
Sorry,
Canavan.
could I go to the chair?
Are you-
Well, Senator McDonald said it was okay. Sorry,
Oh,
Chair.
okay.
I should have
Yeah.
asked you
Senator
too.
Canavan.
Sorry,
Senator
Chair, I should have
Canavan.
asked you as well. Just given the comments you've made about global energy markets and the statement you just made then, is there a country in the world that has invested in solar and wind energy and reduced its electricity prices?
Senator, I would defer to my colleagues at the Climate Change and Energy Department on that.
So we
we're
don't,
doing
I mean,
macro forecasts.
you've made a lot of comments in the opening statement about global energy markets. I presume you've looked at them a little bit and you've made a pretty strong statement about increased renewable energy, lowering prices. But you're not
certainly
aware
for
of a
us-
single country in the world that has increased its share of solar and wind energy and reduced power prices.
So I can
as
have a
a
look at
result.
that. I can have a look at that, Senator, and come back to you. I think the fundamental view, when I talked in the opening statement about those power price increases across the world, I think that demonstrates that the baseline that we are using for our power prices now takes account of very, very significant disruptions in global energy markets as a result of the war in Ukraine. It's particularly having an impact in Europe, and so prices across the world, as I indicated, are up by more than they are, in fact, in Australia, currently up by around between 20, 30 and up to 60, 70% in many of these countries. And I think it's our view and the view broadly is that is primarily a result of the current issues we are seeing in Ukraine and the flow-on effects to global markets.
Just if I could have one quick one. The energy prices in Europe, though, did start increasing before the war. Is that correct? Significantly increasing late last year?
I believe that's right, Senator, but I would go back and check that for you.
All right, thank you.
Can I just clarify who's seeking the call? Senator McDonald?
Yes,
Yeah.
name with me. Thank you.
Yeah.
So you haven't modelled over time, but have you a view on what's the reduction in each financial year over the medium term?
So as I said, Senator, we haven't modelled the sort of broad economic longer-term impacts of this transition as Treasury, and so we're making a broad policy point there in that line, but we haven't got ourselves detailed modelling on that or a year-by-year profile.
Noting that the page just before says current pressures are yet to fully flow through to higher consumer prices because electricity retailers typically contract wholesale electricity several years ahead, this rise in wholesale electricity and gas prices can be expected to flow through to higher consumer prices as wholesale contracts are renewed. When do these savings flow to retail prices? Is it fair to say it will be several years after the wholesale prices have come down?
So I think Senator, I may have misheard the question or misinterpreted the question, but the point we're trying to make there is that we've seen very significant increases in wholesale prices across coal and gas. Across gas and electricity, and because of the fact that many large users of gas, but also electricity retailers have hedged positions, it's quite a complex market where many companies have, as you know, where many companies have long-term hedged positions to protect them from higher prices. Some of the impacts of those higher wholesale prices are not flowing through yet to consumers and to retailers. We've made assumptions about how they will flow through into next year. So in a way that is actually shielding those fixed contracts, and hedging strategies are shielding consumers currently from some of the higher prices that are occurring in the global market, and they will gradually flow through over time. But we have factored that into our budget forecast.
You've preempted my next question, which is, have you analysed the impact of higher wholesale electricity prices on the manufacturing sector?
So we certainly, in the prices that we have forecast, the assumptions we have put in the budget around electricity and gas prices for next year, we have attempted, as best we can, to take account of those market dynamics that I described. In terms of the direct impact on the manufacturing sector, we've looked at the impact of higher power prices as well as higher inflation more generally on the economy as a whole, but we haven't looked at it specifically on individual sectors or companies.
So, noting the government's election commitment attributed 306,000 new jobs to lower electricity prices, is it fair to say that impact will not be realised if the electricity price outcome is not achieved?
So I think that's referring back to the Reputex modelling that we discussed earlier, and as I said, we haven't sought to independently verify that modelling. As I said, our forecasts are contained in the budget.
So you're not expecting that outcome to be achieved in the forecasts?
In terms of the jobs going forward, and you'll see that the budget the measures in the budget do outline a significant investment to get started with Powering Australia plan, and the work that was done to underpin that in opposition, to underpin that policy, clearly articulate that there are jobs and opportunities in implementing the Powering Australia plan, and the government stands by that. We want to seize the opportunities that come with jobs in the renewable energy sector. We've got some of those first steps in implementing Powering Australia plan outlined in the budget, and that has been informed by the policy we took to the election.
So, Minister, the election commitment of 306,000 new jobs attributed to lower electricity prices, do you still stand by that, or will that not be realised?
I stand by the fact that the biggest opportunity or a huge opportunity in growing jobs and opportunities in this country is linked to the transformation of the energy system in this country. Like, we would be crazy not to be there trying to seize the opportunities that come, including for jobs and jobs in the region, with the work that needs to be done. We are coming late to this because of the inaction and the delay and dysfunction of the previous administration that have left, since the first day of the Albanese government, ministers dealing with the mess in the energy markets that existed under the former government's watch. Literally the first day, Minister Bowen left the swearing-in ceremony to deal with the fact that the lights were about to go out. He dealt with that. We then dealt with the supply shortages. Minister King's dealt with that. We're implementing Powering Australia, and now we're dealing with some of the responses to the increase in electricity prices that were outlined in the budget, clearly outlined so that we could be upfront with people, as opposed to the former government, which hid this before the election, and that first year is actually attributable to the former government.
Thank you for that. You have not answered my question, though, which is that your modelling was around transmission line constructions, res constructions.
Yep.
The economic development induced via low power prices, you've got 306,000 new jobs. Do you stand by that?
I stand by the work that was done to inform the Powering Australia plan and the decisions we've taken in this budget to get moving with implementing it. That includes the jobs and the very necessary work that needs to be done on our transmission infrastructure, which you have seen decisions taken already about getting started with that, including with the job opportunities that come, for example, with Marinus Link in Tasmania and Victoria.
So you do stand by your election commitment for the 306,000 new jobs by 2030?
We're implementing the election commitment, of course.
Senator McDonald, we're at the end of this 15-minute block. Do you have a couple of more questions, or shall I go
If
elsewhere
you
for?
could return to me later.
Yeah.
Can I just,
I'll
Can I
go to
Chair, sorry. Can I just ask that we call the fiscal group, given that the secretary isn't here? Can we ask them to come earlier? in case we have general questions for them? Is that all right?
We just want them to sit in the room, don't we?
Yeah, we just want them to be available. Is that all right?
Yeah, we're not dismissing anybody. Don't we?
Yeah, no one's going. We're not finished
Yeah,
yet.
people want fiscal group.
I-
They're here. People
They're around.
make
Not too far.
themselves available for the afternoon.
Okay, so if,
I do have to leave at 6:30 though, because I'm repping in another committee at 7. Well,
I-
I can go at 7 as well, or 2 minutes to 7 if the committee wishes.
We should have had
okay,
longer
we note
estimates.
the marker of, we note the marker of
Everybody attached to it,
6:30. We invite the fiscal group to join us in the room. I'll return the call in a moment after the next block, and we're going to Senator McKim.
Sorry, if I may just, sorry, Senator, before, if I may note that Sam Reinhardt, who is the Deputy Secretary of Fiscal Group, is in the room and can step forward as needed to answer
Okay.
questions here.
Thanks,
Colleagues
Mr.
will join
Young.
in time. Sorry.
No problem. Thanks, Chair, and good afternoon, Minister, and to the officials from Treasury. Minister, I just wanted to start with you, and it's on the topic that was the first topic in the statement that Mr Yeaman read out on behalf of Dr Kennedy, which is the causes of inflation. And I wanted to ask you firstly whether you accept that across the economy in Australia, wages are not a driver of the current high levels of inflation.
I'm sure there's more qualified people to speak about this, but the advice to me, and from how I understand it, is that wages are not a driver of inflation
Thank you.
in the numbers that are reflected in the budget. Just see if everyone's shaking their head at me. No, that's good. Okay.
I think you got a couple of nods there. Thanks.
Comforting.
It is indeed, Minister. In Friday's statement on monetary policy, the RBA stated that inflation was initially, and I'll quote from them, predominantly driven by supply shocks. And we've also had, in the opening statement, Treasury's view that the primary causes of inflation are the pandemic and the war. I presume you'd agree with both of those statements from the RBA and the Treasury?
To me?
Yes.
I don't have the statement in front of me, but yes, I haven't heard anything that I would disagree with there. I might see if someone can get me the statement if we're going to work through it.
I'm
Yeah.
not playing any games here,
No, no,
Minister.
no.
I mean, the statement
Yep.
says inflation in many countries is at its highest level. In the era of independent central banks, the primary causes of these ructions are twofold: pandemic and war.
Yep.
And I can assure you I've quoted the RBA accurately as well. Not playing any games here, as I said. The next question I wanted to ask you, therefore, given your agreement that wages are not a driver of inflation and your accordance with the statements on the supply side shocks that have been made by the RBA and by Treasury, do you accept that corporate profits are a driver of inflation in Australia?
Well, it's probably best, maybe if Mr Yeaman answers that, but, we've had this...
I've asked you this a
we
few
have
times
had
in the
this
Senate,
interaction
and frankly,
in the
you've
Senate.
evaded the question, Minister, so I'm giving you another
I don't think I've
chance.
ever evaded a question, but that's not my understanding.
It's
that
not your
that's driving
understanding?
inflation, but again, Mr Yeaman may perhaps, as an expert,
Mr Young.
could add to that.
Sure.
Thank you, Minister. And Senator, just to touch on a couple of those points, I think certainly it's our view at this stage that the largest factor driving inflation in Australia is these external supply shocks that you've mentioned. There is still a very strong level of demand in the Australian economy, as the Reserve Bank and Treasury have noted.
Not driven by wages, though, Mr Young.
But as I was about to say, so there is a strong level of demand and a low unemployment rate. But at this stage, we haven't yet seen wages lift to levels that would be inconsistent with the Reserve Bank target.
Well, in fact, they're not
And we're not
forecast
seeing
to live
evidence,
for the
and we're not seeing.
outlook, are they?
We
They're
are
gonna-
seeing a pickup, but we're not suggesting seeing any evidence of an emerging wage price spiral here
No.
in Australia.
No.
But I think fundamentally, we've looked at obviously corporate profitability has been high recently, which is primarily driven from our perspective by the very large increases in commodity prices that we've seen recently. And I think fundamentally the things that are driving inflation are, as I said, those cost pressures coming through out of the pandemic and those external supply shocks from our side, not corporate profits per se.
So dividends are as close as you could ever want to record levels as we sit here today. profits share of national income in the national accounts is at record levels as we sit here today. You've got well-credentialed economists here in Australia and around the world, including, for example, Robert Reich, the former Labor Secretary in the US, all saying that corporate profiteering is a driver of inflation. They're all wrong, are they?
To me. So there is, well, I haven't seen all of those individual comments and statements, Senator, and I take them at face value. I think from our perspective, it's true that the Labor share of income has declined in recent times. Primarily, we see that as a factor being driven by these, as I say, exceptionally high commodity prices, which are flowing through to mining profits and then flowing through the economy in the form of dividends and other means. In our forecasts, we do see, if you look through those that mining profit share, the labour share and profit share in the economy more broadly has remained fairly steady over time. And we would expect to see that as the commodity prices come off in line with our assumptions, which obviously are assumptions, but in line with our assumptions as they come off, we'd expect to see the labour share of income rebalance somewhat compared to the profit share of income. That doesn't mean, of course, that there aren't particular cases or sectors where different behaviour is occurring, and we've talked about the energy market already today. But that's our view of what's fundamentally driving these trends.
Minister, you said last week that tackling inflation was your absolute priority. That was in an interview you gave on Radio National. You've got a good handle on the role that wages aren't playing in inflation. You've got a handle on the role that supply shocks are playing in inflation. Don't you want to have a handle on whether, and if so, to what degree corporate profiteering is driving inflation?
Well, in terms of the inflation challenge, that is the government's view, and that's why this budget and the decisions taken in this budget were informed by how the government could meaningfully respond to the inflation challenge across the economy. We will continue to take advice on this, as you would expect any government to, about the best ways that government decision making can work alongside the work that the Reserve Bank is doing to put downward pressure on inflation. I mean, that's the reality. We will continue to work on this. The budget was, the first step, and to tell you the truth, between when we started the budget and where we got to in October, things have been changing. The environment, the economic environment was challenging to sort of piece this budget together and finalise it. We've done that. There's more to be done, clearly, and the government continues to work with and take the advice of Treasury on how best to do that.
Well, don't get me started on the RBA. We'll come to them later.
You've got 2 hours tomorrow.
Yeah.
Yeah.
But perhaps to Mr. Yeoman, I mean, what work has Treasury done to understand whether, and if so, to what degree corporate profiteering is a driver of inflation? Like, wouldn't you want to know if it was happening? If it was a driver of inflation, wouldn't you want to know?
Certainly,
Yeah.
Senator.
So what work have you done to understand whether, and if so, to what degree it's happening?
So I may ask my colleague, Mr. Cully, to come in here and speak to a few issues. So we have been looking closely in the context of productivity as well. We've been looking at a range of issues around competition inside the economy and margins within the economy has been a part of that conversation. As I say, we look very closely at these trends in the labour share and the profit share of income. But as I said, our assessment is that at the aggregate level, at the macro level, that the main driver of larger corporate profits and a larger profit share is the extraordinary commodity prices that we've seen to date, and that is by far the biggest factor that's flowed through. We have done, as I said, some separate work which we have published in various forms, which does suggest that there has been, in some sectors of the economy, a falling back in competition to some extent, and that has led to, in some cases, some higher margins and lower productivity outcomes. So that information is on the record. But from a macro perspective, that's the point we have.
I mean, just to be clear, what I'm saying and what numerous other people are saying is that corporations are using the cover of the supply side shocks to jack up their prices and to rampantly profiteer, which is having a disproportionate impact on people who are doing it the toughest, who are already getting smashed, I might add, by the Reserve Bank's habit of taking a sledgehammer
I will ask,
to crack a walnut.
Senator, just to add, and your comments prompted this, so sorry I didn't mention it at the start, but clearly our colleagues at the ACCC, there are a number of sectors of the economy, so certainly in the case of fuel, when we were looking at the sharp increases in fuel prices, the government was very forward-leaning in making sure that the ACCC was looking at that issue closely to avoid profiteering in that sector, and I know the ACCC is taking a very active view to that. There has no doubt been something of a psychology shift inside the Australian economy from a long period of relatively low inflation and low wages growth. There is certainly more willingness amongst business groups and corporations to increase profits to at least cover their costs. Now, whether it goes beyond that, that's a question the ACCC is looking at closely, and my colleagues in Markets Group may be able to add some further.
Thanks. Perhaps if you could take on notice what work the department is doing to understand whether, and if so, to what degree corporate profiteering is driving our current high levels of inflation. Thank you.
Happy to, sir.
There was an FOI release on your website, FOI 3179, which is a note from an Assistant Secretary in the Treasury Department on the role of profits as a driver of inflation. I've got copies here, and I think an electronic copy's been provided to the Secretariat. I might just see if someone could put this in front of you, Mr Yeaman, but most of the note unfortunately has been redacted, including, I suspect, a key conjunctive word. But the note says the topic is inflation, and what I assume is a prediction from an Assistant Secretary in the department says persistent higher price level, potentially from margins rebuild.
Mm-hmm.
What's margins rebuild mean?
So, as I said...
Profiteering?
Well, it can be a range of things, Senator. So there's no doubt that what we observed, and I don't mean to go into a long-winded answer, but one of the things we observed in the early stages of the rise in inflation was a great reluctance from business broadly to increase prices and increase wages, because there had been such a long period of time in Australia over the past decade where prices had been running at relatively low levels, and consumers and others, the feedback we had from our business liaison program and other sources was that in the initial stages, as prices started to rise and as input costs started to rise, including during the pandemic, there was a reluctance from business to increase prices to match their costs for fear of losing market share or customers. And so I'm roughly aware of the FOI you're referring to, but so it could have referred to that to some extent. And it also could have referred to, as you say, companies looking to build a larger profit margin over and above their standard operating procedure.
Is a persist...
Sorry, just to interrupt you for a second. Yeah. I just need to note for the Hansard that we're tabling this document, FOI 3179.
Thank you,
and you have the call.
Thanks, I appreciate that. Persistent higher price level, is that code for inflation? Or might it mean inflation?
A persistent higher price level for us, thank you very much. So for us, one of the things we've been trying to work through inside Treasury, inside the macroeconomic group, is we're seeing some extraordinary increases in input costs and prices as a result of these supply chain pressures, and the question is how much of that will be persistent and how much of that will not. Will we see a fallback in prices in some of these areas or not? And that's going to be a range of factors, global factors as well.
But persistent high price level means prices are going to go up and they're going to...
Well, inflation, Senator, is an ongoing increase in the price level.
Right.
So for us, persistently higher prices does not imply ongoing inflation. It implies ongoing elevated price levels relative to some benchmark. And that's been a question for us, is in some of these areas, and I'm talking about global trends as much as anything, in some of these areas where prices have lifted to a higher level, they may not fall back to their previous levels, and that would mean we had a persistently higher price level.
Okay. And what about margins rebuild? What are the margins are profits, right? Are margins profits?
They can be.
What
yes.
else could they be?
Yes.
What else could they be?
Well, in this context, as I said, margin rebuild may be actually referring to returning to their traditional profit levels, if that makes sense. So it could be that
So
margins are
margins are
squeezed.
profits.
Yeah,
Margins are profits, right?
Yeah, but margins can be squeezed and then rebuilt, or they can be
Sure, but margins
expanded.
are profits, right?
Correct.
Yeah, okay. And what are they being rebuilt from? Because the pandemic actually didn't dent profits at all in Australia. So what could margins be being rebuilt from?
Well, as I said, Senator,
What's the base level?
as I said earlier, we did see and observe that in the early stages of the run-up in prices and input costs that we saw during the pandemic, there were some industries, and if you look at the building industry, for example, and others who had fixed contracts, they saw their input costs rise substantially. They saw their margins fall. Some businesses obviously then found themselves in financial difficulty. And so over time, as some of those input costs come back down, we think there is an opportunity for businesses to potentially rebuild their margins back to traditional levels. I think that's probably reading this, and I've got my colleague next to me who's from the relevant division. So I think that's how I would interpret it, Senator.
All right,
Senator
thanks.
McKim, I'll note that you're about at the end of your
Yep, one
block,
more,
but
and then maybe you can come back to me
you have the call.
afterwards. Yep, thanks, Chair. So look, I just want to be clear that I'm understanding, and Minister, I'm happy if you want to answer this. You've got dividends as close as you want to record high levels. Profit share of the national income is actually at record high levels. We all agree that wages are not driving inflation in Australia. And yet nobody seems to be prepared to accept even the possibility that corporate profits are a driver of inflation. Is that fair? Is that a fair assessment of where you're at, Minister?
Well,
Because I find that extraordinary, to be honest with you.
Well, I think the budget papers go through, the inflation, the drivers of inflation. That reflects the advice of the government and also reflects in the decisions the government's taken in the budget.
Thank you, Senator McKim. Senator Hume.
you want to do a quick
Senator Canavan.
Okay, thank you. Did Treasury get it wrong about inflation?
So, Senator, clearly our forecasts from earlier budgets haven't eventuated. Certainly happy to say that and happy to accept that. I think that some of those things were very difficult to foresee. So in the case of the war in Ukraine and its length and duration and severity, that is something that we are not able to forecast with accuracy, and it has substantially changed the benchmark. I think when we've benchmarked ourselves against other central banks, other forecasters around the world, I don't think we have been outside of the range of those other estimates, but there is no doubt that inflation has been higher and more persistent than we had previously expected.
I mean, 18 months ago in this committee, I asked you about it and asked you about increasing concerns. Dr. Kennedy, was mainly responding to me, but I think you were there, Mr. Yeaman.
Yes.
And I asked about increasing concerns about inflation, and Dr. Kennedy said, I still think the consensus would be that we've got a long way to go to get back to generating wage pressures and inflation. That was on the 24th of March last year. A week later, the June quarter started and inflation hit 3.8% in that quarter. You didn't see this coming then by that evidence, Mr. Yeaman?
So we certainly had expected. I could be a little wrong on just the exact timing of that conversation, Senator.
I've got it here,
what
24th
came where.
of March.
I accept the timing of the conversation, but in terms of what was occurring at the time, so there is no doubt we expected to see a pickup in inflation given some of the global factors that were happening at the time. The strength of that pickup in inflation has been more than we had previously expected, and it is now being more persistent. I think, as always, some of that depends on assumptions that we are forced to make as forecasters around what global trends are going to do, and so oil prices are a great example. We have actually seen the oil price start to come off a little more quickly than perhaps we'd expected initially in our July statement. So there are swings and roundabouts in this space, but there's no doubt inflation has been higher and more persistent than we had predicted at an earlier stage, but I think that's been a common feature across most forecasters here and globally.
In your statement, or in Dr. Kennedy's opening statement, he mentions two factors, pandemic and war, driving inflation. We've spent a lot of time talking about the war, and I just wonder, though, whether you're relying on that a little bit is sort of self-interested here to remove any culpability, because the pandemic, the other driving factor of pandemic could could cover a lot of ills. As I said from that evidence before, inflation here in Australia was going above the target band well before the war in Ukraine. So we just drill down about the factors that led to that. I mean, you mentioned pandemic, but what do you mean by that?
So look, it's a fair point, Senator, and I want to be very clear that we take our role very seriously. We understand the risks in forecasting, and so we're not by any means, I mean, sometimes we are judged by others outside to have a false sense of precision on our forecasts. We understand the risks, and we always attempt in the budget to highlight those risks to our forecast. So I want to say that for the record. But from our perspective, the initial surge in inflation that we saw coming out of, when we say the pandemic, in particular, the increase in shipping costs and transport costs that flowed from the pandemic, as there was a shift away from services. So there was a very significant shift, and you'd be well aware of this, Senator, but there was a very significant shift away from services across many countries as people were locked down and couldn't undertake the normal things that they would undertake, whether it's health services or tourism or other outdoor activities. And so they shifted consumption very much to goods. That led to a very sharp increase in the amount of goods demand across the economy, which put a lot of strain on supply chains, in fact, well above historical levels of throughput at international ports and through shipping containers, etc. That led to a surge in prices. And at the same time, many of the distribution centres that were, particularly in China, but elsewhere in the world, across Asia and elsewhere, that generate most of those goods were suffering lockdowns as we were in Australia and elsewhere, which meant that their own input costs were rising and there was constrained supply. So those factors together led to very sharp increases in prices across a range of goods. And as I said, timbers in the construction sector is a very good example. One of the biggest increases in inflation, one of the biggest factors driving inflation increases in Australia has been construction costs. And so that we think, partly that's domestic demand, but partly that is there's also these international supply chain pressures that are coming. So that's the early aspects that sort of hit us. Then the war in Ukraine.
I'll leave it there. But yep, I hope some lessons are learnt, because there seemed to be an over-reliance on the Nauru and sort of modelling 18 months ago, which I'm always very sceptical about. I just wanted to turn to the statements you make here about government intervention, or Dr. Kennedy's made, in energy markets. You say here, and I'm using some pronouns here, sorry, but you'd understand the context, that this would suggest to us that interventions that directly address the higher domestic thermal coal and gas prices are more likely to be optimal. It's a little bit of bureaucratese. Are you suggesting price caps there?
I think, and my colleague Ms Reinhardt may wish to add to this, Senator, because she's involved in this discussion as well. I think there's a couple of points here that we were trying to draw out through the Secretary's opening statement. First is that there is a very significant relative price shift occurring in the economy that is affecting different groups differently. So we do not think, as per the statement, that these profits that are being made and the price increases in commodity markets are a sort of natural feature of the market. They are coming about because of a war in Ukraine, which is driving very significant increases across these markets, and that is being disproportionately felt that's basically transferring income from low-income households towards the companies and producers of these goods. That's not, to our mind, a normal market adjustment being driven by long-term fundamental shifts in the economy. That's a one-off geopolitical event that's driving these factors, which we hope will be temporary.
I think we're being a little bit repetitive, sorry, Chair, but just the time. I mean, we've heard that, but just, are you suggesting price caps? Is that one of the options being considered or proposed?
I'll pass to my colleague.
So it's certainly the case that the Treasurer has said that this is something that's really important to this government.
Ms Reinhardt, would you state your name?
Sam Reinhardt, Deputy Secretary, Fiscal Group. The Treasurer and Minister Bowen have both indicated that they would like to have the departments do work on the options in this area because it's a significant issue for government. So as you would understand, Senator, there are options along the whole supply chain to electricity generation, so we will look at all the options that are available.
What about increasing supply? Is that an option being considered? So increasing our production of gas and coal, is that something that's being proposed?
So we would all understand that in response to price changes, there will be changes in supply in the market.
I suppose where I'm getting at here is one of the issues seemingly affecting the globe, and especially Western countries, when we haven't, in China and India, they're not necessarily seeing the increased energy prices because they're still buying Russian oil, Russian energy. What's happening here is that's being taken out of markets in the Western world due to sanctions and the war, but there's not able to be a supply response because significant red tape or sometimes effectively outlawing of new gas and oil and coal projects. So are you at all looking at freeing up the restraints that are currently exist to the production of coal, oil and gas, given these high prices and the need for relief to Australian families?
Well, Minister King's done some work on securing additional supply based on the fact that the advice from the ACCC was there was going to be a significant shortfall. So that work has been done. And in fact, I think from memory, she's secured through a heads of agreement about 3 times the supply shortfall that we expected. But I think the focus on of the work that the Treasurer is doing along with ministerial colleagues in providing advice about what options there are to deal with these significant price increases is about very much what can we do now in the short term.
I wasn't,
that's what we're focused on.
perhaps wasn't as specific as I could have been. I meant increasing the production in Australia of these commodities. The heads of agreement does not do that. It simply potentially reallocates energy from our overseas customers to domestic ones. And I'm not against that. I'm not against that, but I'm just saying in terms of the issue globally and the recessionary conditions that you outlined, you're seeing in other countries, given we're the world's largest, one of the world's largest coal exporters, depending on the day, and LNG as well, we're not even looking at increasing the supply of coal and gas to the world to help assist.
So I think it's certainly the case that increases in supply that feed into electricity markets will reduce prices. There's a really substantial number of reforms that sit in the budget around renewables and rewiring the nation, which will add to the grid capacity. So I would say that the bundle of reforms that sit in the budget will have a longer term impact on prices. But as we've talked about earlier, many of those reforms take years to flow through, as would changes in supply.
Ms Reinhardt, with all respect, that doesn't actually deal with my question. I didn't ask about domestic electricity markets in Australia. We're not exporting renewable energy at this stage, of course. I'm asking specifically about dealing with the clearly dysfunctional, I think you've effectively admitted that, dysfunctional international markets in coal and gas in particular. We're not looking at all in what role we can play to increase the supply in global markets of these commodities to assist countries that are our allies that are facing massive energy shortages because of the outcomes of the war.
So I think, Senator, as you said, the point that we were trying to make in the opening statement on behalf of the Secretary is that given the markets currently are being hit by this, as you say, these disruptions, things that act quickly and directly on the price are going to be most effective, is our view, and this is a matter for government ultimately, but in our view are going to be more effective in helping people to deal with the current energy price shock and affect this redistribution of income. Of course, there is a process underway to look at how we can respond to prices, and we'll advise government, but that's a matter for government on what options are in, but the Treasurer's been clear they're looking at a range of options.
Yeah, and it's very much about the short term. The work that's currently being done now that the Treasurer's been talking about is what can we do in the immediate term to deal with these significant price increases that have been foreshadowed in the budget. Aside from that, we've got our Powering Australia plan going forward. I mean, obviously, if there's particular projects that, in the energy sector that, want to get up and going, well, there's a process around that. Like they stack up and proponents want to put them forward, then by all means. But the focus of the government's work at the moment is dealing in the short term, looking at a range of options to manage that, and implementing the Powering Australia plan, which is about fixing the grid and getting additional investment and renewables into the grid, as outlined in our election commitments.
I just note, Senator Hume, that we're about at the end of that 15-minute block, so I'll go to Senator O'Neill and then come straight back to you for another block of time.
So we're going to be going for a long time.
So you're happy with that? Okay. Senator O'Neill.
Thank you very much. The pre-election economic fiscal outlook, PFO, is pretty important. underliner of what your predictions about the economy were at the time that people were going to the election. So my questions really sort of go to setting that sort of historical moment. What were Treasury's global impact growth forecasts at PFO?
Sorry, Senator, can you repeat the question?
What were Treasury's global economic growth forecasts at PFO?
Okay. You might just have to give me a minute, Senator. I will be able to find those directly for you, but I can definitely say to you since PFO, we've downgraded the global outlook, both in a world sense and also for a number of economies, particularly the US, Europe, China, due to obviously the events that have happened since then. So I can tell you that...
I note your general comments in the opening statement. I'm just seeking some further information.
I can give you some of those numbers now.
The growth
Senator.
forecasts at PFO. Thank you.
So for 2022, at PFO we had world growth for 3 3/3. For 2023, again, we had world growth at 3 3/4. And as I said, both of those have been downgraded in the October budget. Would you like those numbers?
Yes.
Chair, just a clarification, are they the same global growth forecasts as were in the March budget?
I think they were, Senator. I have to double check, but I'm quite sure they were.
So to be clear, we've got the growth forecasts there for PFO for the 2 years, 22 and 23.
That's right. So I've just given you those numbers, yeah.
Great. Now, what were the expectations for global inflation in PFO?
We don't publish a global inflation number, Senator, as a composite. But again, clearly since PFO, there's been an upgrade in inflation, if you like, across all economies, largely due to energy prices. But so, as I said, we don't have a composite world inflation that we publish.
Okay. Clearly, you've indicated some things have changed. Is there anything you want to further add to the record? Like, what's changed since PFO and where we're sitting right now?
Yeah, since PFO, Senator, what I would say is it's primarily on the prices side. So we've seen obviously very significant rises in energy prices. The other thing that we've seen probably most significantly since PFO is a rise in global cash rate expectations, so particularly in the US, and of course that goes with the higher prices that I've just talked about. And so over that period since PFO, both prices, cash rate expectations, particularly in the US, but also in Europe and here in Australia, have risen across advanced economies. And generally there's been a downgrade in the growth outlook and an upgrade in unemployment outlook in those economies where those pressures are being felt.
So what were Treasury's global economic growth forecasts at budget?
So the budget, Senator, I can give you those numbers that match the ones that I've just given you for PFO. So for 2022, the global growth outlook is for 3% in budget. For 2023, it's for 2 3/4 in budget.
Okay. And how have those changed since PFO?
Well, so the numbers, as I said a bit earlier, were 3 3/4 at PFO for 2022 and have been downgraded 3/4 percentage point in the October budget to 3 for 2022. And for 2023, the PFO number was 3 3/4 and the October budget's 2 3/4. There's been a downgrade of a percentage point.
Okay. And in terms of these changes, what's your prediction about the impact on the Australian economy?
So similarly to what I described globally, Senator, the outlook for the Australian economy is adjusted partly because of higher inflation since PFO. PFO inflation in Australia was expected to peak in the 4s. We're now looking at a 7 3/4 peak in inflation at the end of this year. Partly also because of the expected rise in the cash rate. Unemployment is also now forecast to rise over the forecast period. It gets to 4.5, so just above what we would consider to be full employment. Now, as we sit here now, we're below full employment, and we expect consumption and other elements of the economy to slow, as we would expect as cash rates rise and that cycle occurs. And as I said earlier, that cycle is a similar cycle that is forecast for other advanced economies who are experiencing this synchronised tightening of monetary policy.
So there clearly is concern amongst Australians as they hear these figures that there is a sharp decline really in the economic conditions globally, and that's impacting on them.
Certainly, Senator. So there are a number of global factors that we've just been talking about, which are of course driving this. And again, the response from central banks has been pretty uniform across countries, raising interest rates. And so the outlook that I've just gone through, if you like, is quite similar across key advanced economies.
If I could go to some further questions about fiscal policy. Is this to you, Ms Reinhardt, do you believe? Fiscal policy I should direct to you? Thank you.
That's right.
Well, Mr Yeaman may direct it. Following up on some of the questions of previous senators, how would you describe, in a way that Australians might generally understand, not just economists, the stance of fiscal policy for this fiscal year?
I'd describe it as a reasonably cautious approach. It's a time when Australia faces, and Mr Yeaman's gone into this in great detail, faces great challenges going forward in the global outlook. Inflationary pressures are significant, and it's been quite important for fiscal policy to be cautious in that environment, and that's how I'd describe the position of the budget and fiscal policy.
So what does cautious mean, Ms Reinhardt?
So an example of cautious in practice is the decision by government to return over 90% of the increase in tax revenue to the budget bottom line rather than kind of spending that, which would have been an option available to government.
So for ordinary Australians trying to understand this, the cautionary response there from the government was not to just grab the money that was coming in and put it straight back out the door, but to actually take that and put it back into what and for what purpose?
So in that particular case, you can take it, a good way to see that would be if you spent that money and didn't bank it, then there'd be higher interest payments in the future. And there's plenty of places in the budget papers where we make it clear that had that money have been spent, it would have meant higher interest payments in the longer term. It would have been larger debt for future generations. So in a longer term sense, that's the cautionary nature or outcome of that approach. In a shorter term sense, it's taking the pressure off inflation, which also assists the Reserve Bank in its job.
Okay, so that's important. It does two things. It's responding to the pressures of the real moment that we've just been having described by Mr Yeaman and Mr Power, but also the longer term thing. You call it cautious approach. Many Australians might call it a responsible approach of banking what you can as you would save if you were looking to the future. Is that a fair comparison for Australians?
Yes, that's a fair comparison.
I'm just mindful that the economics affects everybody, and not everybody has the language that might be used in this room, and I want Australians to understand exactly what their government's doing for them through your approaches. Can I go to the forecast on real spending growth in the budget? What does that actually mean, just for starters? Real spending growth.
So the forecast in real spending growth takes into account the growth in payments and then adjusts that for an underlying deflator. So it gives you an indication of how much governments are injecting into the economy in this case in the forward estimates. I think the main chart that relates to that is on page 77. So it is another indicator of a cautionary approach to spending over the forward estimates period and beyond.
So this real spending growth is really about what the government's putting into the economy by their action, right?
Yep, that's a fair way of summarising it.
So, and you've said that this government has chosen to be responsible and cautious in its approach. How does this strategy that you've just described compare with historical averages?
I'd have to maybe call on a colleague to bring in the historical averages. My understanding is I think the figures for 2000 to 2010 are something like 3.3% spending growth, and for the next decade 1.9%. But I might get Brenton to clarify that.
So Brenton Goldsworthy, First Assistant Secretary, Budget Policy Division. So on page 76 of the budget papers, there's a comparison of real spending growth over the forward estimates to some of the historical averages you were asking for. So 0.3% over the forward estimates, as Ms Reinhardt would have mentioned. That compares to an average of 4% over the period prior to the global financial crisis, and 2.2% over the period leading up to the pandemic.
Okay, so
Can I just make a clarifying question on that one? During the period of 2007 to 2011, clearly real payments growth is much higher, and during the pandemic it's much higher. Is that correct? But during the period prior to 2007, it is lower. It's just that the average has been brought up by the global financial crisis. And it is much lower from 2000 and what looks like 12 or potentially 13 right through to the pandemic. Is that correct?
So the averages I'm referring to, just to be clear, it covers the period 2000, 2001 to 2007, 2008.
And so you've just not included an average at all for the period of 2007 to 2011. Does that look right?
For memory, what we did was excluded the periods of unusual extreme shocks in the economy.
Selective then.
So can I
I think
just...
it's taking out the volatility and the shocks.
Exactly.
So you get a better baseline.
For the pandemic.
Well, it's not
as
an
well as
average
the-
then, is it?
So, Senator...
It's average of a normal kind of spending environment, I guess.
You've just taken out the entire years you were in government.
Well, I don't think that's the correct characterisation.
Yeah?
I'll just,
Senator,
I don't think so. I'm not sure what questions are being asked and who's asking them at the moment, but I'm happy for you to have a final clarification question there if you want, Senator Hugh. No, Senator O'Neill.
Thank you. So, to be clear, you've just provided careful figures to me of a real spending growth in this budget of 0.3% over the forward estimates. That's correct?
Yes, that's correct.
Which doesn't seem like very much by comparison to previous figures, which you said were prior to the GFC, so trying to indicate a normal moderating period in our economy, you said was at 4%.
That's right.
That's right. And then the 2.2% covers what period, Mr Goldsworthy?
2011-12 to 2018-19.
Which is up to the COVID impact on
That's
our
right.
economy.
So what we tried to do was, I guess, compare like for like to the extent you possibly can when doing historical averages.
Because it's important to have responsible figures, and we can throw around the terms averages, median, whatever, but the reality is you have evened out to get a clear picture for Australians to understand how much their government is spending.
That's right. And we also included a chart on the following page over the entire period, just to make it very clear as to the periods chosen for that historical comparison, and also what happened to real payments growth either side of that.
So those figures then do bear out numerically the commentary from Ms Reinhardt about a cautious approach and responsible government in terms of spending growth. Thank you. Of course, there are new policy decisions that have been made by the incoming government, and I'd like to ask, I'm not quite sure who to ask, Mr Yeaman, you might be able to direct me here. How would you describe the impact of new policy decisions on the economy across 2022 to 23 and 2023 to 24? Perhaps we might just do the first year, financial year. Ms Reinhardt, is that one for you? I'll just repeat it. Or Mr Goldsworthy?
Yeah, so certainly over the first 2 years, I don't have the precise figures in front of me, but in the first 2 years, it's largely neutral. So new spending decisions have been offset by savings, is the way you can think about it. Then in the final 2 years of the forward estimates, there's a positive figure for net policy contributions. For memory, it's 9.8 billion over the entire forward estimates.
Okay. So, again, for people to understand what this means, new policy decisions are managed by offsets.
That's right, and particularly in the first 2 years of the forward estimates when, as we've been talking about this afternoon, inflationary pressures are most acute, so a desire not to add additional spending into the economy from the government.
So if the government had responded to increasing calls for increasing spending, what would the effect be on ordinary households?
I can let my macro group colleagues go into further detail, but that would have added to aggregate demand pressure in the economy, and it would have risked putting upward pressure on inflation.
Essentially pretty bad outcomes. So it's important that the government exercised caution and a responsible approach in their implementation of policy by offsetting, which is minimising the impact of any new policy decisions. Is that correct?
That's correct, yes.
Mr Yeaman, did you want to say something?
I'd just add that it was certainly our view that it's important that fiscal policy and monetary policy are both working together to tackle the inflation challenges that we see. So therefore, as monetary policy moves back to a more neutral stance where it's not adding to inflationary pressures, fiscal policy should do similar, and especially in the next 2 years when the inflation challenge is most acute. And our view is that the fiscal position in the budget, as described by my colleagues, is broadly neutral. It's not adding to inflationary pressures, especially in those first 2 years. Obviously, if different decisions had been taken, that would have meant higher inflation and higher interest rates and more costs for households.
Right. So, yeah, responsible and cautious, it seems to be the right approach at this point of time. And I know from the questions already how significantly aware the committee is of the inflationary pressures and what that might do, not just for the country, but for people's own personal budgets.
Senator O'Neill, if that's a natural break in your question, I might come back to you. That was about a 15-minute block. Is that okay? And we'll go to Senator Hume.
Thank you, Chair. I've got some follow-on questions from Senator O'Neill, but I want to ask first about whether you can confirm that the economic forecasts that are contained in the budget take into account all government policy.
Yes, all government policy that we can take account of, yes.
So, for example, the budget economic forecasts contain the impact of the Stage 3 tax cuts.
Yes, Senator,
they do. Can you advise then on what basis Treasury might cost an already legislated government policy? Don't you only do it once?
Sorry, could you say that again? Sorry, I think I just missed
When would Treasury cost an already legislated government policy?
Well, so these might be questions for my revenue group colleagues, Senator, because they would handle revenue costings, so I'm happy to have those questions addressed to Ms Brown in the next session. Obviously, costings for set policies can change, given the underlying economic circumstances, take-up rates, circumstances
Is that
in the
something
economy.
that Treasury would initiate themselves, or does it have to come at a request?
It could be either, Senator. I don't know in this particular case.
So it would be an infrequent occurrence, I would imagine.
Look, I think it would be better, Senator.
It's already legislated.
No, I understand, Senator. I think I just would prefer not to freelance on this and ask my colleagues in Revenue Group to respond to this, because I think they handle these matters inside the Treasury.
Well, is there anybody at the table then that could confirm that there was a request put to Treasury to cost a removal of the Stage 3 tax cuts?
Not sure. I think my colleagues in Revenue Group are best placed to answer those questions, Senator.
I think it's on the record. I mean, the Treasurer has spoken about the updated costings for Stage 3. I think it's thoroughly unsurprising that a new government coming in would ask for a range of information from agencies about, parameters within the budget.
So was it a costing then considered by ERC, Minister?
I'm not going into what ERC...
Was it a costing considered in the finalisation of the budget?
Well, if I can answer your first question before you start another one. I'm not going into what ERC deliberated, discussed, decided. We had that discussion yesterday, but I would say that I would imagine, and certainly in my experience as a Treasurer in another jurisdiction when I was putting budgets together, requests for information about, programs, measures, whatever, in the budget, as a routine good budgeting process, you would ask for information about that.
So the Treasurer actively referred to $254 billion over the medium term. I would assume, and I think that it is safe to assume, that there is a costing that has been done to then remove the stage 3 tax cuts, because those tax cuts were already legislated and already embedded in those economic forecasts. So can I ask on notice, doesn't need to be from anybody here, I want this to go to the Treasury Secretary. What was the date of any such request? When was the costing to remove the stage 3 tax cuts commenced? And when was the costing to remove the stage 3 tax cuts completed? Can I also ask, because the Treasury Secretary...
because you're saying a costing to remove.
I'm asking to put it on notice. I don't want it from anybody here. I want it from the
Treasurer
Treasury
has
Secretary.
spoken about a costing that was done to update the costing of stage 3 tax cuts.
I want to understand the process by which that costing
I just want to be
was
clear on the
done.
language, because I can see where you're going, Senator Hume. And the cost that was advised is, as you say, $254 billion over the forward estimates in the medium term, and an associated interest bill of around $40 billion over the forward estimates in the medium term. That was the advice that was given in terms of information that was sought. But let's just be clear about that.
So perhaps the Revenue Group can come to the...
Sorry,
when we
Senator,
do Revenue Group, they can come and answer those
Senator,
questions.
Okay, I'll just
If I-
clarify, Senator Hume, that Revenue are coming tomorrow morning.
Yes, that's right. So they've got plenty of time.
Senator, if I could just add one point, which I'm trying to be as helpful as we can here, Senator, and it has been standard practice even with the Treasury Secretary in the first session that he has at times referred questions back to our Revenue Group colleagues for the next session. So, as the Minister said, I think it's on the public record that there was a costing done of the current policy and what it's currently costing the taxpayer, and we can provide details of that on notice. The separate question is, in the lead up to budget, not surprisingly, we looked at a range of different measures, both spending and revenue measures, and provided advice to government. I'm happy to take any questions on notice around that or pass to my
Why
colleagues.
would you do that on something that was already embedded in legislation? It's already in there.
Well, all I'm saying, Senator, is that we looked at a range of, as we always would in any budget and lead up to a budget, we looked at a range of different revenue and spending options to help inform government decision making. I'm not confirming.
Yeah, and I can be clear because, as the Finance Minister, I've worked closely with the Treasurer on this. I can be clear that we came into government and wanted a very, very clear understanding about everything that was and wasn't in the budget, right? Because there was terminating measures, there was zombie measures, there were legacy issues, there were urgent calls on the budget.
So there
was unallocated funds in the budget. Like it was a mess. From a prudent budgeting point of view, it was a mess. So we
there were
asked
recostings done of
for
all
a range of information to inform the decisions we took in our first budget. I'll be very clear about that. It's responsible. I would expect that the Australian people would want their Treasurer and Finance Minister understanding exactly what was in the budget and what, as it turned out, what wasn't in the budget as well.
Does the Treasury Secretary does the Treasury Secretary and the Treasurer agree on the guardrails that should be used around the budgeting process?
What do you mean by guardrails?
Well, I remember the Treasurer saying that he thought that a tax as a share of GDP was, and I think the words he used were all politics and bad economics. He said that on April the 5th, that there was no point having a tax to GDP measure that was part of the guardrails, a cap.
Well, you can see from our fiscal strategy.
I can see that you've actually that the Treasury Secretary has mentioned it in his opening statement, and yet it's something that the Treasurer doesn't believe in.
So our view, Minister, if you,
sure.
Our view, and the reason that was in the statement is that we believe that to meet the long-term structural challenges of the budget, which we think are significant, there needs to be an open, sensible conversation around both tax and expenditure. Mm-hmm. And I think having a hard cap necessarily, in our view, is not always a helpful position to be. That doesn't mean that there shouldn't be some, obviously a conversation around the impacts of both higher taxes and lower spending on different parts of the community and the economy. But I think, from memory, my understanding of the Treasurer's comments in this area was that the hard tax cap was
Bad politics, all politics and bad economics.
Yeah.
Do you agree,
Well,
Mr.
I
Yeoman?
think certainly my view, in isolation, there was no spending cap.
Do you agree,
There's
Mr.
no
Yeoman,
spending
that-
cap. So you had a tax cap, but no spending cap. And we could see what was going on
Mr.
there.
Yeoman,
It doesn't make for
do you
very good
agree
budgeting.
that a tax to GDP cap is all politics and bad economics?
well, I won't speak to that
Yeah, I don't
aspect,
think you have
Senator.
to
What
give
I
an
would say,
opinion.
Can
what
I
I would
ask
say is
then-
that. Sorry.
That's fine. Can I ask, Minister, what's PFO for?
What's,
PFO,
what about it?
what's it for?
To give an assessment in the lead up to an election of an independent assessment from the Treasury and Finance of the state of the budget.
And it's signed
the
off
outlook.
by,
Sorry?
and it's signed off by the Treasurer and the,
Well, by the
No,
Treasury
sorry,
and
by the
the
Treasury,
Finance
I should say,
Department.
yes.
Yeah.
By
Treasury
the
Secretary
Secretary
and
of
the
the
Finance
Treasury.
Secretary.
Yep.
Yes.
And I know we were just referring to it before, there were no material changes between PFO and the March budget, is that correct?
That's right.
So I'm interested in the origins of box 3.2 in budget paper number 1, and just for the benefit of Hansard, this box adjusts the PFO baseline to account for key developments. So whose idea was it to include this box in the budget statements? Was it Treasury's or was it government?
Senator Hume, from memory, this was the Treasury that put forward the proposal because we felt it was a useful way of understanding what was actually going on and what the major pressures were. So what this box and the graphs particularly show is that so the graph on the bottom right, so chart 3.4, shows that had we have taken PFO at that point, if we had the same interest rate requirements, so the same cost of debt for Australia going forward, if we had the higher NDIS estimates, and in addition, if we made the lower productivity assumption that now underlies the budget, then we would have seen a much higher debt and a much lower UCB at PFO. So it's a way of showing what the circumstances in PFO would have been if we faced the challenges that are now clear to us as the Treasury and to Australia as the Australian economy.
Okay, so was it you then, Ms Reinhardt, that selected those key developments for the PFO baseline to be adjusted by?
So we looked at what some of the major changes were. So I think there's another chart in the budget papers which shows the growth in estimates variations, and the biggest are the NDIS and the PDI, so the public debt interest payments. So it really gives a good indication of what the pressures are on the budget going forward.
So what were the criteria for those developments?
The biggest
adjustments?
movements.
You
biggest
didn't
movements.
include inflation more broadly, or
So
cost of
inflation
living?
impacts on PDI, inflation impacts on the interest rates that are charged through Australia and in the world, and so inflation flows through in that way.
And can I ask, I've never heard the phrase adjusted PFO before, or PFO adjusted before. Is it something that's been used before? As a
We have
baseline
to
for
check
any
whether it
budgets?
has. We'd often adjust our projections and inflation to show, so there's scenario analysis in the back of the budget papers as well. We often show what different events, what their impact is on the underlying budget.
And the
So-
secretary that signed off PFO also signed off on this?
Yes,
Yes.
Senator. For us, PFO, the reason it's a comparison to PFO is because PFO was the last full authoritative update of our estimates. So we were trying to highlight the impact of the most significant changes since our last major economic update by drawing it out that way.
So just to get some ideas of the timeframes as to when those key developments were finalised, can Treasury confirm what date this analysis was commenced and when it was finalised? What date it takes into account information up to?
We can. This was finalised as part of our normal budget process. So in the last weeks before the budget, this would have been as the fiscal estimates came together. We would have done this analysis as we looked at those major spending drivers that Ms Reinhardt mentioned. So we're happy to take it on notice, Senator, and we'll see what we can provide. But it was in the standard timeframes of budget.
And when was the decision to downgrade the long-term productivity growth assumption taken?
I don't have the specific date in my mind, but I think that was something from memory that the the government had talked about previously in opposition, and then on advice from us on arriving in government, they took a decision to downgrade the productivity assumption. So it was
the
shortly
government
after.
chose to downgrade productivity growth. Is that what you
Based on
said?
advice.
Based on our advice,
And essentially the fact, that
It was-
we haven't been at 1.5 for
So it was our
a
view.
period of time.
It was our view, Senator, that we have been monitoring this for some time. There's been a long-term decline in productivity growth. We have been looking at it as Treasury for some time, and we took the view that it was appropriate to reduce the long-term productivity assumption from 1.5 to 1.2 and advise government of that.
So obviously budget forecasts are a reflection of the agenda of the government, and the government has said that they have a reform agenda that is productivity enhancing. But if it's productivity enhancing, why are you downgrading your productivity assumptions?
It's a more realistic assumption, essentially. I mean, I'm not sure if you got to 1.2, maybe you did, but...
We were certainly striving for productivity rather than just saying we were striving for productivity and then downgrading
you were
the productivity
striving and you had a
assumption.
much higher assumption that you didn't reach. This is a more realistic assumption, and of course the government is focused on a productivity agenda. That's what all of the large part of our election commitments and spending are focused on. But we're also providing everybody with a very honest assessment based on advice about the state of the economy and the state of the budget, and the decisions reflect that. We're not going to pretend and hide behind figures that haven't been reached for some time.
There's this box also talks about an actuarial assessment to the NDIS. When was that actuarial assessment received?
That's probably a question for Community Affairs Committee, but my understanding is that's a yearly actuarial report that's done.
Is there anybody that knows?
Well, it's not part of the Treasury portfolio.
Well, it's part of the budget papers, and it says
well,
that you've actually
so's the whole government. Like every
and you've
portfolio
adjusted
is
PIFO on the
reflected
basis of this actuarial assessment.
So it's an independent actuarial assessment that's done by the auditor that's associated with the NDIA, and it was released recently.
It was in
I
September.
understand.
I'll check it, but it was quite late towards through the budget process. But it's part of something that's happened under your government, and essentially it informs the parameter variation that goes in on the NDIS.
And what about the higher yields for the debt? What actual information, what does it take into account, and to what date is that up to?
So Mr Goldsworthy will provide that, but it's a standard approach to assessing the yields on bonds rate, which we haven't changed at all from previous assessments.
So similar to a lot of budget assumptions, we need to settle them a few weeks out from finalisation of the budget papers. A useful way of thinking about the average cost of government borrowing is to look at the 10-year yield. And that has increased markedly since PIFO as the box draws out. So again, for memory, I think the assumption used in budget was 3.8% for the 10-year yield, which was around the 20-day average at the time we finalised the assumption. And at PIFO, I think for memory, it was 2.3%.
So on the basis of the evidence that you've just given me there, can I perhaps ask... I was going to ask the Secretary, given the potential for it to be misconstrued, to reaffirm that PIFO actually did reflect all government decisions and all other circumstances that may have had a material effect on the economic and fiscal output that were in existence before the issue of writs for the election. Is that still the case?
I don't think anyone's casting aspersions on that other than
Well,
you,
no one has ever
Senator
used an
Hume.
adjusted PIFO ever before.
Well,
In
quite
fact,
a
if there
lot
is a
has
precedent,
happened.
I would love to know about it.
Quite
Perhaps you could take
a
it on
lot
notice.
has happened, to be fair,
It's been 6
between
months.
March and quite a lot has happened in the economy between March and October. It is right for Treasury to reflect some of these changes. Nobody is casting aspersions on PIFO. No one has done that other than you. You are the first person that has raised that.
No, the budget
but it
papers
does
raise
give
it.
you... No, they do not. They compare... right throughout the budget paper, there's comparison between year and year. Like,
well,
and
most
then
budget
this
papers
will-
go budget to budget. This one not only goes PFO to budget, but it goes adjusted PFO to budget.
No, it doesn't say adjusted PFO. It says
does.
PFO adjusted for key developments,
And that's the
i.e.
baseline?
since PFO. So you're the only one that is bringing PFO into this. And it is quite right that in a budget that seeks to explain some pretty significant developments over a short period of time, that it's reflected in charts and analysis by the Treasury. That's essentially what a budget paper does.
And if I may, Senator, just because I'd like to say on behalf of the organisation, and I'm very confident the Secretary this would reflect the Secretary's views, I can certainly confirm that the PFO represented our best professional judgment as Treasury, along with the Department of Finance, and I'll obviously leave it to Ms Wilkinson to confirm that, but from our perspective, PFO certainly represented the best professional judgment, taking into account all the information and policies at the time. And as Ms Reinhardt has explained, the reason we have drawn these issues out is because there have been very material differences to the economic environment and some of the spending pressures that we've seen that have emerged since then. And the PFO was as Treasury's, our last definitive fiscal update. And that's why we drew that comparison to PFO. But so I just wanted to make sure that's on the record.
So can I just understand, for my own benefit, why would you simply not include the changes to economic forecasts in your budgeting since the last budget? Why did you pick PFO?
Because PFO was the last full economic statement.
But it's the same, there were no material differences.
But
Isn't it usual practice to go budget to budget rather than using a PFO?
well, if there wasn't a PFO, yeah, but there was a PFO.
And then why didn't
can
you
go back
just
and
use
check,
the original
Senator. I think-
PFO rather than adjusting the PFO?
It didn't adjust the PFO. It's using the PFO as a baseline and then putting in some of the significant variations that have occurred since then,
And
and
those
sort of shown what that would have looked like.
And those
It's not-
significant variations embedded in the adjusted PFO are then used as a
They're
baseline?
it's not an adjusted PFO. I think we should be very clear about that. PFO remains a true and honest representation of decisions taken up to that point as signed off.
What's the
It
point of
didn't
these red
change from the
dotted lines
budget.
then?
Hey?
What's the point of the red dotted lines?
The point of the red dotted line, Senator, is to show that there are really significant changes that face Australia, the government, the budget, as a result of changes that are largely external to the control of the government.
Okay.
So that's the international events, isn't it?
Sorry, Senator Hume, can I just do a bit of time
Yep.
keeping? We've got a break coming up at 4:15. Do you want to continue on till 4 and then can I share the call back to Senator McKim and Senator O'Neill?
Yep. Can I ask about economic modelling? Has Treasury modelled the participation and productivity impacts of both the government's childcare policy and the paid parental leave policy?
I'll ask my colleague, Mr. Cully, to speak to that.
Thank you, Senator. Mark Cully, the First Assistant Secretary of the Macroeconomic Analysis and Policy Division. So the answer to your question is we did do some modelling on the participation effects of the enhanced childcare support, and there's a box in the budget that outlines our results on that. It's box 2.4 in Budget Statement 2, and to kind of go to the bottom line, based on analysis of past subsidy increases, Treasury estimates the government's childcare subsidy changes will increase hours worked by women with young children by up to 1.4 million hours per week, equivalent to an extra 37,000 full-time workers in 23-24.
So, Budget Paper 1, page 2, says that these measures will provide long-term economic dividend by lifting workforce participation, which is exactly what you've just said, and productivity. How do you measure productivity there?
So that's a qualitative assessment. We didn't do any direct modelling of those things, but to give you an example, probably I'll give you two kind of concrete examples. So firstly, the increase in women's workforce participation, working longer weeks, or women going in joining the workforce new
Yep.
will allow them over time to build up their human capital, their skills, and that will over time yield a productivity dividend. The second one, which is actually quite subtle but is quite important, is that the use it or lose it provisions in the parental leave
Yep.
changes. There are before the birth of children, in about a quarter of households, the woman, the mother, is the primary income earner.
Yes, yes.
Not the father. And so these circumstances will allow, in some households, there'll be a discussion, and they may choose to have the father take on greater childcare responsibilities relative to the mother, and the mother earns more, is more productive than the father, and has a marginal effect on boosting productivity.
But they are unmeasurable, immeasurable, unmeasurable, unquantifiable.
I think there's a fair bit
I
of
don't know
data
that they're
about
unquantifiable.
both of them.
It's just hard to do,
Yeah.
and it would require a kind of very considered level of effort to do the economic modelling to see what that would
So
what
for
that
a
would yield.
budget,
But it is
obviously.
also consistent with the there's a range of academic literature which looks at these effects, and it always finds that there is a positive effect.
So that productivity that is specifically mentioned on the second page of the budget paper, is that embedded into your productivity projections?
So the answer to that question is covered in the box on the change to the productivity assumption.
Yes.
Which is that is a
That's
a
on
looking,
page 83.
It's
Box
looking
3.3.
backwards, right? It looks backwards, and it says the best estimate we have of future productivity growth is based on using a 20-year assessment of what's happened in the past rather than a 30-year assessment.
Yep. But these are
I
two specific policies that the government has gone out and said will increase productivity.
Yeah.
But the productivity forecasts have gone down, and there is no way that you can tell me exactly how you have calculated productivity from those two measures or embedded them in that productivity forecast. Is that right?
So they are not forecasts. They are projections. They are medium-term projections where you take your starting point and you run out 10 years
Yeah.
based on an assumption around what we think productivity growth will do. And the purpose of that is to try to make some judgments about the fiscal outlook in 10 years' time. It's not a comment on government policies and the impact they may or may not have on productivity.
But that lower productivity growth assumption, as we said, is one of the key factors that is adjusting PFO. Is that right?
So one of the key issues here, Senator, is that Australia, in a lot of areas, our view is that Australia, in terms of productivity, is going to be a productivity taker, essentially. We're going to take the global productivity frontier in some sectors, the shift in technology, and there has been a well-documented longer-term slowdown in global productivity growth. And so Australia has downgraded our long-term assumption, as Mr Cully said, not a forecast. So has the United Kingdom, the United States, Canada. A number of these countries have all been downgrading their long-term productivity assumptions because of what they see as a broader global slowdown, and there's a very long literature, which I won't bore the committee with now as to what that might be. And then the question for Australia is, how do we move closer to that frontier over time, or do we fall back from it or move closer to it? And so we think that there is a positive, based on the evidence, we think there is a positive effect of these policies on productivity. But when we shift to our medium-term, long-term assumptions, they are really governed by what do we think is a plausible long-term rate of productivity growth to underpin our budget projections, rather than adding up every policy that the government has, because there's hundreds of these policies that would have some impact, positive or negative, on productivity growth. So we take a longer-term assumption.
So does the current industrial relations reforms that are before the House of Representatives this week, do they improve productivity? Have you done any calculations on that?
Well, that legislation hasn't been settled, as you know.
But you wouldn't bring it forward unless you knew it was going to be productive, surely, because you've got it's a high productivity agenda.
You're asking Treasury about things that they've included in this budget. So I'm answering the question is that legislation hasn't been settled. As we know, it hasn't been passed by the Parliament.
So it's not included
but yes,
in the budget
I mean,
projections.
in terms of getting wages moving, getting bargaining working, another area that we're cleaning up after 10 years of neglect and delay, yes, we think it will be good for the economy,
So think, or have you
particularly.
actually calculated it out?
Well, there is plenty of evidence to support this, Senator Hume, as there
Is
is.
there? Has Treasury done any costings
as
on
there
it?
is for PPL and as there is to access
Treasury
to
hasn't
early
costed any of
childhood
those, though.
education.
But Minister,
As there is.
Treasury
Well,
have
look,
just
if you
said
want to
they
argue
haven't
against
done any
those
productivity
policies and
analysis
say
on
they
those
don't
those
have a positive
policies.
benefit in terms of
Just tell me
economic
what it
equality
is.
and women's workforce participation
They're
and
great for participation,
support
but are
for
they any
families
good for productivity?
to manage the shared care arrangements that they need to manage, then by all means do that. But there is plenty of evidence, and Treasury has explained to you how they factor that into their thinking.
So there are 3 policies named just there. Childcare, which is important for participation, I agree. Paid parental leave, again, great for participation. And your industrial relations reforms, which I don't know about participation. In fact, it may actually have the opposite effect. But all 3 of those policies have been taken to the Australian public saying that they are productivity measures, and yet no calculation has been done by Treasury to demonstrate that they are, in fact, increasing productive capacity. And your forecasts for productivity go down.
I actually don't
your
think that's
projections, I should say,
the
go
evidence, yeah.
down. Is this really a productivity agenda, Minister?
Well, you're trying to conflate a couple of things there. One is the decision based on advice from the Treasury to adjust the productivity assumptions to a more realistic level after a long period of obvious, decline and not reaching the assumption that had been built into the budget. So that's one thing, right? And then we have investments that we are making in skills, in access to early childhood education, in support for families with PPL, in fixing the aged care crisis, in fixing the energy crisis. They're just to name 5 of them that we've inherited, essentially, from a government that didn't deal with them. And yes, we believe there will be positive productivity benefits from making those sensible investments without adding to the short-term inflation problem that we are dealing with now.
But there's no analysis that backs it up. It's just a we
Well,
believe.
there is plenty of evidence.
Can I ask then on notice if Treasury could provide any evidence that they have that either paid parental leave or childcare policy, or indeed the industrial relations policy, which is before the House of Representatives right now, will improve productivity in this country, and if so,
we can do a literature
how that
search
is
for
embedded.
You. That's
how
right.
that is in. No, I don't want a literature search.
Well,
I want to know what Treasury have done.
I'd like to
analyse
to allocate the call to Senator McKim. So you've put that question on notice, Senator Hume.
I haven't finished the question, but yes,
Go
I
ahead.
will put
Finish
the
your
question
question.
on notice, and how those policies and the productivity forecasts that come from them are embedded in that lower productivity forecast, and how then you can then say in the budget papers that have been signed off by you with your name in front of it, Minister,
Very
that this
proudly.
is a productivity
Proudly signed
agenda that is represented by those policies.
And proud of all of those policies as well.
Senator, we're happy to take that on notice. I think Mr Cully has stepped through the evidence that we used to make the claim around productivity in relation to those measures you described and some of the academic evidence, but happy to take it on notice and see what else we can provide.
Senator McKim.
Thanks, Chair. Mr Yeoman, there was some discussion earlier with Senator O'Neill around the budget's impact on inflation, and I think you said something, I just want to make sure I'm not being unfair to you, but you said something like, in broad terms, the budget's impact on inflation was neutral over the next 2 years. Is that
Yes.
Is that fair?
That's correct, Senator. I think there's, just to elaborate briefly, I think over the next 2 years, the change, what we look at particularly is the change in the budget position year by year. And the budget position is, as I said, remaining fairly neutral. There are not significant changes over the forward estimates really, but particularly over the next 2 years. And then we are still probably seeing some of the effects of a very substantial fiscal consolidation actually, as many of the extraordinary COVID measures were wound down. So our view is that yes, the fiscal position is broadly neutral.
Oh, yeah. And that's in terms of its impact on inflation?
And the economy more broadly, yes.
Yeah. So would you make that claim over the next 4 years or only the next 2?
Look, I think it's particularly over the next 2 years. I think it's neutral, but I equally don't think that when you look at the shifts historically that we've seen in the fiscal position, and even over the forward estimates, obviously by the end of the forward estimates, we have inflation on our forecast returning back to the Reserve Bank's central target band. So the inflation challenges that we see aren't as prevalent in that part of the forecast period. but I don't see it having a substantial fiscal impulse,
All right.
even in the latter years.
So all other things being equal, increasing taxes would take money out of the economy and help with inflation. Is that fair?
So correct, it would take money out of the economy and all else equal, put downward pressure on activity and prices.
And the converse will be true, that decreasing taxes is inflationary?
Yes,
Yep.
Senator?
So would abolishing the stage 3 tax cuts reduce inflation more quickly?
So, Senator, I think, as I said, if you take more income, and it can be tax cuts or it can be spending on any front, if you take income out of the economy, then that is likely to lead to a reduction in economic activity and therefore inflation. I would say, though, and it's an important point, and I don't mean to take up the committee's time, it's an important point that the prevailing economic circumstances matter, as do the effects more broadly of tax changes or any other policy measure, frankly, on a whole range of other factors such as distribution and participation and many of the things we've talked about today. So I think that is one factor that you would consider in such a decision, but it's not the only factor.
Yeah, but nevertheless, if the stage 3 tax cuts are left in, that would be inflationary, wouldn't it?
No, Senator, our profile currently has the stage 3 tax cuts as legislated in there. So our inflation forecasts fully take account of that.
I understand that, but compared to not having them in, it is inflationary, isn't it?
Well, I wouldn't use that term, Senator. I think, as I said, if you were to increase taxes, whether it was through the stage 3 tax cuts or any other mechanism, that would, as I said, put all else equal, put downward pressure on demand and also on inflation.
And not proceeding with stage 3 tax cuts would effectively be an increase in taxes, wouldn't it?
I think that's consistent with that, Senator. Yes.
So the RBA is forecasting inflation will still be at 3.25% at the end of 2024. Stage 3 tax cuts will be in by then. They'll have had 6 months in. So, and you've baked those in, as I think you've just acknowledged. So, just to be clear, after 6 months of the stage 3 tax cuts, inflation is still going to be above the target range. And if the RBA's recent form is anything to go by, and I understand that you're not on the board, although Dr. Kennedy is, the RBA will still be putting up interest rates. We can only assume, because that seems to be the RBA's only response to inflation.
In that,
It's a wild old ride you've taken us on.
Well, I'll tell you what, it's a wild old ride for people whose mortgage payments are going through the roof, the people whose rents are going through the roof, the people that are sort of using Afterpay to afford their food bills at the moment. Minister, they're the people having the wild ride, not this committee.
I wasn't referring to that. I was referring to a question with a lot of what ifs and a lot of hypotheticals, which make it very difficult for the Treasury to answer.
And I do think, Senator, I mean, I understand and I'm aware of the RBA's forecast profile, which has inflation a little more persistent than we have it, but we have inflation returning to 2.5% by June 2025 on our current forecast. So from our perspective, the most significant inflation challenge is particularly this year and into next year from our perspective. And I understand the Reserve Bank has slightly different forecasts, and obviously you should take that up with them.
I will.
But from our perspective, that's what we have.
Thank you. Mr Yami, you also said, I think, during an exchange with me earlier, something around, we were talking about wages, and I think you said, again, I don't want to be unfair to you, but I think you said something like there's no prospect or little prospect of a wage price spiral in Treasury's view.
What I said is that at this stage, Senator, we don't see evidence of a wage price spiral occurring.
No evidence. Okay, thank you. And yet last week the RBA Governor spoke and in writing about the importance of avoiding a wage price spiral. So how should ordinary Australians view those two comments, which on the face of it seem to be diametrically opposed?
I respectfully disagree, Senator. I think they are consistent. I think at this stage, in the measured statistics that we look at and in the business liaison work that we do, we haven't seen evidence of wages moving to a level that is inconsistent with steady inflation over time. We are certainly aware that there is building pressure in the labour market, and with an unemployment rate at the levels, historical levels,
wages are going to flatline. Real wages are flatlining for the next 4 years according to your budget.
Correct. And
Correct.
The
So
reason
where's-
real wages
Why is it so important that we avoid a wage price spiral when real wages are flatlining for the next 4 years, after I might add declining for the last two? That'll be 6 years of no real wages growth, and you've still got the RBA governor out there jawboning down wages.
So from our perspective, Senator, and we agree with the Reserve Bank on this point, if a wage price spiral was to become embedded in Australia,
there's no evidence of that. You've just,
correct,
you've just told
but in
us.
terms of the point you're making and where the governor, I don't want to speak for the governor here, and I won't, but from our perspective, if a wage price spiral was to emerge in the Australian economy, that would make the job of the central bank and the government much more difficult to bring inflation
There's no
down and would have a
evidence.
larger cost over time.
No evidence.
At this stage, we don't see evidence of that, but we, of course, think people should remain vigilant to that risk.
Yeah, and I'm just looking at the
Minister.
statement, and I mean, again, you've got the RBA coming, but I mean, the statement that the governor makes in that section of his statement is, you know, noting that wages growth is picking up from the recent lows, although it
It's
remains
not.
lower.
It's not. Well, he's wrong about that.
Well, I think there is evidence that wages are picking up, and in fact, in the wages
Not in real
forecast,
terms.
not in
That's
well,
just
he's not
true.
saying in real terms.
But real
They
wages are the thing
picking-
that matters here.
They are
Minister.
picking up. I think it is a purely factual statement. Further pickup is expected due to tight labour market, and given the importance of avoiding a prices wages spiral, which I think we can all agree on, the board will continue to place close attention to both the evolution of labour costs and price-setting behaviour of firms. Price-setting behaviour of firms, that's something that you should support.
There's no evidence,
So I
Minister. is
just a
there?
bit of context.
Well,
I
a bit
think,
of context
to be fair,
is that
and
the-
they can defend themselves.
in the context
but
of
I don't
what-
think they're
well,
saying
I don't
what
think
you
he
are
can defend. I don't
alleging.
think he can defend that statement. And tragically, he won't be here personally to do it, which is a real shame, because I don't believe that independence should equal a lack of accountability. But leaving that aside, in inflationary context, you'd agree, Minister, it is real wages. That is the critical thing, isn't it, rather than absolute wages. Like if wages are going up 10%, but inflation is 15%, then wages are not having an inflationary impact, are they? Because real wages are declining. You'd have to agree with that,
Well, look,
wouldn't you?
yeah. All I'm
You would?
saying, well, I think you were trying to say something that the RBA is doing something and saying something that they are not saying. In my reading of the statement by the governor,
The RBA
on
is
the 1st
smashing
of
the
November.
economy and risking a
McKeon.
recession in this
I
country.
know you've
Senator-
got very strong views about
Senator
it.
McKeon,
Senator
we do-
but
we do have the-
That is the point I was trying to make.
Minister, I'm not comfortable with this line of questioning Senator McKim, given that we do have the RBA coming on Thursday morning, and you've made a statement about the attendance or otherwise of the governor that I think needs to be clarified, which is that he's been invited and it has been confirmed by the committee that he's overseas.
That's correct.
You have the call.
Thank you. At estimates, so this is one for you, Mr Yeoman, not in regards to the RBA, I hasten to add. At estimates this year, Treasury was pretty buoyant about, and that it was via Dr Kennedy, about the prospect of achieving and sustaining full employment. And you've gone a little bit in Dr Kennedy's opening statement to the Nauru. However, budget's got unemployment increasing over the forwards. So would you agree now that the prospect of achieving and sustaining full employment is lost in the short to medium term?
No, I wouldn't say that strongly, Senator. We are, as I said in the opening statement, we are very conscious that there is a very fine line to walk here between containing inflation, doing enough to contain inflation, but doing the minimum necessary to ensure that unemployment can remain as low as possible. There is no doubt our budget forecasts include now a modest pickup in the unemployment rate to just above what our estimate of the Nauru would be. But we still think that if unemployment, this is my view, but if unemployment could be contained at 4.5%, I think that's still, by historical standards in Australia, a very low level of unemployment and a positive outcome for the economy. And that is exactly the kind of thing that we are trying to grapple with, is how to best walk that narrow road between containing inflation and removing demand from the economy, but not seeing a larger than necessary increase in unemployment. But I think the forecast we have, while there is a pickup in unemployment, the level of unemployment in the country, if those forecasts are realised, would still be at a very historically low level for Australia and close to full employment.
Thank you. Understood. However, in February, we were told that we were close to achieving and sustaining full employment. I mean, you couldn't make that claim as we sit here today, could you, that we're close to achieving and sustaining full employment? Well, we've gone further away from that since February, obviously, haven't we?
Look, clearly the fact that because of the increase in inflation that we've seen and because of the need to act for the central bank to act and for government to take the responsible approach that's been discussed, we do think that will flow through to a pickup in the unemployment rate, which does, as you say, push us relatively further from what we would consider full employment. But there is, as we've discussed before, this is not an observed number. Where full employment exactly sits, we don't know precisely. We estimate it using various tools and models, and our view is that we want to maintain unemployment as low as possible while containing inflation, and I still think that 4.5% is a very low level of unemployment for this country, but I don't disagree.
Yeah, okay, thank you. Am I to take from your answer, because you spoke about inflation and the actions of the RBA in increasing rates, would it be fair to say that we are now further away from achieving and sustaining full employment than we were in February, at least in part because the RBA has put up interest rates?
I'm not going to comment, Senator, on the actions of the central bank.
I'm asking about the effect of those actions, which is, I believe, in your patch.
Look, I understand. I mean, so certainly the Reserve Bank is doing what it considers necessary. For the record, the Reserve Bank is doing what it considers necessary to achieve its mandate. And
leave that aside, but the effect of their actions has in part driven us further away from achieving and sustaining full employment, has it not?
What we say in the budget, Senator, is that the reason why economic growth is slowing next year and why unemployment is rising is because of a combination of factors, which includes rising interest rates, rising cost of living, and some of the other issues that we've discussed today in the committee.
Okay, thank you very much, Senator McKim. Thank you, Mr Yeaman and other officials. We are ready for a 15-minute break. It seems the way that we're moving through the program that it would be helpful if Macro stayed. And are you able to continue with us, Mr Yeaman, after the break?
I am. If I could just check, are there any questions for our corporate team? Because we can, if we are able to let them go, we will, but happy to stay, of course, if required.
I think we need to keep everyone... there are questions for corporate and we...
Happy to do so, Chair. I was just checking.
Yep, it'd be appreciated if Macro can stay as well. And we'll now suspend for a break and resume at 4:30.
Thank you.
Avoid car accidents at all costs. Yeah.
You ready to go, Minister?
Yes, thank you.
Okay, we are now ready to resume with the Treasury portfolio and Senator Smith is seeking the call.
Thank you very much. Acting Secretary, could you just step me through the process by which the department prepares and develops the incoming government brief?
I can. I may seek some additional comments from Ms Kelly as well on this, but as is standard practice across most departments, the department, once the election is called, goes through a process of identifying relevant issues that we consider a new government will need to tackle in the first period of government, of tracking both parties' election commitments that will require implementation, immediate implementation actions, and we then internally draft advice in the form of an incoming government brief that tackles both of those issues, that discusses some of the longer term challenges for government that they need to address and also some of those implementation challenges that I mentioned.
Is there an official at the table that can be a bit more granular?
I'll ask Ms Kelly to add.
Sorry, Senator, could you just repeat your question?
I'm interested in the preparation and development process that happens when building the incoming government brief.
So Roxanne Kelly, Deputy Secretary Corporate.
You'll have to speak up, I'm afraid, Ms Kelly.
I'll get closer to the mic. Roxanne Kelly, Deputy Secretary Corporate and Foreign Investment Group. So as Mr Yeaman said, once the election is called, we then look at forming a couple of teams that then actually do some of looking at the various commitments by parties in the election. We then also consider strategic policy advice that we as Treasury may want to provide to whether it's a returned or a new government. And then we spend that time, that is known as caretaker, developing those the strategic policy advice for both a returned and incoming government, a returned or new government. And we also then look at all the various election commitments, and we do an analysis of those as well, and provide our advice in terms of how they could be implemented. And in addition to that, we also provide sort of basic organisational information as well, and pull that all together.
So when the team or teams are monitoring the election campaigns,
yes,
what resources do they use to monitor election commitments?
It's mostly the websites and when the various parties publish their commitments.
Exclusively, or
Yes, because we don't have any.
You're not media monitoring.
Yeah, we do. We have media monitoring, but mostly that's because that media monitoring talks about policy statements or commitments, which are then normally published on the respective parties' websites as well.
Yep.
If I may just add one point, Senator, the Department of Prime Minister and Cabinet typically will also run a process to monitor sort of key initiatives across both sides of politics. So we do some of our own work to supplement that, but we also benefit from their process.
So what is the internal process? So you have a number of teams and the information is collated and then built up, and what's the process, the internal process that is gone to get to the final incoming government document?
It's probably a standard process in that sense, in terms of how we do develop our policy advice, in that respective groups, in terms of if it's around a particular policy, the group that is responsible for that policy will develop the advice. And then with that then passes through the usual, I suppose, approval chain. And then we as an executive board, which is the secretary and the deputies, are the final sign-off on those documents.
Right. So if a policy is publicly ruled out by a political party, how, if at all, is that accommodated in the incoming government brief?
I think the best way...
You go.
I mean, it depends heavily. Every process is a little different, Senator. But obviously...
Ms Kelly just told me that it's a pretty standard process.
So the organisational process is standard. So the steps she talked about, forming the team, the volumes, the briefs, that is pretty standard process. But in terms of the issues themselves, which obviously change election by election, what I would say is if a policy had been ruled out, we would note that obviously in the brief. We would note that is the government's position. That doesn't mean that in some cases, and I'm not talking about a specific example here, but in some cases, if we thought there was still a long-term policy challenge that needed to be addressed by our government, we may still provide some advice to say that this is a challenge you will need to address at some point in the future, and here are some ideas. But we would note that their current policy position was not to make changes in that area.
Right, so...
But as I say, that's a fairly hypothetical example, but I'm trying to be helpful.
Yep, so the incoming brief actually includes things in addition to election promises. It might actually include policies that have been consciously ruled out by a political party, but you make an internal decision that you're going to include that in the incoming government brief because it might be a matter that is worthy of consideration even though the political party doesn't think so.
So I think, I'm not trying to get into the specific examples here, Senator, but
You're
from our
welcome to.
perspective,
You're welcome to.
If we felt there were issues for either side of politics that needed to be raised for their term of government, then we would always reserve the right to provide policy advice on those matters. That doesn't mean we're blind to the statements governments have made and that government can't choose to take or not that advice. But from our perspective in incoming government briefs and more generally, we always reserve the right to provide policy advice where we think it's necessary.
So if a political party has ruled a policy out, has consciously said we're not going to do this, you reserve the right to say to the new incoming government or the re-elected government, we think you're wrong.
Well, I wouldn't just put it that way, Senator.
No, I wouldn't expect you to put it that way. But I'm
talking here more about longer term challenges. So, for example, if we might say that we think there are areas of a certain policy that you will need to tackle over the next period of government or into the future, and these are things that you need to start to think about. That's not to say in any means that we would contest the government's position or recommend they proceed with a policy that they had ruled out.
So when we turn to the particular budget measure that some commentators have called, the thin edge of the wedge in terms of revisiting the franking credits debate, and the budget measure in regards to the franking credit issue, was that included in the incoming government brief?
Well, we're not going to go into what's in.
No,
Nice
sorry.
try.
Minister, I'm doing my job.
Yeah, I know.
And you're
Yeah.
doing your job. So
Do you
was
want
that
to talk
included?
about the tax compliance and tax integrity measures in this budget? Is that the question?
I'm going specifically to matters of public commitments given by the Labor Party that a policy was not to be adopted, but I'm not there yet.
Okay,
I'm
we'll
not
get
there
there.
yet,
Yep.
Minister. So, Deputy Secretary, the policy considerations that you might choose to include in an incoming brief that an incoming government might have consciously ruled out, do they have any characteristic? You said they might address long-term policy challenges.
Senator, I think, look, I'm trying to be as helpful as I can for the committee quite genuinely here, but I also, we are very conscious of the commitments of a government when they come in, and that they will be implementing and following through on those commitments. All I was trying to illustrate was we always, as departments, reserve the right to say that there are challenges in the policy space that will need to be addressed over time, and we may provide advice around that. I don't want to say any more than that. That's really the essence of what I'm saying.
So are you equally conscious of those policy positions that have been, during the course of an election campaign, ruled out?
Yes, of course, we take full
Well, it's the
awareness and
policy
consideration of
platform.
that, yes.
So, because where I'd like to get to, I'm very, very curious to know how the franking credit measure got considered by government after it was elected, because, on no less than 3 separate occasions, the Treasurer ruled out, actually I'll start with his boss, the Prime Minister, on ABC Radio AM on the 30th of March, the Prime Minister said, in response to Sabra Lane's question, I'm paraphrasing, Sabra Lane says, is the franking credit issue dead and buried? Mr Albanese says, well, we have already said, for example, that we won't have any changes to the franking credits regime, which is there. I'll repeat that. The Prime Minister says, well, we have already said, for example, that we won't have any changes to the franking credits regime, which is there. We've already said as well that we'll examine the budget, etc. Then, on Perth Radio, in an interview with Nadia Mitsopoulos, Mr Albanese says again, in response to Nadia Mitsopoulos' question, Nadia is responding to a message from Deborah, who has called into the station. Deborah has asked a question about franking credits. Is that an issue? You're not touching those. Nadia Mitsopoulos proposes to the Prime Minister. The Prime Minister says, at the time the opposition leader says, we're not touching them. We're not touching them. And if that is not enough,
Senator
on the
Smith.
17th of January...
This is very comprehensive, Senator
That
Smith.
is
I'm just wondering if there's
that is my
I'm just
preferred
wondering
operating
if there's
style. That is my preferred operating style. You would
Is there a question sometime soon?
Yes, that's right. And then context is very important. I think we've sort of covered that.
I don't want to
And then
shadow you,
Mr
but
Chalmers
it's a
says,
matter for
Mr
revenue
Chalmers says
and
on the
markets
17th
tomorrow.
of January to Scott Emerson, Mr Chalmers says, Labor will focus on multinational taxes and make them fairer.
Yep.
We won't be doing negative gearing. We won't be doing franking credits. We won't be doing franking credits. Those other examples that I've already given you, I couldn't be clearer than that. I couldn't be clearer than that. Mr Chalmers, then the Shadow Treasurer, says on the 17th of January.
Got it.
So, Deputy Secretary, I'm curious to know, did the Treasury make a judgment call and put into the incoming government brief any commentary around franking credits?
So Senator, the people who deal in Treasury with those particular issues around that policy measure are due to appear tomorrow at the committee in our Revenue and Markets Group sessions. They can speak to the sort of intent behind that policy advice. And I think that's all I can say at this stage.
And if I could just, I think after that long introduction.
Ms Kelly shared with the committee a few moments ago that the incoming brief moves up the Treasury and is reviewed by the Secretary and by other Deputy Secretaries. My question to you, you're sitting in the role of the Secretary, was a franking credits policy initiative included in the incoming brief? Did you make a judgment call that it was an issue necessary for the new government's consideration?
Can I just jump in? And Mr. Yeoman might have something to add, but we don't normally, and I don't think any government normally discusses the content of the incoming government brief. So if that's specifically a question, was it in a brief, we are not going to answer that, okay? The second point I think I'd make is in response to your quotes from the Prime Minister and the Treasurer. The policy that they were being asked about is not in the budget. So that's clear. If you are talking about the tax integrity measures, which were previously put into the 16-17 MyEFO by your government that remained unlegislated, then that is a matter for Revenue and Markets Group tomorrow. So I think I've addressed the whole set of your questions with that response, and happy to answer any further questions you have. But if it's specifically about, and I believe it is, around the tax integrity, capital raising and off-market measure, then that is a matter for a different group of Treasury tomorrow.
I think we're in the corporate part of the estimates, and I'm curious to understand, given the evidence that we've heard from the Deputy Secretary and from Ms Kelly.
It's a crafty way of trying to make this
I'll take it as a
section.
compliment.
I accept.
I'll take it as a compliment. Thank you, Senator
Maybe to
Gallagher.
expand on just that part of that element, I think there are many policy processes that we go through with government, as you know, Senator. The incoming government brief is one, but it is not the only form of advice we provide to government. So I think there are many forms of policy advice we provide that go beyond the incoming government brief on many of these issues, including in the run-up to budgets on measures, and my colleagues in Revenue Group can speak to the specific process around that measure in more detail. But I think there are multiple policy processes that run between an incoming government brief and decisions being taken.
So at the moment, Deputy Secretary, I can't rule out that it might have been included by Treasury officials themselves, not on the basis of a clear commitment from the opposition, because the opposition's clear commitment to listeners across the country was that there would be no changes to franking credits.
And the question that they were being asked in relation to the policy that we took to the 2019 election is not in the budget. So I don't know what you're trying to draw attention to.
I don't think your characterisation.
So your measure that you introduced in the 16-17 MyEFO, is that what we're talking about?
We're talking about improving the integrity of off-market share buybacks, which is
which is an integrity measure that you introduced in the 16-17 MyEFO that you didn't proceed with. No, unfortunately, I don't think it is different.
So I'm interested in understanding. I'm interested in understanding where the initiative came from. It's clear to me. I think you'd have to agree with me.
Came from the 16-17 MyEFO.
You'd have to agree with me, Ms Kelly, that the only assumption that the department could have made, or the task force could have made, is that franking credit reforms would not have been on the agenda of the new government when preparing the incoming government brief. So at some other point of the process, someone made a decision either to include it in the incoming government brief, or it was not in the incoming government brief, and then someone else post the election has made a decision to bring the initiative forward. I'm just trying to get clear in terms of where the initiative has come from. What is its origin?
Well, perhaps if we could, sorry, Ms Kelly, again, I'm trying to be helpful. The incoming government brief is not the only piece of information that comes to government. It is about, in my experience, having just gone through receiving it for the portfolios that I'm responsible for, it has a range of information, including how to progress the government's agenda, but also
pressures, challenges, opportunities, issues, stakeholder. You know, it's a comprehensive briefing to get you on day one, so that when you go on Patricia Carvelis's show on day two, you actually look like you know something, right? Like, that is the purpose of the incoming government brief.
I don't doubt that.
But
the
then
Deputy
there is
Secretary has just told us that, so I don't doubt that.
so there's a series of other advice that comes, including a whole set of advice that comes into putting a budget together. I don't think you can see that there's a conspiracy in the incoming government brief.
But the budget preparation process surely happens after the incoming government brief, because you wouldn't go through a budget process unless you were the government. So the budget process material happens separate to the incoming government brief.
Yeah, in addition to,
If you're sharing with me the fact that when you come to government there are other documents in addition to the incoming government brief, then I'd be keen to know exactly what they are.
Well, they're briefs. They're continuous. Like, every day you get briefs on everything.
Senator Smith, there's been a pretty good go on this issue, and I'll come back to the opposition in a moment. And sure, Senator Hume.
There were two measures, Minister. One was around dividend imputation, franking credits for capital raising, and the other one was around share buybacks. Now, the capital raising one, yes, was in my info and was never legislated because the government decided not to pursue it. But the one that we're referring to,
well, I don't know the one you're referring to, because you're just saying franking credit.
Well, it's your policy. It's improving the integrity of off-market share buybacks, which is a brand new policy that is what all the fuss is being caused about.
Page 13.
Today,
budget paper number 2.
Stephen Jones has been asked questions about it. It's all over the front pages of the newspapers.
Well, I think it's also been noted that this is a question for Revenue Group, who are coming tomorrow. And so I'm going to come back to you.
I just want to make sure that we don't confuse those two policies. They're very different.
If I've said something that I shouldn't have, I'll come and correct the record. But to be fair, the proposition that was being put to me by Senator Smith was a franking credits policy.
Which is that one? It does that.
Well,
that's on share buybacks.
I don't think so. He was citing from the comments the Prime Minister and Treasurer made about questions they were asked about a policy we took to the 2019 election. So if there's been some confusion about that, I'm happy to correct the record.
I think we've done as much as we can on this just for the moment, and I'm going to Senator McKim.
Thanks, Chair. I wanted to ask some questions based on the ANU work done on the distributional modelling of the budget. And I think we've given you a heads up that we were going to ask some questions about this. So, in broad terms, researchers at the ANU have analysed changes to personal income tax and social security, including childcare and paid parental leave contained in the budget, and have concluded that the budget will provide about a $5,700 per annum increase in incomes for the top 20% of households, and that the bottom 20% of households will get, and I'll quote from the ANU research, effectively nothing. So does Treasury accept that the direct measures in this budget will increase incomes for the top 20% of households vastly more than they will the incomes of the bottom 20% of households?
Senator, I'll take that question.
Thanks, Mr Cully.
So we have seen the ANU report and have had a look at it, given the cue you gave us yesterday as well. So it's important to know that there are only 3 measures that are looked at by virtue of that report. They're the stage 3 tax cuts, the paid parental leave and the childcare extra support.
Yep.
The stage 3 tax cuts account for 89% of the measures that were analysed, and they're already baked into the budget, as we've heard from previous responses.
Yeah.
We did not attempt to look at the distributional analysis of the paid parental leave and childcare support. We haven't done that work for the purposes of the budget, but those measures are both fairly relatively well targeted, and to the extent that they're kind of biased against different types of households, that very much depends on the nature of who uses childcare and who uses paid parental leave and where they sit in the income distribution. So I think the bottom line, effectively, the ANU report is effectively providing some commentary on the stage 3 tax cuts.
Well, and childcare and PPL.
89% of it is on the stage 3 tax cuts.
Well, do you dispute their findings? I mean, does Treasury do a distributional analysis of this kind? I mean, wouldn't you be interested in the distributional impacts of the budget in terms of the well-off people in our society versus the least well-off?
Sure. So I don't mean to frustrate you, but for the purposes at least of if you wanted to talk further about the stage 3 tax cuts, that will be a matter for Revenue Group tomorrow.
Thanks. Well, I will raise it.
But we don't, Senator, I can just add, we don't, as a matter of course, do sort of widespread distributional analysis across all budget measures.
Why not?
Look, it's a fair question, but at this stage it's not part of our standard practice. I mean, we do occasionally look at measure by measure. I just wanted to draw your attention to the point that was made in the opening statement as well, which related to indexation, and I think this is something that our Secretary has raised in this forum and will raise in other forums, I'm sure, which is that the increase in indexation, particularly for low-income households on welfare, is very significant, and because of the way that the indexation arrangements work, where they're given the highest payment rate essentially of 3 measures, the CPI and other cost of living indexes, our view is that over time that will, as we say, potentially reduce inequality as well, and potentially in a reasonably significant way. So that's just an extra point I wanted to bring into the conversation.
I appreciate that. I did note that. I wasn't sure whether to laugh or cry when I heard you say that, actually, to be honest with you, Mr Yeaman, because what you're basically arguing, as I understand it there, is that inequality is going to improve because most people are going to be worse off because their real wages are declining.
No, I don't think
that's fair, isn't it?
No, I don't think that's right. It's to do with the differences between as others are more expert in this than me, but because of the differences between the different ways that indexation applies and because of the way the system applies the highest rate, pensioners and others on welfare are going to receive the CPI, and that in some cases is growing faster than the actual cost. Now, again, I fully accept, I want to stress the point that we are very clear this is an aggregate measure and that there will be individuals who do not face that circumstance.
Understood. I do understand all that,
It's an important part of how the budget works.
Well, I mean, people are still going to be starving on income supports, Minister, so I'm not sure you've got really much of a leg to stand on there. But just, I wanted to, with Mr Yeaman, I mean, what you said this morning was that, basically, that income inequality will be reduced as benefit payments grow as a share of average wages. And the reason they're growing as a share of average wages is, at least in part, because wages are flatlining, isn't it? Like if wages were growing more strongly, you wouldn't be able to make that claim.
Wages aren't growing as fast.
Wages are going backwards, Minister. Real wages are going backwards.
So it's a simple point.
They're not growing as fast as inflation. I think we can all agree that. Sorry,
the simple point we were making was that the gap, if you like, the relativities between welfare payments and an average wage will narrow as indexation grows faster than wages. That's correct. That's the view that we are taking. Yeah. And that means that the gap between those on wages and welfare payments can narrow, and that can have a positive impact on inequality.
But in part, that's because, well, sorry, just to be clear though, in part, that's because wages are not growing in real terms, isn't it?
So the other factor to keep in mind is that when we also look at cost of living indexes for those payment recipients, that they are growing at a relatively slower rate than the CPI, than the indexation of those payments. So it's actually that factor as well, which makes us say that, in effect, those very large payment increases in terms of the budget impacts are actually going to low-income families and households and are making a difference to their budget. And on average, that difference is quite significant relative to the indices of cost of living for those recipients. So it's not just about the relativity to wages.
No, but it is in part about the relativity to wages, is it not?
That's
I'm not sure why this is so hard.
Yeah.
I'm not sure why it's so hard to accept. I mean,
well, the Treasury Secretary says it's an unusual side effect of the economic environment we're in at the moment. I think the point's just being made that, you know, the sort of automatic levers in the budget are working as they should and providing significant cost of living support to those on lower incomes. They are. I mean, it's $32.6 billion, fastest increase for, I think, for 12 years for the age
people
pension
were starving
and
before the
longer.
inflation
Senator
spike.
Look, I'm not saying that there aren't cost of living pressures, but I am rejecting, I think, the allegation that you're trying to run is that there's nothing in here or a less focus on those on lower incomes. And I think when you look at the single biggest, adjustment really is payments to flow through, quite rightly, to those who are living on those payments.
And I think you should get them up above the poverty line, Minister. That's what you should do. Mr. Yeoman, I wanted to go back. I have to say I'm a bit surprised that Treasury doesn't run this kind of distributional analysis on the budget. I mean, isn't it a pretty key requirement to understand the impact of a budget on different quintiles, or however you want to break it down, of income and wealth in our society? I mean, isn't that a pretty key measure for a budget?
A couple of comments, Senator, and my colleagues may wish to add to this. A couple of comments. We are certainly interested in inequality, and we've had this conversation, I think, a number of times at this committee. We are certainly interested in inequality and the effect of policy over time, and we look closely at indicators which, by our reading, have shown that inequality generally has been fairly steady across.
You're talking about income or wealth inequality here, Mr.
That's income inequality,
Yeah.
but we track these measures relatively closely, and so we do take a keen interest. In terms of the budget itself, which is a very large exercise, we do from time to time do analysis on discrete measures, but we don't, as a matter of course, do it for all measures in the budget because of the effort that's involved in that. I would also note that the government has made a commitment to look at different ways of measuring what matters, essentially, in terms of well-being overall for the economy. And so we are doing work, and we had some material in the budget this time around in our budget statement 4, which flags some of the approaches other countries take to that. And we are actively considering how we can increase the richness of our budget documents to capture a broader range of measures that go to those issues around inequality, but also well-being more broadly.
So, can I ask then, just off the back of that, and thanks, Joe, I'm nearly done with my block of questions, but does Treasury have a model for assessing the distributional impact? I mean, the ANU pumped this out 3 days after the budget, right? So, do you have a model that looks at this sort of stuff, or would you develop one? I mean, I find it a bit strange that we rely on the ANU, and you've made some observations about their work, Mr. Cully, and that's fine. You're well entitled to do that, but they did the work, and it is what it is, and you haven't actually disputed it. I don't believe you've made some observations, so I don't think you've disputed it. I mean, why isn't Treasury doing this work?
So again, I'll just give you a short response and defer the rest of the questions to Revenue Group. The ANU uses a micro-simulation model, which they call Policy Mod. Treasury has its own micro-simulation model called Capita. It's run out of Revenue Group, and it's used for, as Mr. Yeoman said, identifying the implications of different tax and transfer policies. It is also, I think, one of the things I would point out about the ANU work, again, an observation. What it does with these micro-simulation models, it says, well, what would the impact be on different households when all these changes go through? It's not, it doesn't take account of behavioural responses, and it's not what economists would call a general equilibrium model. So it doesn't try to work through what the impact would be in terms of, for instance, the childcare, as we mentioned in my response to Senator Hume, we expect that will increase labour force participation. That is not captured in the ANU work. And for kind of good modelling exercises, you'd want to do that. And then you would also need, if you're trying to understand the overall impacts on the economy, you would need a general equilibrium model which would try to take account of the way resources are reallocated across the economy. But if you want to ask further questions about Capita,
I will.
Revenue Group tomorrow.
Does Capita take into account those behavioural changes?
No, I don't think so.
No.
Yeah.
All
Okay, thank you, Senator McKim. Senator Hume.
Thank you, Chair. Oh, yes, sorry.
Senator Bragg.
Just on the wages issue, I usually ask Dr Kennedy a question about wages policy and how much of the wages growth in the budget is eaten up by the super guarantee increases. I know that he always likes that question. Previously, Dr Kennedy's indicated that proportion is about 80%. So, in other words, about 80% of the wages growth in the federal budget is consumed with the mandatory superannuation increases. Is that still your position?
Yes, Senator, that's correct.
Okay.
Senator Hume.
Thank you, Chair. I'm sorry, this is going to involve calculators and a lot of explanation, so just bear with me here. I just need to understand this a little better. Okay. The PFO underlying cash balance, the difference between the PFO underlying cash balance and the October budget underlying cash balance over the forward estimates is on it's on table 3.3 on page 79 of budget paper number 1. Can I just confirm that the difference between those two, the PFO underlying cash balance and the October budget underlying cash balance over the forwards is, it's 42.76 exactly, so about $43 billion. Does that sound right?
Sorry, where are you? You're saying...
Page 79.
3.3.
B,
yep.
budget paper number 1. Table 3.3.
Yep.
So the difference between the PFO underlying cash balance and the October budget underlying cash balance. So that's 224,490, and the difference between that and 181,807 is about 42.76 billion. Is that, we're all just working on the same numbers here? So make sure I'm not making stuff up?
That sounds right.
Okay, yeah. All right. So the Treasurer's speech says, and nearly all of the tax upgrades over the forward estimates have been returned to the budget, not spent. 99% returned to the budget over the next 2 years and 92% returned to the budget over the next 4 years. So can you advise how the 99 and the 92% are calculated?
I can certainly give it a go, Senator. I don't think we've got all the information required in this table to do the calculation, but what that calculation is, for memory, is tax receipts excluding GST, how much they've increased over the forward estimates and over the first 2 years, and net policy decisions as a percentage of that.
So is that then, back to table 3.3, the 9.782 or 9,782 billion total policy decisions impact on underlying cash balance, and then if you turn to page 76, about halfway down, returning over 90% of the 123.8 billion of improvements in tax receipts from estimates variations to improve the budget positions of the forward estimates. So I'm sort of trying to establish whether that, nearly 10 billion is essentially 8% of the 123.8 billion. And so it's 100% less 8% is 92%. Is that how you've got there? Does that sound right?
Yeah, I don't have the calculator with me. Well, I guess
can we
I
confirm?
do, but,
can we just get someone to confirm that? And
I mean, I think in broad terms I would say in broad terms that's sort of right, but there may be a few small differences in the underlying numbers,
Yeah, I think
categories and so on.
124 or 132 from memory, but we'd have to, we can take that on notice.
okay, yes, thank you, because it's been used over and over and over again, so I think it's important we calculate it properly. How does that then completely abstract from the 92 billion of additional spending in this budget that's on page, again, table 3.3, page 79, 92.
So the 92 is parameter variations rather than additional policy decisions.
So, right.
So that's what we went through yesterday.
Right, yes.
Yep.
Okay.
The demand-driven, adjusted basically for those economic parameters.
So, all right then. Can you then divide the change in the underlying cash balance over the forwards by the tax upgrades over the forwards. So that original 42.7 billion between the PFO and the October budget underlying cash balances by the 123.8 billion that is mentioned there on page 76 of improvements in tax receipts. Is that probably not a more accurate reflection of the share of tax upgrades that have been returned to the budget?
So the way we think about it is in terms of active decisions by government. So the 92 billion that you referred to, as Ms Reinhardt said, is parameter variation. So a whole bunch of changes to the economic outlook, and inflation is a big part of that. That has driven an increase in payments. So that's factors outside the government's control, if you like. The point of the 90% figure was to talk about how much of the increase in tax receipts was flowed through to the budget.
So, but the tax parameter variations clearly aren't an active decision of government. They're driven by factors outside of the government's control. Why would you then sort of...
Well, of the extra money that came in, we took a decision not to spend it, but to return it to the budget for budget repair.
Yeah, so
that was an active decision of the government.
That 99% and the 92%, which I've heard you repeat numerous times, Minister.
I think it's higher in the first 2 years, and then over the forwards, it's 90 or 92.
But the Treasurer's budget speech doesn't actually refer to active decisions of the government, does it? So does it?
Well, they're policy decisions. This is the normal way you put a budget together.
I sort of feel like there's sort of weasel words in there. That's all. I suppose if you.
I guess another way, Senator, to describe it is, and tell me if this is wrong from my colleagues, but another way to describe it is that if that revenue upgrade had been spent actively by government, it would have showed up on the total policy decisions line. That's where it would have come
That's
in.
right.
So that's why we use that as the comparative point.
So and it does, and the speech does refer to not spent, which is very different, isn't it? So
I think the other thing to keep in mind is historically many governments have used increases in revenue to fund additional active decisions for payments, and that is not the case, and that is a clear decision of this government.
well, okay, that's a very good point. And I suppose what I was trying to get to is if you could give me a better indication of the historical pattern of the share of tax upgrades that have been returned to the budget. I think that would be very helpful, because there is a line that is used on page 76 that is, this is far more disciplined than recent budget updates. Okay, well, let's put aside COVID, and we know why we put aside COVID, because they were exceptional budgets for exceptional reasons. Is it really far more disciplined than recent budget updates?
Yes.
Which budget updates?
Is. Well, we can go back through
Yeah,
them.
we
The
have
March
to-
one,
we
for
have to take it
example.
on notice.
The March one, for example, you got quite significant upgrade and you spent virtually all of it.
Well, I think that's the point,
that's
isn't it? There were
first
still
one.
COVID measures in that budget, which
there were
have now
some
been
COVID
removed.
measures, but not many, frankly. So there's your first one. But I think you'll go back. I mean, and yes, there was elevated spending for COVID, but the point we're making is that we have taken a prudent and responsible approach to spending in this budget. Of that 9.7 billion, I think the net spend, that is made up of a range of things like I think 85% of it is issues we inherited or legacy issues that we are having to fund that weren't funded. So even when you look at it in that context, the extra spending were to fix up issues that we inherited once we came into government.
So if you divide the change in the underlying cash balance over the forward estimates by the tax upgrades over the forward estimates, and you compare that in the March budget to the October budget, actually the March budget returns about twice the share of the tax upgrades to the budget compared to the October budget. Isn't that right?
So we're talking about the discretionary actions of government, and that's the point of this. And I think in terms of the what is the historical story around returning discretionary spending to budget or not spending additional revenue, this line in the paper makes it clear that the 7 budget updates between 2013 and 14, where tax receipts were upgraded, only 40% of the improvements were returned to budget.
So I understand the rhetoric around discipline, and yet at the same time, there is
not rhetoric,
nowhere.
it's
Well, bear with
facts.
me, because there is nowhere
This
in
is
the
not
budget
rhetoric.
papers. There's
What's in
nowhere
here?
in the budget papers, Minister, where there is a medium-term fiscal objective of balancing the budget. That seems to have been entirely abandoned. Now, I can't remember a budget where there hasn't been at least a medium-term objective of balancing the budget. Is that?
Well, I think you took it out of your last one.
Well,
you had
again,
about 8.
Well,
dropped
if you
it
would like to go
from
and
there.
compare March budgets to October budgets, deficits and debt out into the medium term, I'm happy to go there, Minister. In fact, I've got a whole series of questions on it.
Yeah, sure.
Can we do that?
Well,
I've got time. Have you got time?
We're at your discretion, Chair, and happy to be in here to
So,
help.
perhaps the
our
people-
fiscal strategy is responsible, it's honest, and we will stick to it. And I think that's in contrast to what we saw under the previous
So is there
administration.
any medium-term strategy anywhere to balance the budget over the cycle?
Well, I think you'll see from where I'll get to the fiscal strategy. We can go through it paragraph by paragraph if you like.
No, I just need to know if there is anywhere that says our objective is to balance the budget, or if there is any number
Well-
that shows that balancing the budget is even in the medium-term
Well,
projections.
I would say to that that the Treasurer and I are bringing a very responsible and prudent approach to managing the budget. The budget is in structural deficit. That deficit is in the order of $50 billion a year.
Yep.
We absolutely want to reduce the deficit over time. Absolutely, and repair the budget. And I think
So
you can,
repair the
well,
budget, does that
can I-
mean
well,
taking it to
can
balance?
Can I finish? And I think you can see the first steps in that approach reflected in this budget, where the revenue increase has been returned to the budget, so we're borrowing less and paying less on that debt over time. It also means that we have found savings to offset expenditure. We've got, as you know, the audit process that we've got underway, which will continue to apply that discipline to the budget. But we are also being honest about the pressures on the budget that we are having to manage, and the fact that we do have high levels of debt to manage. That debt is increasing. It's the fastest growing program in the government's across government at the moment. And we have other areas like the NDIS, like defence, like hospitals, like aged care, and there's a range of others that are fast on their tail.
So if you don't
to
balance
manage
the budget,
so
how are you going to manage
there
the
is
debt?
a structural deficit that we are needing to manage. So that fiscal strategy reflects the budget we've inherited and the approach that we will take to managing those challenges over time.
So perhaps the folk at the table, anybody, can take on notice the last time a budget didn't have a medium-term objective of delivering a balance or a surplus over the economic cycle. That would be terrific.
Well, we'll have to go through your 8 or 9 different
That's-
versions that you had.
Well, we had
and
9 years
absolute-
of government.
Behind a strategy, you know what's important is actually to meet the strategy. You know, which again,
I'm
you can
sorry.
have all the kind of dressing it up as you like and then not delivering
I'm
on it.
happy to go head-to-head with you on who balances budgets.
Well, those back in black cups
Senator
were a bit
Hume
early,
and
weren't they?
Minister, we're entering one of those episodes where it's difficult to distinguish the question and the answer, and it's really good when one person asks a question and then someone else answers it, and then the first person asks another question. Senator Hume, you're still within a
Yeah.
time block. Do you want to continue or?
Yeah,
Okay.
do you
Yep.
mind?
Senator Hume.
Okay. Can you confirm what's meant by limiting growth in spending until gross debt as a share of GDP is on a downward trajectory in the economic and fiscal strategy?
I guess to me it's reasonably clear, but I will make an attempt at sort of saying it differently. So this is exactly what this budget aims to do, which is to keep spending at a low level. And we talked earlier about the chart on page, I think it was 77 around limiting growth in real spending in order to reduce debt in the longer term and to put the budget on a sustainable footing.
So that was on the longer term, but I think that chart only went out over the forwards. Does that mean that once debt is going down, as opposed to increasing, that the government is free to start spending again? Or is there going to be a continual trajectory of getting the debt down? Because there's nowhere in this budget that I've seen the debt going down. Not
So
in
the
the
debt
medium term.
stabilises in the medium term.
It goes down over the forward estimates compared
But
to
it doesn't
what
go
it
down.
was.
Hang on, it goes down
compared
over
to
the forward
what you
estimates,
were
then it
doing
shoots up
because-
over the medium term.
Well, no, but you say it doesn't go down anywhere. There is clear charts in there where it does go down because we are returning money to budget repair. And in respect to your question around when was there a fiscal strategy that didn't have returning the budget to balance over the medium term, the last one you published in March 22 didn't have that.
Well,
So
I
that's
would
the
actually
last
point
time.
you to,
Well, I've got it in front of me. Over the medium term, the fiscal strategy will be focused on growing the economy in order to stabilise and reduce debt. It doesn't talk about returning the budget to balance anywhere that I can see. It targets a budget balance on average over the course of an economic cycle consistent with the debt objective.
So can I just take you to both the March budget papers and the October budget papers? Let's go to, I remember, I think I mentioned it to you yesterday, Debt 101. I know that it's in 101, because it's page 101. That's net financial worth. But we then have net debt estimates and projections and gross debt estimates and projections on page 97. And in the March budget, they are on page 98 and 99. Now, correct me if I'm wrong, but in the March budget it shows an improvement in gross debt going down, and net debt going down over the medium term. And in the October budget, it shows the exact opposite, that net debt goes up and gross debt goes up over the medium term. And that is different to the PFO estimates. Is that correct?
Well, I answered this yesterday when I said that reflects, firstly, over the forward estimates, there is lower debt because of the approach we've taken to this budget. And then, over the medium term, it reflects those three things we spoke about yesterday: lower productivity assumptions, increase in NDIS, and increase in managing the public debt. So that explains it.
And again, in the
very honest
chart,
assessment.
3.14 in the March budget and 3.16 in the October budget, it shows that Australia's net financial worth is decreasing in the October budget, but was improving in the March budget. Quite dramatic differences, actually.
And the
Is that correct?
And the difference, as we've said, Senator Hume, can be completely explained by the NDIS variation, the productivity assumption, and the third factor.
So what are the policy choices that
PDI
are being
costs.
made to remedy that situation? Or have we abandoned
we
all
can't change
hope?
the interest we pay on the debt we've inherited, right?
Well, you can change the amount of debt that you pay. You
But
could
this is
balance
interest on the
budgets.
debt.
Yep.
This is
So you can
interest
balance
on the
budgets,
debt.
and then you pay down the debt,
Yeah,
and then the interest is lower.
I understand, but we have inherited high level of debt, which we are managing, and that debt is more expensive to manage because of the interest rate. So I don't know what you're suggesting we might like to do about that, other than the decisions we've taken here not to make the Reserve Bank's job any harder. NDIS, demand-driven, actuarial report, that comes and says, this is how many people on the scheme, this is how much it's costing, that needs to be reflected. Productivity assumptions based on advice about the fact that this is a more realistic assumption going forward. So, for example, if you had won the election, these adjustments would be being made, right?
So,
unless you're going to close, you were going to refuse to fund the NDIS, refuse to accept interest rate increases. I'm not sure how you would do that. And perhaps the one variable that you probably would have continued with was an unrealistic productivity assumption.
So I suppose what I'd like to understand is whether the government's decisions, whether the policy decisions you've made have added to the government's borrowing task, debt burden.
So that is the 9.8 billion over the forwards, which is an extremely, we would say in Treasury, an extremely small addition to budget decisions. And you can see that in the chart on page 77 compared to historical real payments growth over time.
And 85% of that was legacy terminating COVID-related, flood-related expenditure.
Well, it seems to be everybody else's fault. But
No,
what
I'm not,
about
I'm
things
just being
like
factual.
the Housing Australia Super Fund, Future Fund, the National Reconstruction Fund, Rewiring the Nation? These are all things that cost, that add to that debt. Is that not right?
They add to gross debt.
Yes.
And at this point, they don't add to net debt.
They do add to gross
They
debt.
don't add to net debt.
Do they add to gross debt?
They add to gross debt.
Yes. And gross debt is seen to be deteriorating or growing over the medium term, and yet under the previous government it was seen to be declining.
What we're trying
over
to
the medium
explain to you, Senator Hume, is that the differences in that, reflected in that chart, are explainable against those three things that I've mentioned.
term. Hang on, you're telling me that debt's going up because debt's going up. And you're also saying the NDIS, yes, I understand that.
No,
and
debt
productivity.
interest. Interest is going up, so the debt is more expensive to service. So that's in the order of, what, $19 billion a year,
So why not balance
I
your
think?
budgets then? Aim to balance your budgets so that you can reduce debt so that those issues aren't so prevalent, rather than pursuing policies that actually make the situation worse and then turning around and blaming the
Well,
previous
that's if you
government.
don't believe there's any economic benefit to fixing the national energy transmission
So
network.
that's
Is
where
that
I'm
what
going.
you're trying to say?
No, that's
And
exactly where
there's
I'm going,
no
and
point
that's
in
why
that.
I asked
There's no
earlier.
point in investing in
Okay.
manufacturing and jobs through the National Reconstruction Fund. There's no economic benefit from giving people housing at an affordable level for people that are locked out at the moment. I run that line.
Well,
Go on.
that's exactly what I'm asking.
Okay.
Why I'm asking whether those productivity assumptions that you've made, or at least the assertions that are made over and over again, whether it be in the budget speech or in the budget papers, have been analysed. Are they actually reflected in the budget? Because if there were productivity measures in here that were genuine and productivity was going up because of the policy choices that your government were making, well, wouldn't those budget estimates, that fiscal outlook be better?
That fiscal outlook would be better, definitely.
Yeah.
So if we took
Yeah.
into account, but that's not how we do productivity assumptions. We have a long-held position of doing a 20 or 30-year backward-looking average on productivity.
So productivity has
Hume.
nothing to do with your policy choices.
That is not what we're saying. What we're saying is the Treasury underlying assumption on productivity is a cautious assumption which is backward-looking. We've revised it from 30-year average to 20-year average, and if you look at the chart on page 83, you see how those assumptions, why they've been adjusted, because over the last 20 years we haven't come anywhere near the 30-year average. So it is not a projection forward on what we think the productivity impact will be of future decisions, of current decisions. It's simply a conservative estimate of the past 20 years of productivity.
So we've overlaid...
Just one final question in this block, if that's okay, and then we'll be coming back to you.
So you've overlaid your PFO with a whole bunch of adjustments. Would you not then make some sort of adjustment for your productivity assumptions based on policy decisions and situation that the government find themselves in now? Because you've done that to PFO.
But Ms Reinhardt is explaining that
Yes.
it's a long-term assumption. It's not...
I understand
It's
that.
not... It doesn't jump around year by year based on different policies, because it's a measurement across the economy as well.
Surely you would
Okay.
want that your policies
Senator
to have
Hume.
productivity impacts over the next 10 years.
Senator Hume, I just want to do some timekeeping for the benefit of, thank you, for the benefit of people who may be trying to watch along and just or listen along in the building or at home, and just note that essentially what we're doing at the moment with the goodwill of the officials is we're moving across the published program up to the 6:30 dinner. And if any senators are in the building and thinking they might like to ask questions of corporate and foreign investment, they are here to answer those questions. Fiscal here and answering those questions. And so with that bit of timekeeping, we'll proceed for the next hour to the dinner break.
Okay.
We'll come back to you shortly.
Can I just ask for one enormous favour? Thank you, Chair. Just the indulgence of the Chair.
Is it a question to me or is it a question to someone?
It is a question to Senator Gallagher, because she did say that there was nowhere in the March budget papers that that suggested that that the budget, our fiscal strategy, didn't have a target to balance the budget. In fact, page 77 of the March budget did have that.
Was that in the fiscal strategy?
It was in the government's economic and fiscal strategy, page 77.
I think that's what I read out.
So if you're happy to correct the
With
record.
a lot of caveats around it.
No, it's just the government's economic and fiscal strategy. But if you're happy to correct the record,
Is there
we will
a
accept your
question?
correction.
Is there a question, Senator Hume?
Well, I don't think we should have something incorrect on hand.
Can we have a copy?
I'm sure if I'm sure if the minister needs to correct the record, she'll come back. I'd like to move on though, because we've had some senators waiting patiently.
Yep.
And I'm going now to Senator O'Neill.
Thank you very much, Chair. And, good time to, I think, ask these questions because there's been a lot of uncertainty being developed there by Senator Hume in her questions. I just want to get some things clearly on the record for people who want to have a real sense of what's going on and what's happened in this budget, not in the ones of the government that was not elected, the government that has been elected. So how has the Albanese government delivered on the fiscal strategy in this budget? What are the key things that are actually delivering on the stated fiscal strategy?
You can see, I think we were just talking about it actually, but the fiscal strategy outlines the approach that we've taken. I'm just trying to bring it up. Hang on.
Page 75 in budget paper 1.
Yeah, I'm dying under all my
your reams of paper.
My reams of different paper. So I think the budget reflects, obviously, the economic and fiscal strategy that's outlined in box 3.1. And I'm happy to answer questions on it, but essentially it's about putting the budget on a more sustainable footing over time. It's about investing in economic growth, in jobs, in getting wages moving. It's got a focus on gender equality. I guess the primary challenge that we were dealing with, and it's reflected in the economic and fiscal strategy, is that the decisions we took in this budget didn't add to the inflationary pressures that are being experienced across the Australian economy, and that we start the work of budget repair. And I think you can see that with the way that we've handled the upside in the receipts that have been coming in, how we're limiting growth in spending. The audit that I led or finance led around ensuring quality spending, which will be ongoing. We've done the first bit of work on there. Making sure that the investments we did make, so into childcare, aged care, in Powering Australia or the climate policies, expand the productive capacity of our economy, so where we did spend, that we were spending in ways that delivered an economic dividend, and importantly in the short term doesn't add to inflation, particularly in those first 2 years. And then there's an element on the tax side where ensuring the compliance and integrity of the tax system to make sure that we are in a position to continue to fund high quality government services. So all of the decisions that are reflected in this budget, I think, align with that strategy, and it's important, that you not only have a strategy that's published in the budget papers, but it's actually one that you align with your decision making and commit to.
So your budget needs to be more than a set of announcements. It actually has to be a strategy that you're implementing.
Yeah, and that you follow the strategy. You don't. It's not just published because you have to do it as part of the Charter of Budget Honesty, but that it actually guides and shapes the decisions you make, and how you implement those decisions.
So Australians who really want to understand what the government's doing can find the answer on this page in budget paper number 1, page 75, telling you exactly what it is that the government's doing, and that is what the budget has done. Could you explain, I think something that's been maligned in the last line of questioning, which is the commitment by the Albanese government to return the majority of tax receipts upgrades to the budget. And how does that compare with recent budgets?
Yeah, so that's, I think we did cover that with Senator Hume's questioning, but we did see an increase and welcome improvements in tax receipts, and the decision that the government took was to return the vast majority of that, around 90% over the forward estimates, to start the work or to support the budget, basically, and assist with budget repair over time, but also, on the other side, not to spend in a way that added to the inflation challenge.
So there's been a lot of commentary embedded in the statements and questions that you've been receiving from Senator Hume. I'd like to understand very clearly, how does the forecast in real spending growth in this budget compare on average to other periods?
So that the papers go to that on page 76, and we did touch on it a little bit, but I think you can see that I think this was a challenge that the Shadow Treasurer laid down too, around limiting real spending growth, and you can see that we more than exceeded, I think, the target he set, but it's very modest compared to times in more normal times. You know, not even comparing pandemic to pandemic. It's a very prudent approach to spending, and I can tell you, there is no shortage of requests to support very meritorious proposals from across government and outside of government. But this budget and the decisions we took had to reflect the economic circumstances we were dealing with, the approach that we're going to take to managing the budget in a fiscally responsible way, delivering on our election commitments, dealing with some of those legacy items, zombie measures, all those types of things, tidying it up, and managing to do this as well. And that was because we took that approach around saves and redirection of funding, which is an important part of this budget.
So again, that goes back to those two key words that we were discussing in the earlier questioning, the responsible nature of this budget and also the cautious nature of this budget, mindful of its impact if that sort of discipline isn't followed. Now, there was some commentary about the former government and its March budget. Can I ask you to clearly put on the record a comparison between the savings delivered in this budget compared to the March budget?
I don't recall any savings in the March budget, and but I can be corrected if I'm wrong. I don't recall any. The work we did in the first few months of this government has identified $22 billion in saves and or it's a mix of redirection of funding in existing portfolios. It's about 50-50. It's about, I think, just over 10 billion in savings and about maybe 11.5 billion in reprioritisation, redirection of funding from within existing portfolios that was also agreed by the ERC through the budget process.
Okay, so as you said, there's always meritorious projects, but you have to be responsible, just as people have to be when they're managing their own family budget. There might be many things that you want, but you have to do the things that are going to be the smartest investment for your budget, your family, as well as for the country in this case. again, a number of assertions by previous questioners about the fiscal strategy outlined in the former government's March budget. Could you clarify whether the fiscal strategy outlined in the previous government's March budget included as part of it an objective to return the budget to surplus?
Well, I did have it here.
I'm just looking at the page.
I don't think the word surplus is there. To be fair, there was a targeting a budget balance on average over the course of the economic cycle, consistent with the debt objective. We deal with that in our fiscal plan, with limiting growth in spending to kill gross debt as a share of GDP is on a downward trajectory, while growth prospects are sound and unemployment low. So, that's, again, the discipline that we will bring to managing the budget.
And to be
Well,
to be clear, there is no statement of the word surplus at all in the document that you just provided to
I'm
the
just
Senate.
being clear, no surplus and no balance over either the forward estimates or the medium term in this budget.
Well, I would be
Is that
pretending,
correct?
like, there is a budget in structural deficit. That is what we have inherited.
and-
We are being honest with people
Just trying to
about
find out
that.
what
That
you're
is
doing
the
about
approach.
it.
Like, we can have glib three-word
go
slogans.
with the call
We could
and
put
Sarah
out
Neal
mugs
has
that
the
say
call.
back in
No,
black
but
and
you
all the
can't
rest of it and
reinvent
hope on a
history
wing and a
with the
prayer
next
that it
question.
works. But let's be honest, and I think the Australian people want us to be honest
Exactly.
with them about the state of
Exactly.
the budget. It is under
hang on, the
enormous
budget is your
pressure.
responsibility.
Senator O'Neill has the call.
It is under enormous pressure. $50 billion. We just found $22 billion in 6 months. That was hard work. Hard work. It was hard work, and it's largely one-off saves, right? The budget is in a structural deficit in the order of $50 billion a year. That is a big challenge for anyone.
But you've raised the white flag and said
No, we
can't
haven't.
fix this over a decade.
It's absolutely not true at all.
So-
What we have done is be very honest and upfront with the current state of the budget that we inherited. I think there was a level of, pretending going on.
Exactly.
Under the previous, and that's probably a generous word to say pretending, that the budget was fine, there was no issues, we could keep spending and do all this, and never increase taxes, and it's all just going to magically work in the end. Well, the reality is, and this is what the Treasurer and I have been saying, is there is a $50 billion structural deficit that we have inherited, that we are determined to fix because we want to pay down debt and we want to return the budget to surplus over time. But there is a massive challenge that we have to deal with first, including how do we pay for the NDIS, how do we pay for defence, how do we pay for hospitals, how do we manage $1 trillion of debt? Honestly, can we have some honesty here?
But so this is more a state
And
of
so
the
what
nation
you
than a
want is
budget.
a glossy document that goes, woohoo, we're all in surplus in a few years' time. It's not going to happen because of the structural deficit the budget is in. And it would have been your structural deficit, it happens to be our structural deficit, and we are determined to deal with it, and this budget is the first step along that journey. There is much more work to be done and a conversation to be had about what Australians value, what they want to see funded, and how we get there.
Senator Hume. Senator O'Neill has the call.
Yes, she does.
Thank you. So thank you for the clarity of your response, Minister, because one of the things that I think has been so frustrating for Australians is this embroidery of the truth, if I can be generous, about what was going on. And we've heard it again today in claims by the members of the opposition about their fiscal responsibility, yet the facts belie the claims that they're making. So I want to ask you very, very clearly, when was it that last included as an explicit objective of government fiscal strategy? When did that occur?
When did a
when did a budget surplus?
I would have to go back, I think, through there were a number of changes to the fiscal strategy under the previous administration. I think they had quite a few, so we could take that on notice, Senator O'Neill. I'm sorry, I don't think I have that with me.
So this discussion we've had just in the last half hour with claims that they were directed toward, they were heading towards a surplus. We've had some discussion of. We've already clarified that in March of 2022, there was no claim in the fiscal strategy of the former government that they were heading towards a surplus, yet they continue to sort of try and pretend that. So I would be really interested on notice, or as soon as it can be provided, that the last time there was an explicit objective of government fiscal strategy to return the budget to surplus. Thank you.
I'm going to go, unless you have more questions, Senator O'Neill, because you're within your time block, I'll go to Senator Pocock.
Thanks.
Senator Pocock.
Thank you, Chair, and thanks everyone for being here and taking our questions. It's wonderful to see a bevy of macroeconomists before us. I'm currently chairing a select committee on work and care, and I'm delighted to have my deputy chair alongside me and another member, Senator Bragg, with us as well. And it's made me think a lot about macroeconomics. And I guess I have an opening question for you, which is, has the macroeconomic group in Treasury given much thought and undertaken analysis of the long-term shift in the essential investment that we need to make in our care economy? I'm thinking about the demographic shift, the ageing of our population, the fact that our community wants to look after people with disability in different ways, and the shift in our labour market, which has really changed the kind of early childhood and education care system we need. This is, I think, amongst our most significant macroeconomic challenges. So what kind of thinking are you doing about the way we respond to that, looking ahead?
Thank you, Senator, and I'll ask my colleagues to add to this general answer. It is certainly an issue that we are well aware of and thinking carefully about, and it's coming up in, as you say, a very wide range of different areas, and it tends to come to us in different forms based on different policy challenges at the time. So, for example, as you said, in the skill shortages, there's been a long and active debate over the recent year and a half or so around skill shortages in the economy and the labour market, and it's very clear from all of the evidence, including from the former National Skills Commission and elsewhere, that many of the long-term needs in our labour market are going to be in the care economy and in the services economy. That's been an ongoing trend for some time, but it's continuing. There's a range of other areas that we've canvassed, and I'll ask my colleagues to add if they have anything to add. But I guess I can, as an opening gambit, I can assure you that it's an area that we're well attuned to and aware of, and we're seeing it come up across a range of our different work streams.
Probably the only thing I would add is that the government has made a commitment to introduce an intergenerational report in the middle year of each term, so there's thinking's already started to get underway within Treasury around what that intergenerational report would look like next year. And one imagines that in the same way that past intergenerational reports have identified issues around ageing and pensions, that it's going to have to address issues around the care sector. But fiscal group colleagues might have more to add on it.
Thank you. We know from Minister Gallagher's own words that if we can make investments, and they're not very mysterious, the kind of investments we need to make, and we lift our female participation rate, say by 6%, that we can lift GDP by 25 billion, and that's halfway to where we need to be if we're going to take the action we need to on the fiscal circumstances we find ourselves in. What are you thinking about? What are you doing? And what policy levers are you working on to raise the female participation rate and lift GDP?
Well, I can answer the question, I guess, as it relates to the long-term trajectory around the female participation rate. I think, again, in response to earlier questions when you weren't here, Senator Pocock, there's a box in the budget which looks at parenting, early childhood education and care and labour force participation, and it's got a pretty useful chart in it which shows that there's been rising female labour force participation since 1978. I think that's as far back as that particular labour force series goes, but there still is a fairly high differential between men and women. It's of the order of 9%, So I guess there's an issue around to what extent there's still room to grow the female labour force participation over time, and then what the macroeconomic implications of that would be. There were a suite of measures that were in the budget, which colleagues can probably talk to at greater length, around childcare support and paid parental leave, which are intended to deliver further improvements in the participation rate. And we do know that relative to some countries overseas, such as New Zealand and Sweden, that there is still potential for female labour force participation to grow over time.
Can you just state which paper you're referring to,
Yes,
what table?
yes, sure. It's box 2.4 in Budget Statement 2 on page 60.
Thank you.
The work on this is split across, so we look at the macroeconomy and the broader trends in the macroeconomy and the impacts of various policies, but our colleagues from Fiscal Group, and particularly Social Policy Division, look at new areas of policy work in this space. So I'll just ask if my colleagues have anything to add.
Yeah, so the things I'd add, first of all, Fiscal Group is responsible for the intergenerational report, and that will show some of the significant pressures around a changing demographics in Australia, and you point to some of the really important issues around the care economy. That report tends to be based largely on the actual longer-term fiscal impact, but Treasury and many departments across government are particularly interested in the sort of micro, what does it mean for people? The recent budget measures around childcare and paid parental leave are targeted squarely at increasing participation for women, but also supporting cost of living for families. Some of the other things that are being undertaken as part of this budget include the requirement that the Fair Work Commission consider gender equity when it set minimum wages. There's action to introduce gender budgeting in the way that budget measures are considered. There's also work on setting up a new group to actually look at the gender pay gap, and there's a 1.7 billion women's safety, homework and community measure. So there's significant measures in the budget to actually address this issue. And there's also, while the NDIS estimates variation has a big impact on budget, it is also much larger payments going to recipients, so that in itself is a positive thing for many recipients.
So I agree there are things in the budget that move in the right direction, but I wanted to ask your opinion as macroeconomists, what your view is about giving a tax cut to the value of 250 odd billion, which would, if redirected, be able to go much further on paid parental leave, on childcare. For example, we could make childcare free, we could increase paid parental leave to the international standard of 52 weeks. That would be easily accommodated within those stage 3 tax cuts. So I wanted your reflections on those as economists.
So, Senator, to be as helpful as we can, I think I haven't, and I'm not aware of, I can ask my team if they've got anything further to add. We haven't done, if you like, detailed work on
the
specific
PBO
options
has.
in that space. Yes,
those figures are available.
Understood, Senator. And we ourselves haven't, to my knowledge, sort of modelled the macroeconomic impacts of those specific policies on that scale that you describe. As I said, we've been focused on some of the government's measures in the space of childcare, and the Women's Budget Statement, I think, includes quite a lot of analysis that the Treasury has contributed to as well. And of course, there's a balance of issues that we need to consider from a macroeconomic perspective. So there's short-term budgetary constraints. There are broader issues in the tax system that need to be weighed, and there are also participation benefits to be had as well. So I think I'm not trying to be difficult, Senator. It is a complex issue and one that we haven't looked at in that level of detail, to my knowledge. But it is one we can continue to assess.
I wonder, Mr Yeoman, if you could point me to any economic theory which says giving a $9,000 pay cut to a man on over $200,000 will have any impact on his participation in the labour market versus giving free childcare to a woman on minimum wage, which we do know will have a very significant effect on her participation in the labour market.
So we agree certainly that boosting female participation is a high priority and that it will have longer term economic benefits, and we are advising government on ways to continue to improve that productivity, that participation outcome for women. I think there's a separate question then around not every policy is simply looking through the lens of participation, so other policies are there also to address issues such as bracket creep and tax equity and fairness inside the tax system and broader incentives across the economy. So I'm just trying to make the broader point that there are other things that can also impact those decisions, including fiscal sustainability.
But would you agree that there isn't any economic evidence which would suggest that tax cut will make any difference to labour market participation?
Look, I think our colleagues in Revenue Group would have something further to say on this as they look at these issues closely as well, and also have macroeconomists in that group. Certainly, we are conscious that there is evidence that higher marginal tax rates for different individuals can lead to changes in participation outcomes. But I certainly agree with your general thrust that for women who are more marginally attached to the workforce in particular, these sort of benefits you describe will have a larger impact on participation.
Much larger, thank you. I wonder, have you done any analysis of the brief period during the pandemic when childcare was free and what kind of impact that had on any macroeconomic indicators?
We do know that it reduced inflation.
Well, there's an important argument in its favour.
So short answer is I'm not aware of. We haven't since the pandemic. Obviously, there's been a lot of policies to look back and assess. I'm not aware of it. It could be that has been work done that others are tracking, which happy to have a look at that, Senator. But from my perspective, I haven't seen any definitive studies of my own or our own work that looks at that issue. But it's a good question.
Very exciting natural experiment for an economist to consider. I wonder, have you done any analysis of what superannuation payments on paid parental leave would do to help make sure that women who spend a lifetime in care of others while working don't enter a lifetime of an old age of poverty?
I'm just looking at my colleagues.
Oh, sorry. Superannuation was not. Yeah, I don't think we would have.
The reason I'm hedging a little, and apologies for this, Senator, is that so our colleagues who are from Markets Group who look at retirement incomes as a whole, I'm well aware that there have been some quite detailed studies in recent times around retirement income interactions and incentives for a whole range of these issues that you're describing, and so I'm not personally familiar with exactly what was contained in those reports, but my colleagues may be able to provide more assistance around whether those reviews did talk to that issue specifically.
And any thoughts on taking, for example, the very sizable tax benefit for older men in their superannuation tax benefits and putting those to work, for example, for free childcare? Any analysis of that kind of swapping or switching and the impact that would have on GDP, on inflation and on the participation of women?
Not to my knowledge. No, I haven't seen any analysis that looks directly at the switching that you've described. I mean, there's been a long discussion around superannuation measures, tax measures, and there have been separate discussions around participation for women and childcare. I haven't seen the two connected myself.
I would say that the Women's Economic Equality Task Force, they're shaping their own agenda, but I have no doubt that some of the issues you raised will form some of their advice to government.
Great. I'd love to see them consider that kind of swap. I'm almost finished. Just a couple of questions about the wellbeing paper included in the budget paper number 1. The Treasurer made a comment leading into the budget in July that a wellbeing statement would be the focus of the budget. What we have actually is a discussion paper about wellbeing. I'm just wondering what consideration is being given by Treasury to what should be included in that wellbeing measure. My colleague Nick McKim, Senator McKim, mentioned inequality. I'm certainly voting for that as an important measure, but I wondered whether consideration's been given to other measures like child poverty and the health of the climate.
Yeah, so I think it's a fair assessment to say this is an initial foray into this issue. It's a other countries that have introduced measuring what matters type assessment or wellbeing budgets have really consulted with the broader community on what the right measures are for their country, and the Treasurer has made it clear that he is very keen to do that as well. This is an initial assessment which draws on the OECD measures of wellbeing. They're kind of internationally accepted, but are they appropriate for Australia? I think it's a fair question to ask, and that's what we'd like to do over the coming months, is to have a look at starting that conversation with the community around what are the measures that matter for Australia.
And I'm interested in your view, the ways in which a measure can be put in harness to actually make a difference. You know, if reporting fixed things, then the women's budget would have fixed inequality, gender inequality 30 years ago. And similarly, pay equity measures, we've got them by the bucket load. They've made no difference to a stalled gender pay equity picture. How will the wellbeing budget measures change what is done, and how will they avoid being a tick-the-box exercise?
So I guess I have a more optimistic view, and maybe that's not my role here today, but I'll share it with you. Measures like this, particularly gender equity, pay equity measures, they may not impact the year after they're published, but over time they influence the public debate, and I would hope that something like Measuring What Matters would give us the opportunity to equally put out in the public domain what the significant measures are, which then engenders debate and can make change.
Thank you. Thanks, Chair.
Thank you, thank you very much, Senator Pocock. Senator, who would like the call? Senator McDonald.
Thank you, Chair. Minister, can you explain the breakdown of responsibilities between the Treasurer, the Minister for Energy, the Minister for Resources and the Minister for Industry in relation to gas policy?
It's a group of ministers working together to solve a challenge which has intersections across portfolios. I'm also involved in that group. So because we work collaboratively and as a team, and because we each have a single ministry and we don't have one person with multiple ministries, so this is the way this government works.
So why is the Treasurer leading this work as opposed to the Energy Minister?
Sorry?
Why is the Treasurer leading this work as opposed to the Energy Minister?
The Treasurer is playing a coordinating role in terms of bringing all parts of government who have an interest in this to work together, but it should be seen as a coordinating role. He's doing a lot of the work alongside the Minister for Energy, Minister for Climate Change, Minister for Industry, and myself. I think that's essentially, and sorry,
Resources, I think you covered.
Minister King. Sorry, I had her in the top of my. I thought I'd mentioned her first. Maybe I mentioned Industry twice because they share that department. But yes, Minister King, Minister Cusick, Minister Bowen, the Treasurer, and myself. And we are working together and then providing advice to the Prime Minister.
Can I ask which agency is leading the policy response that the Treasurer has alluded to in many appearances this week to current pressures in the Australian domestic gas market?
Well, it's, you know, it depends on what part you're looking at. You know, if it relates specifically to Minister King's area, then her department's leading that. If it relates to the Treasurer's role, then he's leading it. If it relates to the energy portfolio, then Minister Bowen is leading it. So it's a very collaborative way of working. Secretaries are also meeting, secretaries of our respective departments, and so they are working in the same way to support the Minister's decision-making and progress.
Is there an interdepartmental committee or working group coordinating this work?
Well, the Secretaries group that's meeting is doing that role.
So is that what it's called, the Secretaries group?
I'm not sure of the formal title of it, but there is a Secretaries group supported by senior officials.
How many times would have it met on this issue, on this policy agenda?
Well, I mean, it depends how far you want to go back. Day one, essentially, when the gas crisis landed on our doorstep, right up to now, I'd have to take that on notice.
Could you take that on notice, please, with a list of dates? Do members of the Minister's offices attend these meetings?
Sorry, do
members of the Minister's offices attend these meetings?
There is a staff role in that, so I'll take that on notice.
Was this group convened specifically to enact this policy response, or is it a pre-existing group, the Secretaries group?
I'll take that on notice.
Thank you. So the committee, or the agenda for this committee was formed on day one, is that right?
No, you asked me how many meetings have been had in relation to issues, I think in relation to gas, and I'm going to say that there were a lot of meetings over this last few months dealing with a range of different issues, and as they have been dealt with, the group that's meeting now, the work plan before us, is to deal with the increases in energy prices that were outlined in the budget and looking at policy responses to that.
Okay.
But we have been dealing with supply. We've been dealing with the fact the lights were going to, go out.
Thank you, Minister.
In
I'm
May.
just trying to understand, is there a specific agenda that this policy group, this policy agenda, is it specifically identified under the Secretary's group, or is it an item that's touched on, on an ad hoc basis as need be?
The group that's meeting at the moment, the groups that are, the Secretary's group that's supporting the Minister's group, are dealing with options for government's consideration about managing or responding to the issues in the energy market, in particular sharp increases in price.
And so it provides advice to all the ministers, not just the Treasurer, in this regard?
Yes, the agencies are providing advice and options to all ministers.
Is the Department of Prime Minister and Cabinet involved?
Yes, they would be. Yes.
Is the Prime Minister or the Prime Minister's office directly involved?
I will take that on notice, but yes, they are involved. In a sense, the Prime Minister has asked for this work to happen so that the government's in a position to make some decisions. So we are supporting the Prime Minister, obviously.
Is there a timeline for a recommendation or a solution?
I think the Treasurer's been clear on that this week, that he would like, or we would like, to be able to take some decisions by the end of the year.
Has the department or this group met with any, has the department met with any stakeholders to canvass or discuss possible solutions to the current pressures in the domestic gas market?
Well, stakeholders, I'm aware that stakeholders are engaged in discussions. Relevant stakeholders to each minister's portfolio, obviously.
So who should I be directing these questions to? Is that Ms Kelly or Ms Reinhardt?
Ms Reinhardt.
So I can, the main avenue for discussions with stakeholders in the energy market is through DQ, Department of Energy, Climate, Environment, Water. So they are the main department that engage with stakeholders in the sector. And I think Mr Fredericks and Mr Duggan talked about extensive engagement with stakeholders at their appearance.
So has the department canvassed with stakeholders a possible levy on energy producers?
So I'm not aware of any discussions like that, but then I wouldn't deal with a levy in fiscal group.
Has the department or minister's office canvassed with stakeholders direct subsidies for electricity generators?
So I just want to be really clear. Treasury Department is assisting with looking at options, but stakeholders would be dealt with through DQ, and so I'm not able to answer questions about consultations that they would have.
Yeah,
but
it's a broad whole of
the
affected
department-
ministries approach.
Has the department done any modelling on increases or substantive changes to the PRRT?
Again, that's a question for Revenue Group rather than Fiscal Group.
You haven't met then, I will assume, that the department has not met with stakeholders on possible new taxes with resource companies?
So I've made it clear
engaged?
that we haven't met with stakeholders. Any stakeholder discussions have
Any
happened.
stakeholders at all? You haven't spoken to any stakeholders about
So the Department
new...
of Climate Change and Energy has had any discussions that have been held through that department, as is appropriate, as the main agency that connects with stakeholders in this industry.
Right, but you would be aware of those through the Secretary's group, if there was stakeholder engagement?
So I'm not aware of those discussions. I'm not in the Secretary's group.
There is a lot of discussions
We're
happening.
well aware
Like,
that we're
there's
so
aware of
many
the
discussions that there are
There's
discussions
so
taking
many
place, but we
happening.
haven't been directly involved in
Yeah.
those with the stakeholders, as Ms. Reinhardt said.
I'm just trying to ascertain if there is a group that's meeting with purpose to work out these policy options.
yes, there is. Tick.
Tick, great. And so they're feeding back that they're having engagement with stakeholders on these various policy options that I've put to
Well,
you.
they're engaging with stakeholders as you would expect ministers to do. I don't think it's any secret this work is underway and that government's considering it. Unfortunately, this is probably something that should have happened a few years ago. It didn't happen, so now we're dealing with it now and responding to the challenges that exist, and stakeholders are being dealt with in accordance with normal ministerial engagement practices.
Can I turn to the Secretary's opening statement, which talked about policy responses could take many forms, but in the current circumstances of generalised price pressures, they need to be mindful of not contributing further to inflation. This would suggest to us that intervention that directly addresses the high domestic thermal coal and gas prices are more likely to be optimal. Can you confirm, Mr Acting Secretary, whether this intervention you're referring to is a price intervention or a taxation intervention?
It's a broad point, Senator, that we're trying to make the broad point in the context of the overall response and the driving factors behind it, most notably the war in Ukraine, that in this circumstance, we're trying to draw a distinction between, in this circumstance, we think that there is a greater case for direct intervention that targets the price in the short term, as opposed to allowing the market to operate in its normal functioning way. So, as the Treasurer has said, all options are being considered by government in this space, and that covers the full suite. But we're simply trying to make the point that in a world where you have disrupted global energy markets and you have a temporary external shock, there is a greater case than perhaps normal to intervene directly to bring down the price in the short term.
So, if you've indicated that this intervention would be more likely to be optimal, can you confirm whether there would be any effect on inflation?
Under which model? Under which option, Senator?
Well, you've told me any option, so you're referring to interventions that directly address the high domestic thermal coal and gas prices are more likely to be optimal. So this optimal intervention, do you think that that will have an effect on inflation?
Well, it depends very much how it's designed and defined. I think from our perspective, what we're trying to illustrate here in the opening statement is simply that measures that act directly onto the market to bring down prices are likely to be more effective in the short term, given the nature of the shock, and that any measure that's applied should be mindful of not exacerbating inflationary pressures.
Have you done any modelling on this and the various options that are being considered on the effect on inflation?
Well, I think, as Ms Reinhardt said, there are a full suite of options that are being considered, as the Minister said, with purpose currently. That work is ongoing and hasn't yet been completed. So one of the factors that will be taken into account, along with many others, I'm sure, is the inflationary impacts or potential inflationary impacts of different measures. But it's one of many factors that will be considered, I'm sure, as part of that advice.
Right, but you are doing modelling, you are commencing that work now.
So we're assessing a range of options across a range of fronts, and one of those things that I'm sure the government will be interested in is how it will impact on the broader macroeconomy as well.
I'm sure they will be. Have you engaged with the Department of Industry, Science and Resources as to what effect intervention would have on the broader gas and coal market?
Yes.
Very good. Can you detail this? Was it modelling or consultation?
Well, it's all of the discussions.
Analysis? And based on their understanding of the market and their discussion with stakeholders. Well, the discussion of the Department of Energy, Climate, Environment and Water.
So that you've engaged with that department as to...
And DISR, in terms of the impact on both the electricity, and the resources market as a result of any changes that might be considered.
Okay, so that is going on. That the impact onto the coal and gas market.
We'd have to consider
the
all
analysis.
the factors.
Yeah, I mean,
Okay.
ministers have asked
for options to be considered, and the work that the department's doing are analysing those options and then providing that advice to ministers so that we can provide advice to the Prime Minister and our Cabinet colleagues about the best way forward.
Again, to the department, you named intervention as an optimal approach. How would you identify it as optimal without proper modelling?
So, as I said, and I think the statement makes clear in its introduction that we're trying to give a sense. We said this is a very complex area and there are many different aspects that go into this analysis. What the Secretary was looking to indicate here is that because of the nature of the shock, so in a traditional, he was trying to draw a contrast. Traditionally, we would have said if you had high prices in the market, that you would, rather than intervene, you would rather allow those signals to flow through the market. What he was trying to drive to was, in this circumstance where you have a war in Ukraine, which we expect to be hopefully temporary, which is having a very disruptive impact on the market itself, that there is a greater case for direct intervention into the market. Now, of course, that all has to be weighed very carefully against the things you described, which are the broader impact on the market and its operation in the longer term, on investment, on inflation, and we are very, very aware of that. We're simply trying to point out that there is a greater than normal case for intervention into this market currently because it is not functioning in the way a traditional market would operate.
APPEA has referred to the intervention that happened in Argentina at the beginning of this century. Will you refer to some of the other industry experiences or nation experiences from market intervention in this regard?
Certainly part of our remit across all departments at the moment is to look at external experience as well as recent domestic experience.
I'm interested in the assumptions in Budget Paper 1. I want to get a better understanding of the forecast commodity price movements in the resources sector. Can you walk me through the thermal coal price assumptions for this year and for each year throughout the forwards and out years?
I'll ask my colleague Mr Power to speak to that.
Senator, for quite a while in the budget process, you'd be aware that for commodity prices, including thermal coal, met coal, and other commodities, we take a starting point based on recent spot prices, usually a 20-day average, and then we take quite an explicitly conservative approach to where those prices move to. We have a longer-term anchor for those prices. So for thermal coal, for example, that anchor is $60, and for met coal, for example, it's $130, and the prices glide from the recent spot prices to those anchor points over 2 quarters, and in the budget, that position is reached at the end of the March quarter, 2023.
What is the anchor price assumption for LNG?
For LNG, Senator, it's slightly more complicated in the sense that export prices, obviously there are contracts which are available that are in place for those. There is a small amount of gas which is available for the spot market, and so we combine those two elements. So in the LNG case, we express that as $1 per tonne, and the assumption is that it glides from $934 per tonne to $630 per tonne. And it's the combination of those two elements I just mentioned, the contract price, which is linked to oil, versus the spot price, which is more fluctuating.
How about for natural gas price assumptions?
Well, for LNG export prices, that's what we assume for domestic gas, for example. That is fed into our own inflation forecasts, and we talked at the start of the session about the consultation that we've done in the sector to come up with essentially gas prices which feed into retail prices. We focus there on retail prices. We don't, if you like, forecast directly the wholesale price on for natural gas. We've focused on retail prices and how that's fed into the retail bill, and essentially we've arrived at estimates that over 2 years there would be 20% rise in retail gas, domestic gas prices in Australia.
So what is your anchor price that you've used there?
Well, for
natural gas?
For natural gas domestically, for the costs that retailers face, that is based on their hedging arrangements, their longer-term contract arrangements, we've assumed that there will be a 130% increase in those costs that retailers face based on their contract prices and their hedging strategies. And then obviously that's about a third of the retail gas price. It's not the total component. And so if you like, that is the input component to having a 20% rises across 22-23 and then 23-24.
And what is the anchor price? What is your starting number?
Senator, we don't, for our commodity assumptions, because they're primarily there to underpin our revenue assumptions, and because for revenue purposes it's the export price that matters most for our calculations. So the standard approach we have of current price gliding to an anchor point over 2 quarters is built around the export price, which, as Mr. Powell said, is largely linked to the oil price assumption that we have, and that goes down to around from $900 down to around $630 a tonne.
Yeah, heaps. Thank you. How far out do you forecast all of these prices?
Sorry, could you repeat that? I just didn't catch the end.
How far out do you forecast all of these prices?
So on that, we forecast we have 2 years worth of detailed macroeconomic forecasts, and so we've taken a specific view on electricity and gas prices for the 2 years that we've discussed. Beyond that, we assume that prices grow at a standard rate alongside inflation, but we'll continue to monitor that as time goes by.
Okay, so the longer term pricing assumptions, I'm sorry, could you just explain that again? You've put them out to 2 years, but excuse me, how do you explain the longer term pricing assumptions?
So our traditional practice, as I said, I think earlier in the committee in the morning, earlier in the afternoon, was in the past we haven't specifically forecast electricity and gas prices in this way because it hasn't been a significant enough factor for the overall macro forecasts. Given the current market conditions, we have taken a view on coal and gas price, retail coal and gas prices over the 2 years of the detailed forecast period. Beyond that, we have not got a separately identifiable electricity and gas price forecast. So we essentially grow electricity and gas prices in line with broader inflation across the economy beyond that point.
Okay. Okay, so these are the same forecast assumptions for energy commodity prices used in the forecasting of energy prices over the next few years. Is that correct?
The assumptions we've just gone through, Senator, are the ones that we do use for forecasting energy prices, domestic prices. They feed into inflation.
And these are the same assumptions that the Energy Department uses?
These assumptions we've come up with based on consultation with the Energy Department. That included DISO, it included DQ, and it also included a number of consultations with the energy regulators and industry participants, market experts.
Right, so they are aligned. You're using the same assumptions and the same forecast prices.
What I can say to you is we, in the consultations that we've done, we have consulted with them, and the assumptions which are in the budget, if you like, are the collective view of those departments at the time that we put the budget together. Obviously, as time moves on and different things change, then they may take different assumptions over time. So
are you assuming that energy commodity prices are not the driving force behind increasing energy prices then?
No. So obviously, as I said, the prices and the arrangements that we use to anchor, for example, our inflation forecast, draw on, for example, forward prices for those different markets. So, for example, electricity obviously draws on forward prices for coal and gas. And so all of that is built in, if you like, into the way that we develop those assumptions.
Okay, so you've incorporated increased renewable penetration, increased spending on transmission infrastructure into the assumptions for increasing energy prices.
Well, as I said, Senator, that when we look at, for example, each of those markets, we look at the forward prices which are in those markets, and those markets are quite good at incorporating both the prices of commodities and, for example, those measures and expenditures that you mentioned. So we don't as Treasury, bottom-up forecast each of the components. However, those markets, those forward markets, do take into account that information, and we use those forward markets to help develop these prices in consultation with the bodies that I've mentioned.
Okay, just final few questions, Chair.
Senator McDonald, while you're pausing,
Yes.
I'm advised that Senator Rice has just 5 minutes of questions and that there will be an opportunity for you to ask more questions. So I'm wondering if you're happy for me to give the call to Senator Rice.
When will that be that I have the opportunity?
When I announce that opportunity shortly.
Shortly, excellent. Thank you.
Senator Rice.
Great, thanks, Chair. Thank you. Look, I want to go to the Jobs and Skills Summit. A specific element of the Jobs and Skills Summit, and that's about LGBTIQA plus representation or lack of representation at the summit. So in drafting the issues paper, did Treasury consider that barriers to secure and well-paid employment included those experienced by trans and gender diverse Australians, including significantly higher rates of unemployment and workplace discrimination?
Sorry, Senator, we've just been joined as you've been speaking by the relevant officials, and they may have just missed the very front end of your question. Apologies for that.
Is it the summit or the white paper?
The
the issues paper.
The issues paper, yeah.
Sorry, I didn't catch that question, Senator.
Okay, so it's basically in the Jobs and Skills Summit issues paper, where you were looking at barriers to secure and well-paid employment, was the barriers experienced by trans and gender diverse Australians considered, which includes significantly higher rates of unemployment compared to cisgendered people?
Thanks, Senator. Victoria Anderson, Acting Deputy Secretary of the Employment Task Force. It wasn't specifically called out in the issues paper from memory. However, in the context of the employment white paper, which we're preparing now, we are looking at barriers to participation for all sorts of, I guess, cohorts who have historically faced disadvantage in the employment market. So that would include the cohort you've mentioned.
So in terms of it not being included in the issues paper, was that an oversight or was it?
No, I think the issues paper didn't cover every single issue. It was trying to, I guess, focus on the core issues around the summit of full employment, growing productivity, looking at the opportunities that come from a full or close to full employment environment, which includes participation of disadvantaged groups. So whilst it wasn't called out explicitly, it was certainly in our thinking, and there were probably other areas that weren't called out explicitly either, but it doesn't mean they aren't under consideration.
Okay. I mean, I understand the issue was raised with the Treasurer in the lead up to the Jobs and Skills Summit, and is it correct that of the 140 participants, that there were 0 invitees or attendees representing LGBTIQA plus communities?
I'd have to take that on notice, I think, unless Mr Latimer is aware of any explicit groupings.
Senator Nick Latimer, Acting Assistant Secretary in the Employment Task Force. There were no organisations which specifically represented those communities. However, we didn't collect, as you would expect, that information from attendees themselves.
I'm sorry, I can't read your name as Anderson was just saying, you're saying that you were actually, in terms of canvassing the groups prior to the summit, they were considered, and yet, I mean, what criteria were used for who attended the summit so that those voices weren't considered significant or important enough to be at the summit?
I don't think we would say they were not considered significant or important enough, but from the outset, the government indicated it was quite a limited number of attendees. In terms of who determined the attendee list, that was quite a serious matter of consideration between ministers. Again, I don't think there's any reflection on any particular groups, but not every group was able to be represented.
Okay. Were there any separate LGBTIQA plus forums held in the lead up to the summit, as there were for other marginalised, disadvantaged, other communities that experienced significant barriers to employment?
Again, I'd have to take that on notice, Senator. The over 100 kind of forums in the lead up to the summit were undertaken by government MPs and ministers, so I just have to double check.
Okay, well, if you could take on notice if there were, who coordinated them, who was attended, who was invited, and why they weren't publicised to the communities if indeed they occurred.
Yeah, no problem.
Okay, thank you. Thank you, Chair.
Thank you very much.
It was even less than 5 minutes.
That There are so many things I could say about that. That was exemplary. Thank you, Senator Rice. So we are just a couple of minutes away from the dinner break, so I think it's an appropriate time for us to do that. I'd like to advise the witnesses that senators do still have questions for you, and that the committee has decided that the best way to ask those questions is with a spillover hearing with the Treasury portfolio, and the committee will be in touch to arrange that at an appropriate time. For now, though, we very much thank the officials who've been with us in the program this afternoon. Thank you, Mr Yeaman, in particular, for stepping into some big shoes today and for all your efforts. Thank you, Minister. And the committee's consideration of the 22-23 budget estimates will resume after the dinner break at 7:30 with the Industry, Science and Resources
Chair, just before we adjourn, I did want to go back and check the record around the issue that Senator Smith and Senator Hume raised. The capital raising measure was in the 16-17 MyEFO. The off-market one is in this budget but was not in the 16-17 MyEFO. So just to correct the record there where I got that wrong.
Thank you very much, Minister. Thank you, officials.
Thank you, Chair.
These proceedings today will resume with the industry portfolio, beginning with the Department of Industry, Science and Resources cross-portfolio and corporate sections. The hearing will then follow the order as set out in the circulated program. The committee has set 18 November 2022 as the date by which senators are to submit written questions on notice, and 16 December 2022 as the date for the return of answers to questions taken on notice. I now welcome Senator the Honourable Tim Ayres, representing the Minister for Industry and Science. I also welcome the Secretary of the Department of Industry, Science and Resources, Ms Megan Quinn, and officers from industry. Minister, Secretary, officers, would anyone like to make an opening statement?
I don't, but I understand the Secretary will.
Ms Quinn,
Thank you very much. It's very brief. Just to make the observation that today is my first appearance before the Senate as Secretary of Department of Industry, Science and Resources. It's an honour to lead this department and the broader portfolio, as it's an important role in Australia's economic development. The portfolio's core purpose is to support Australian industry, including in the resources sector, to become more productive, science and technology enriched and resilient to create jobs for Australians. The work of this portfolio supports prosperity across the nation, including in regional Australia. We are working with a broad range of stakeholders to leverage Australia's many strengths and to advise on policies, implement programs and deliver services across our diverse area of responsibilities. Over the past 6 months, the department has gone through a significant change. Several functions related to climate change, energy, liquid fuels have moved to the newly created Department of Climate Change, Energy and Water. This involved the movement of approximately 665 people and around $2.5 billion in funding. In addition, several bodies moved, including ARENA, Climate Change Authority, Clean Energy Regulator, Australian Energy Infrastructure Commissioner, Australian Institute of Marine Science, Snowy Hydro and the Clean Energy Future Corporation. Other functions, such as the Office of Supply Chain Resilience, Critical Technologies Hub and Digital Technology Task Force, were moved into the department. This involved less people, around 35 people. However, it did bring significant responsibilities in cross-government coordination. Our department continues to support the operation of the Department of Climate Change, Energy, Environment and Water during its creation, and we continue to provide services as they build their own organisational capability. Against this backdrop, I am proud of how we've continued to come together as a department and how we remain focused on supporting the government and the Australian people. I look forward to answering your questions today. Thank you.
Thank you very much, Ms Quinn, and congratulations on your new role. And the committee's interested in having a copy of your opening statement, if we can. Are you able to provide it to Secretariat to make some copies?
Yep, I can, yes. It's got some handwritten notes in there, but I'm very happy to provide it.
If you're happy to do that, that would be most helpful. Thank you, Ms Quinn. And are you seeking the call, Senator McDonald?
Thank you very much, Chair, and congratulations. What a terrific appointment and an exciting portfolio, an exciting department. So I feel excited for you. It's very good. All right, I've got some questions around gas prices and supply. But first, I just want to ask, is there a senior minister for the Department of Industry, Science and Resources? Is it Minister King or Minister Husic?
So Minister King is the Senior Portfolio Minister.
Could you please explain the breakdown of responsibilities between the Treasurer, the Minister for Energy, the Minister for Resources, the Minister for Industry and the Minister for Climate Change, Energy, CCEEW Department, please?
Environment.
Thank you.
And water.
And water, thank you. So the breakdown of responsibilities, how the responsibilities are divided up between each minister.
So I'll start with the portfolio ministers in this portfolio.
Mhm.
So the Minister for Industry and Science clearly looks after the industry policies in terms of programs, service delivery and policies related to industry. The Minister for Resources looks after resources, obviously.
I'm sorry, if I didn't finish that question properly, it was specifically in relation to gas policy.
That's right. So broadly speaking, the impact of input costs would be what Minister Husic is responsible for, but also any transition assistance or industry support for industries facing significant input costs. That's roughly, at a high level, what Minister Husic's responsibilities are. In terms of Minister King, she's the Minister for Resources, and the split here is a little less clear because gas is split, responsibilities are split across ministers. But broadly speaking, she's responsible for extraction of gas, and she has export gas control item as well.
What about the Minister for Energy?
So energy markets in terms of domestic market arrangements, so electricity market or gas market, transmission of gas, are the responsibility for the Minister for Energy.
And the Treasurer?
So the Treasurer is in charge of a whole set of things, including regulation in terms of competition and in terms of taxation, and obviously the broader impact on the Australian economy.
Thank you. I refer to an article published on Monday in the Australian Fin Review titled Gas Price Cap Rhetoric, Worsening Risk of Shortage, which I can provide for distribution. Would you like that tabled, Chair?
Are you familiar with the article,
Not
Ms
that
Quinn?
specific article.
Okay, yep. We will get some copies made and have it tabled. Thank you, Senator McDonald.
So I did just want to draw the committee's attention to gas policy to the extent that it impacts on this department is actually under item 1.3, which is scheduled for discussion on Thursday.
That's gas policy, did you just say?
So the resources component, yes.
Yes. So this is cross-portfolio, because I've just asked questions of Treasury, who told me that this was each portfolio had its own responsibility in this regard through the Secretary's meetings.
There are different responsibilities in this portfolio, yes. So issues related to the resources, gas extraction, the Australian Gas Security Mechanism and heads of agreement, those sorts of things are under 1.3. Issues to do with impact on industry under 1.2, which is also on Thursday.
So I think...
I'm happy to go at a high level, but if it goes into more detail, then I don't have my officials here that cover the detailed questions.
Let's start and see how we go. So In this article, it was a focus on ensuring that additional supply came into the market rather than moves to control prices. So there was more recent aggressively pro-intervention rhetoric from Mr Husic and Dr Chalmers, as well as from former Competition Watchdog Chairman Rod Sims. Minister, who is right? Is it Minister King on supply, Minister Husic on pricing, or the Treasurer?
Well, they're all correct, Senator McDonald. There is, again, at a high level, and I'd like to be in a position where we have the relevant officials at the table if you want a more detailed discussion of these questions. The government has, as you would know, resolved the questions of gas supply fundamentally. There is still, as each of those portfolio ministers speaking for their relevant portfolios, significant questions in terms of gas price. And the government is, as the Treasurer has indicated, working its way through those questions. There's nothing remarkable about that, and nothing that I disagree with any of the relevant portfolio ministers about in terms of the points that they've made publicly on that question.
Okay, terrific. Minister, do you agree with the Deputy Prime Minister's comments that the government should be working with gas companies to try and make sure that we get more supply, which gets a downward pressure on gas prices?
Well, I certainly do, and as you would know, and as I just indicated, the government has delivered agreement from gas producers to provide a significant amount more supply.
So you disagree then with Minister Husic's comments that this is not a shortage of supply problem?
Well, I think you're just misunderstanding. Following the government resolving that question, and as was pointed out prior to there being agreement, there's plenty of gas there. I think what Mr Miles was saying is that supply needed to be resolved. The government has resolved supply, and Minister Husic is correct to say that the question that is now in front of gas consumers, households and industry is a set of questions around price.
Can you confirm if Minister Husic is one of 4 ministers leading the response to the gas crisis?
Sorry, I missed that middle bit.
I'm sorry. I said, can you confirm if Minister Husic is one of 4 ministers leading the response to the gas crisis?
I think I'm just cautious about going too far into detail on this question. We've got plenty of time reserved for this issue on Thursday. I'm aware that Minister Gallagher went into some detail on these questions immediately prior to the dinner break this evening. But certainly Minister Husic, like a series of these other ministers, is engaged on this question.
Terrific. You just made the comment that the government has solved supply. Could you elaborate on that a little more about how the government has solved supply?
Well, the government's reached agreement with the gas producers that has substantially resolved the East Coast supply question.
Oh, excellent. Tell me more. Tell me more about how that has happened.
Yeah, sure.
Jane Urquhart, Deputy Secretary, Senator. So obviously in the budget context, you saw in the budget documents the forecasting of, the outlook for the next couple of years in relation to, both gas prices but also, the electricity prices that would follow from that. And the department's been doing quite considerable work for some months, which I think is known quite well publicly, around entering a new heads of agreement, reviewing the Australian Domestic Gas Security Mechanism with reforms to commence from 1 July next year. The Minister for Resources, Minister King, negotiated a new heads of agreement with the East Coast LNG exporters. It improves on commitments made in previous agreements, in particular committing to the principle that domestic gas customers will not pay more for the LNG exporters' gas than international customers, enhancing accountability through additional reporting requirements and quarterly compliance reviews, defining key terms such as competitive market terms, uncontracted gas, reasonable notice and supply term, referencing the LNG netback price as a benchmark price, and enhancing transparency through expanded publication requirements. So that new heads of agreement came into effect on 29 September and will remain in effect until 1 January 2026. At the same time, the government's concluded its review of the Domestic Gas Security Mechanism and announced reforms that include changes to the activation process, which would allow the Minister to consider activation on a quarterly basis, protection for long-term foundational contracts, LNG exporters in a shortfall market to have equal responsibility for supplying additional gas to the domestic market, and allowing LNG exporters to trade export permits. So the Department is actively consulting the LNG industry on the implementation of those reforms, which, as I say, will come into effect fully next year following the necessary regulatory changes.
So the AEMO and ACCC forecasts predicting a gas shortfall, of gas supply are no longer relevant since the government has now solved the gas supply?
So through her discussions for the heads of agreement, I think the shortfall identified was 56 petajoules, if I recall correctly, and the Minister identified in discussions with the LNG producers 157 petajoules.
Right, so done.
If I might just add,
Tick.
Well, to be clear, the arrangements for reform to the gas security mechanism is that it could be activated on a quarterly basis, which would require continuous evaluation and monitoring of what's happening. The budget also included financial support for both this department and the ACCC to continue its focus on what's happening in the gas market, to be in a position to provide information and advice to the Minister for decisions on a quarterly basis. So it's important that there's continued scrutiny in this market. It is quite an opaque market with lots of different views about what's happening in the market because there's very many different parts of it. So the ACCC's continued scrutiny, analysis and support from this department is quite important. So in that sense, I'm not sure you'd say entirely that the job is ever done, while we've got these extreme situation of the international energy crisis that everyone's facing. It's important that we continue to monitor what's happening in the market.
Is that why the government cut funding to gas supply programs in the budget? Cut funding for developing more gas supply? I speak specifically of the $31 million to the Cooper Ada Vale development, and also to the gas hub, the $100 million to the gas hub project.
Can I just sort of intervene, Senator McDonald, because I'm not sure if these questions belong with
I can come
these
back to
officials
those
who are here
specifically.
today.
Those ones specifically.
Yeah,
and
we've been asked a series of questions here that go to
policy.
The agreement
the
agreement that's been negotiated recently to deal with supply issues that relate to the crisis that we're currently experiencing. Questions that go more broadly to issues inside resources really do live on Thursday, not here.
Yeah.
Okay.
Thank you, Minister.
I can come back to the resources section on Thursday.
Yeah,
I'll stick with the policy then, the cross-portfolio and corporate.
Thanks, Senator. I just feel I need to get this out of my head, Senator McDonald, that you asked about the various responsibilities, and then it was clarified that gas extraction and questions and agreement questions belong in outcome 1.3. And then we sort of proceeded on the basis to sort of see how we would go,
Yep,
and we've
all right.
done
I can
that.
come back to that on Thursday.
Great, thanks.
Is there an interdepartmental committee or working group coordinating this work?
So we are engaged with our colleagues on this issue, as you've heard in other estimates from other colleagues. So we're engaged broadly, and we have been for some time, including when we were talking about what arrangements there were for heads of agreement and the gas security mechanism, and then more recently in terms of examining different options.
If I could add to that, Senator, I mean, within the department we're quite experienced at working across divisions. As you'll expect, there are often issues that cut across the department's responsibilities, which are quite broad. And so in that sense, you can be assured that, colleagues from the industry side of the department are talking to colleagues from the resources side of the department. There are colleagues in analysis and insights who are obviously, the economic specialists. So as is usual in the department, we talk to each other.
Yeah. So when you say engaged, Ms Quinn, engaged how? Is it a task force? How does it work?
So we're working within our department to advise our ministers, and we're working with colleagues to make sure there's a solid fact base and an understanding of what they're looking at and their responsibilities. As you mentioned earlier, that every different departments and different ministers have particular responsibilities, and it's important in this holistic issue to look at all the different options. So we're engaging with them as you would expect us to do.
Okay, so there's not a task force as such, it's
people have their individual responsibilities working with their ministers and working across the public service to provide a really accurate fact base.
Right, so that's an ongoing process. I was just referring earlier to some of the comments of the Treasurer about a policy development and I'm not sure if I got task force from his comments, but I'm just trying to identify.
I'm not aware of that particular name. We're working within our responsibilities, but working cooperatively and collegiately with our colleagues.
Okay, so members of the Minister's office, members from the Minister's office would attend those meetings. You'd engage with representatives from the Minister's office or the ministers themselves as you're informing them.
Yes and no. So it depends a bit on. There's lots of discussions. We provide advice to both Minister King, Minister Husic. They have conversations with colleagues. We have separate conversations across the public service. It all sort of depends on the particular issues and what experts and information we need to have in the room.
Okay. The Department of the Treasury, you would have heard earlier today, confirmed that they're not the lead agency on this issue. It's not their responsibility to conduct any engagement or consultation with relevant stakeholders. Has the Department of Industry, Science and Resources met with relevant stakeholders in regard to addressing this issue?
So we certainly have had extensive engagement with the industry, both on the industrial user side and on the producers' side, in developing the discussions around the heads of agreement and in the process in terms of discussing what changes there might need to be on the gas security mechanism. So there's been intensive discussions through that process. We're also in discussions with stakeholders around the announced government changes to the security mechanism, and that will be ongoing, as you would expect, as we face regulatory changes on that matter. We get a lot of contact with the stakeholders across the portfolio on a regular basis. We are out and about a lot, and we do collect that information and engage on a regular basis.
Okay. So yesterday in Senate estimates, the Department of Climate Change, Energy, the Environment and Water confirmed, like you, that they didn't have a task force established to deal with this energy crisis. They also confirmed that energy officials are yet to meet with the Prime Minister to brief him on the crisis. Have any energy officials briefed Minister Husic?
We've certainly briefed ministers on this issue, yes, both Minister Husic and Minister King.
Okay.
And I believe we might have even provided some information to Minister for Manufacturing, Minister Ayres.
Terrific. And has the department prepared briefs or submissions to Minister Husic on gas supply or gas prices?
yes, we have provided information to both our ministers on the reform processes and what's going on in the market.
Did you generate those, or were they requested by the minister?
I cannot remember precisely whether they came from the minister or not. I don't have the officials here. As I said, they'll be here on Thursday, so I'm happy to come back on that question. But likely we provided information. There might have been follow-up discussions, so it's probably likely to be a bit of both.
Okay. What was the nature of your advice to the minister?
So that goes to sort of precise details of advice. It would have been on what's happening in the market, what the possible path forward would be, what the implications of different scenarios would have been, particularly focused on the impact on industry and particular different parts of industry, which is his portfolio responsibilities.
Okay, terrific. Can you provide these briefs or submissions on notice, please?
Happy to take them on that question on notice and check with the minister.
I just want to check back if both the departments, CCEEW and this department, are conducting stakeholder engagement, who's taking the lead?
So it depends a little bit on whose responsibility the policy issues are. So as we mentioned, the DQ, as we call it, the very long acronym, it looks after the energy markets and what's happening in terms of regulations, including the role of the energy market operator and the other regulators. So questions related to that, questions related to state responsibilities on those policy issues would be for them. For us, it's around the producers on the gas side, and then also the users in terms of the energy users, so that they're our core stakeholders. Of course, sometimes they cross over and you can't help but stray into each other's territory, so we work very closely with them. Up until just a few months ago, it was all together in one department, so it's a very close working relationship.
Terrific. That's great to hear. Has the Minister for Industry, Minister Husic, met with any of the gas producers since the election?
I would have to take that on notice. I don't know all of the meetings that the Minister has.
Thank you. If you could take on notice the name of the company and the date of each meeting, please. Thank you. Has the department met with any stakeholders to canvass or discuss possible solutions to the current pressures in the domestic gas market?
So those issues come up in almost every conversation with the stakeholders that are impacted, either on the producer side, parties to the gas market more generally, and users of gas. So the answer is almost certainly yes.
Has the department or the Minister's office canvassed with stakeholders a possible levy on energy producers?
I'd have to take that on notice. I can't speak for the Minister. Obviously, stakeholders raise issues with us in terms of their questions. Depending on how any such levy might be imposed, would be a function potentially for another department. So we would be careful not to stray into the responsibilities of others. For example, we do have discussions with our Treasury colleagues jointly if they ask us to on things to do with taxation. For example, the petroleum rent resources tax is a responsibility of the Treasurer, but clearly it applies to stakeholders in this portfolio. So often those discussions would happen together, just as they are in other kind of discussions, but cross over our responsibilities, the R&D tax incentive, for example.
Okay. Has the department or the Minister's office canvassed with stakeholders direct subsidies for electricity generators?
For electricity generators,
Yes.
that's the responsibility of the Department of Energy. So I can't speak for the Minister again, but it's not something that we would actively discuss because that technically sits with DQ.
Okay. What about the department or the Minister's office canvassing with stakeholders increases or substantive changes to the PRRT?
So once again, the Treasurer has said that this is an issue that the Department of Treasury is providing advice on. We are working with our colleagues as we have throughout the existence of that policy, and we are in discussions with them about the different options and providing our input into their process.
Okay. What about canvassing with stakeholders possible new taxes on resource companies?
So once again, the policy responsibility for taxes is the Department of Treasury, and so they would be taking the lead on those discussions with to the extent that there are any with stakeholders. Once again, though, we would work cooperatively with them on most of those issues.
So, Treasury has said that they're not meeting with stakeholders. That was the evidence just provided at the last estimates schedule. And you can't say whether you spoke about taxation matters. So, who is speaking with stakeholders about these taxation measures that the Treasurer has publicly floated?
You'd have to ask other officials, and we have conversations. They raise issues with us. They express their views to us, as they probably are all people they talk to. We listen respectfully. In terms of engaging on technicalities of particular policies outside our remit, we usually direct stakeholders for those detailed views to the responsible area to have those technical discussions. But of course, when you're talking to stakeholders, they're interested in sharing their views across broader areas, and we listen and think about it and pass those views back to the responsible area.
Okay. I'm wondering if it's going to get confusing for stakeholders if no one department is taking the lead either internally or externally on these very important issues. Is it possible that they're getting mixed messages?
I've not found stakeholders expressing much concern about who's responsible for what. It's pretty clear that Treasury's got point responsibility for tax, that the Department of Environment and Energy and Climate Change, Water has point responsibility for the operation of the market. We're responsible for extraction and export. It's international DFAT is responsible for trade. It's reasonably clear who's responsible for what. It is complicated because the world is complicated.
It is. So
it might
specifically,
help,
yes.
Senator McDonald, if I understand your interest in who's advancing which proposition, but the Prime Minister's made it very clear. We're going to run a fair income cabinet style government, not like the last government, a fair income cabinet style government, consistent with the Westminster tradition, where ministers will have responsibility for the areas that they're given, but will collaborate over questions like this. And we'll run a proper cabinet process where it's been made very clear publicly that there are a series of options on the table. Those will go through the proper cabinet processes, and proper deliberations will happen, and they'll happen in a timely and methodical way. We're not going to get into the trap that the last government fell into of announcing 22 different energy policies and leaving the electricity
Minister,
and gas
terrific.
markets in utter
Thank
chaos. We're going to work through it in a careful, methodical way. People
Very
are collaborating
pleased to hear
in a
that.
healthy kind of way.
Terrific.
And
Can
at the
I
end of
ask
those deliberations, there'll be a series of decisions about that.
Just wait for the answer to conclude.
Thank
Are
you.
you concluded, Minister?
I have concluded.
Thank you
Senator
very
McDonald.
much. Thank you. Ms Quinn, can I ask specifically then, what is your department's input into these discussions then? I appreciate that you're not the lead agency. I'm not trying to re-prosecute old ground. I just want to understand what specifically is the advice that you would be providing to these other portfolio areas?
So it matches our administrative orders arrangements and the responsibility of our ministers. So we provide information and input and policy views in relation to the impact on industry broadly. There's lots of different types of industries and the implications of different options on both the industrial users as well as the resources sector, including the gas producers. So we also have legal responsibility for, as I said, export controls. We also have, in the past, industry assistance, or how would you go about designing different types of assistance if that's the path that you wanted to go down. We also have a view on the system implications in terms of obviously the market for gas is, there's inputs from the producer's side, but it goes through a very complicated market, including transmission and then different contract arrangements. We have policy views on the operation of the market, even though it's not our direct responsibility, and we would engage with others on those sorts of issues. It's also important that there's crossovers because, for example, it has historically been the case that gas was provided into Victoria as a result byproduct of extraction of oil out of Bass Strait. So there's implications in terms of the knock-on consequences for other parts of the system. They're all the sorts of things that we engage with, both from a fact base, responsibility, but also, we question and challenge and make sure we understand what other people are putting forward, because our job is to advise our ministers so that, as Minister Ayres has said, they can participate in a discussion with their colleagues.
Yeah, terrific.
Senator McDonald.
Yes.
We've been going in 15-minute blocks this evening, and we've been going for almost half an hour on this gas topic. That's fine. I just wanted to clarify how much longer you've got on this topic.
I've got, depending on the length of the answers, probably about 5 minutes.
Great.
Thank you. Has the Department of Industry provided any advice or modelling to the Department of Climate Change, Energy, Environment and Water? Just tell me again your summary name.
DQ.
DQ. Excellent. Or the Department of Treasury about the impact of gas supply on domestic manufacturing capability?
So we have talked about the cost structures, the implications, which industries would be most affected by not just gas but also electricity prices, with the increase in both of them in recent times. So we're working with them on those issues, just like we have in response to other kind of shocks in the system. What information we have, we're happy to work with them cooperatively. It depends a bit on the precise question and the precise process that they're going through. But we would share information very freely with them.
Okay. What industries are you focusing on within the manufacturing capability, domestic manufacturing capability area?
These go to item 1.2, which is also on Thursday.
Hold that one then, I'll come back to that.
Happy to come back to that when I have my industry support colleagues.
So I'll just do my last question in this block then. On the subject of a price cap, Energy Quest has just released a report that concluded, while superficially attractive, regulation via price caps could easily make the situation worse. Based on EQ's gas supply database, they estimate that introducing a $10 a gigajoule cap could remove or delay the equivalent of more than 1 year's East Coast domestic supply, 700 petajoules, in less than 8 years. It could not only kill LNG imports but also development of the Narrabri gas field in New South Wales, the Beetaloo field in the Northern Territory, and inhibit the development of much of Arrow Energy's acreage in Queensland. Do you agree with Energy Quest that a downside of price caps could be the reduction in supply of gas over the longer term?
It is absolutely self-evident that if producers can't cover the cost of the production, then that wouldn't be in their economic interest to produce. So the question really depends on what the costs of production are for particular parts of the system and what the prices they can receive are. So it's a complicated thing to think about the gas market, because there are quite a lot of different producers with different gas components, different cost structures. So it's something that needs to be examined very carefully, what the cost structure is, what's the appropriate pricing. This also goes to the market dynamics as well, which is the code of conduct, the voluntary code of conduct that's currently in place just recently, goes to improving the transparency of the pricing offers. There is an opaqueness to the market, both on opaqueness around the cost of extraction and production of gas, and an opaqueness around what people are paying for it, given the individual contract nature and not a lot of transparency through markets. So given that opaqueness, it's really hard to say with any precision what price will do what. That's part of the analysis that needs to be done.
And given the complex supply chain of producer, pipeline, wholesaler, retailer,
there are definitely different elements to the market, and you need to think about the implications for any policy. There is quite a lot of regulation in the market as it stands now, at all levels of the market, it's a regulated market. And so when changing regulation, you need to think through the consequences. That is the case at any point in time. But it's clear, as my colleague Stephen Kennedy sort of said, it's clear that countries around the world are looking at regulation and other interventions in the face of significant increases in electricity and gas prices.
Yes, we touched on Argentina and their particular experience where they ended up importing gas, having to introduce LNG import terminals to meet supply.
And that is something that the industry is talking about. It has been for a number of years, thinking about. One thing to think about is that it's not a universal gas market. The Western Australian and Northern Territory markets are very different to the East Coast, and we need to think about policies that meet the needs of different markets. And there has been discussion for at least 4 years that I'm aware of about the possibility of import terminals or regasification terminals on the East Coast. And that's a supply response to increased cost. It depends if those things are more expensive than other options, but if the price was higher, it might be the case that some companies find that an attractive option.
The LNG exporters tell me that they have not yet paid off their infrastructure development projects, particularly in Queensland, of course. So I guess that's another element, isn't it, to consider in the price fixing part of the supply chain.
It's certainly the case that there were significant investments, fixed cost investments for the LNG producers. They have long-term contracts that they had as part of that approach that covers their intention is that those long-term contracts provide the cover for the fixed investment, and it's an important part of the consideration to maintain those long-term contracts in terms of orderly supply, particularly for our trading partners who have invested that money in those production and have long-term contracts. That is part of the considerations that the government has undertaken, particularly around the heads of agreement and the gas security mechanism. That's definitely something that needs to be factored in.
The Japanese Prime Minister came to discuss exactly this topic.
Okay.
Thank you for your patience, Chair.
Thank you very much, Senator McDonald. Senator O'Neill.
Thank you, Chair.
I'll go after you.
I hope, Ms Quinn, that these questions might be still applicable for you in your new role, because you've been with the department for some period of time. Is that correct?
I haven't added up actually, to be honest, but end of August, so not that long.
Okay. And Ms Urquhart, have you been with the department for a period of time?
I have been.
Okay, so hopefully you might be able to assist if required. So my first question is, would you be able to tell the committee what date the former Prime Minister, Scott Morrison, appointed himself to the Department of Industry, Science and Resources?
So the Prime Minister appointed himself in April. I just note that this is a question for our resources team, which will be here on Thursday. So we understand the Prime Minister appointed himself on the 15th of April 2021.
Okay, let's just see how far we can go with this.
And if there are more detailed questions, very happy to take them on notice or come back on Thursday with the relevant officials from the resources team who are looking after some of the arrangements related to this issue.
Okay, thank you. Could I don't know if you'll be able to tell me this then, was the department informed before this date of the Prime Minister's intention to appoint himself to the Department of Industry, Science and Resources?
No, we weren't, but we often wouldn't be know about prior to a minister being appointed. There might just be a little time before an announcement, but it's not usually something that the department is consulted on about ministerial arrangements. They're at the behest of the government.
Okay, so the decision's made, the appointment occurs, then I'm assuming there would be a notification process.
So traditionally there's a notification, well there's actually a press conference and we get to see it all happening at the Governor-General's residence. But there's usually
But there was nothing normal about this?
There wasn't, no.
That didn't happen, right?
Correct.
So I'm just trying to get to what happened. You wouldn't normally be informed if a minister was to be sworn in to administer the department?
Not officially. We would often there's media attention. We formally find out the responsibilities of the minister through a circular with ministerial responsibilities from the Department of Prime Minister and Cabinet.
Okay, but as you said, there was nothing normal about the way that this process unfolded. So, after you became aware that the Prime Minister had appointed himself as the Minister for Department of Industry, Science and Resources, what did you do next?
So we were informed afterwards, and we
on what date?
21st of April.
That's correct.
Yeah.
So 6 days after his appointment, you were then advised by whom?
An official in the Department of Prime Minister and Cabinet. Department contacted an official in then Department of Industry, Science, Energy and Resources.
Okay, so the Department of PM&C.
Yes.
Are you able to indicate the level of that person, if not their name?
I do not know. I was not in the department at the time, and I'm not sure what level they were, to be honest.
I wonder if Ms Urquhart, can you provide any further
So
detail?
I wasn't in the department either, but my understanding is that they were senior executive level, speaking to senior executive level in the department, and I didn't hold relevant responsibilities at the time, so I was not involved in that discussion.
Okay, but you're reasonably confident in what you've just told me. There was a senior executive in the Prime Minister's department in touch with a senior executive in the Department of Industry, Science and Resources on the 21st of April, 6 days after the Prime Minister appointed himself. You became aware of that role. The department became aware of that new additional minister that you'd acquired.
That's right.
Okay.
And just for the, I think you know this, Senator, but just for clarity, this is a subject of an inquiry.
Yes.
By Ms Bell looking into these issues, and so I also just want to be careful as a department that we don't cut across that inquiry.
And I'm very mindful of that, but I think just in the terms of the general public's interest, I'm going to try and have some reasonably high-level questions that still give us a bit of an indication of what the Prime Minister was up to behind closed doors. Yeah, we don't want that. So did the former Prime Minister instruct the department not to inform other ministers about his appointment?
I couldn't answer that question, Senator, I'm sorry.
Not that I'm aware of, but you have to, they're sorts of questions that would go to the officials involved at the time.
And will they be here on Thursday?
No, the officials mostly involved in the time are in the Department of Energy.
Sorry, could you say that again?
Most of the officials involved in those initial discussions at a high level are now officials in the Department of Energy. The responsibility for the people working on this moved as part of the Ministry of Government changes earlier this year.
Which is they're some of the 665 people that you indicated.
Correct.
And the 2.5 billion that moved over to the other department. Okay. Do you have any insight into what protocols were established about how to manage the two ministers in the role?
So my understanding is that there was an awareness that the Prime Minister had been appointed, as I said, on the 21st of April, and that was no protocols were put in place, no requests for briefings were requested. No discussions were had until quite some time later when there was a particular matter that the Prime Minister requested briefing on.
Okay, so awareness of the appointment on the 21st of April, no protocols established to manage this literally extraordinary arrangement, no briefings.
It's not that unusual for multiple ministers to have shifting responsibilities within a portfolio.
It's pretty unusual for a Prime Minister to appoint himself in private, though, isn't it?
I'm not aware of other instances, but certainly there are...
Not one. There's no other instances.
There are instances where there are ministers that might have joint responsibility for particular areas. I know...
And you've explored that with Senator McDonald, but it's very transparent and everybody knows what everybody's doing, and you're able to describe those roles. In this situation, you're telling me there was no protocol, no briefings and no requests for information for some period of time. Okay, so let's go to that. What's the date at which a request for information was made by the Prime Minister
by his department, the Department of Prime Minister and Cabinet, on the 8th of December 2021.
Okay, so several months later, in the lead up to Christmas 2021.
Yes.
Do you know, Ms Quinn or Ms Urquhart, were other ministers aware that the former Prime Minister had been appointed to multiple ministries?
So I'm not aware. I have no.
I really feel that, I can't answer for the former Minister for Resources, for example, and his awareness.
But throughout this whole period, the department did continue to work with Minister Pitt as the Minister for Resources. So there was
business
no
as usual
change.
continued with the publicly known and appointed minister, but a covert communication structure was set up with the Prime Minister.
So they're your words, Senator. I don't know what Minister Pitt knew or discussions he might have had with the Prime Minister. I know that the advice I have from the department is that they continue to work with the Minister of Resources in the usual way, irrespective of knowing that the Prime Minister also had sworn himself into the Department of Resources.
So the briefing request that you've indicated that occurred from the Department of Prime Minister and Cabinet for the Prime Minister's use on the 8th of December 2021, was that provided to Minister Pitt as well, simultaneously? The briefing that you provided to at the request of PM&C, was that also provided at the same time to Minister Pitt?
I would have to take on notice of precise details. I don't believe so, but I'm not. I believe that the Prime Minister requested advice on a particular matter, and advice was provided to him directly through his department as the Minister.
So we've got two paths of information being followed.
So this is where it's getting into the territory covered by the inquiry for Ms Bell. I do not believe there was multiple advice provided to multiple ministers. I understand from the information I have that on a particular matter the department provided advice to decision maker, being the Prime Minister, and for other matters they provided information to the single decision maker, being the Minister for Resources. I'm not aware of a circumstance in which there were two paths. There was always a single path, but who was responsible for what was made clear to the department, and advice was provided as is usual to a decision maker. The situation was, in this case, the Prime Minister was indicated as a decision maker for a particular matter.
So it sounds like there were two discrete paths that emerged after the 8th of December.
So
with
no, there was
information.
particular requests for briefing on a particular decision, and then there was it was clear who was decision maker within the department, and advice was provided to decision makers as appropriate.
So the department, you said, was clear who the decision maker was?
Yes.
Who was the decision maker?
So we were asked to provide information on the PEP 11 application.
Yes.
And it was made clear that the decision maker for that was the Prime Minister.
That was the Prime Minister.
Yeah, do you have
I have a significant
sort of
matter I'd like to draw to your attention.
Sure.
I just want to make sure that the Minister at the table is very, very happy with this line of questioning from Senator O'Neill, because I would hate the Secretary to inadvertently compromise herself or other officials, or indeed the inquiry. So my question is just to make sure that the Minister is happy with this line of inquiry that Senator, or at
Sure.
least paying attention to this line of inquiry.
I might just add there that as the conversation was going on, I was considering the estimates rules and whether the existence of another inquiry is necessarily relevant to the questions that are asked
I think the fact that the Secretary has raised it on a number of occasions now that there is an inquiry, and not just listening to the Secretary's evidence but watching the Secretary's evidence, I just want to make sure that she's very, very comfortable in responding to these questions. If she's not, she's free to take them on notice. In addition to that, I just want to make sure that the Minister at the table is alert to the line of inquiry that Senator O'Neill is taking, and to possible adverse implications for this other inquiry. So I'm just merely drawing it to the attention of the Chair and the Minister in order to protect the integrity of the inquiry process, but also the professional standing of the Secretary.
And the Minister is invited to answer your question. I'll just clarify from the Chair's position that the existence of the other inquiry is not necessarily relevant to the answers that Ms Quinn gives here. And certainly want Ms Quinn to be comfortable with the answers that she's giving. But I invite the Minister to respond.
Yeah, I'm listening very carefully. Thanks, Senator Smith, and haven't seen anything in Senator O'Neill's questions that that gives me any concern. I've heard the Secretary point out that she quite properly is being cautious in her answers, and she'll exercise judgment about how she approaches those, and if she needs the committee's assistance, I'm sure she'll ask for it. There are obviously, when there is a criminal trial, some questions about how the Senate itself and Senate committees should approach the hearing of evidence in relation to criminal trials. And there's been some recent experience for the Senate of dealing with those sorts of questions. This is not the same kind of approach that is required. There has been a lot of darkness and not much sunshine on this issue. And so
that's why there is an inquiry process.
It's a reason for a lot of things, Senator Smith, including some furrowed brows right around the Parliament.
Sorry, Senator Ayres, I think on this particular matter, I think you'll agree with that my motivation is to protect the integrity of the inquiry, the integrity of this Senate estimates process generally, but also of this committee.
Yeah, and balancing all of those issues, I'm content with what I've heard so far. If I feel the need to jump in, I will.
Thank you, Minister. Senator O'Neill.
Thank you, Chair, and thank you, Senators, for your contributions there. Just to be clear, there were no other ministers aware that the Prime Minister had been appointed to multiple ministries, to the best of your knowledge?
I don't have any knowledge either way, and that's not a question I can answer.
Yeah, I think you said that to me before. I'm just double checking. Now, you also indicated previously that it's an historical fact that no Prime Ministers ever secretly appointed themselves to ministries before, at least none that we've ever become aware of.
So that was not my evidence. I'm saying I'm not aware of it, but I wouldn't be in a position to be aware of it.
Okay. So when the Prime Minister appointed himself on the 21st of April and an official from PM&C contacted the department, did the department seek legal advice on the self-appointment of the Prime Minister into the role as the Minister for the Department of Industry, Science and Resources?
So this is where I would like to take that on notice and consider the answer in relation to the information provided both to the inquiry, but also note that there is an ongoing legal case on this matter, and I'd like to take advice before I answer as to what legal information was or wasn't provided to who, given those legal proceedings more than the inquiry.
Sure, thank you very much. Once the former Prime Minister had been appointed to the department, you indicated there was a period of no action, no protocols were established, no briefings requested, no requests for information. But on the 8th of December 2021, action was triggered by the Department of the Prime Minister, and he requested that briefing. So no incoming ministerial briefing, is that correct?
Not that I'm aware of, no.
Okay, but a briefing requested on the 8th of December. Was there any other briefing that you're aware of requested by PM&C?
So I believe that the briefing that was requested was on the PEP 11 matter, and that alone.
And no other briefing requested in the time that the Prime Minister held that role as the head of the Department of Industry,
Not
Science
that
and
I'm
Resources?
aware of, no.
Excuse me, Chair.
Yes, Senator Smith.
I would be happy to propose a private meeting so that we could get some advice from the Clerk of the Senate to give you the necessary protection and the other members of this committee the necessary protection, not to necessarily interrupt or disrupt Senator O'Neill's line of questioning, but so that we can continue to proceed during the course of the evening with the confidence that Senator O'Neill's line of questioning is not putting the official in harm's way, putting the minister in harm's way, or putting this Senate estimates process in harm's way.
Sorry, I did miss the last part of what you said there, Senator Smith.
In summary, I'm happy to have a private meeting so we can seek the official view of the clerk that can be disclosed to the whole committee so as to not inadvertently put anyone in harm's way as a result of Senator O'Neill's line of questioning. And of course the process would also give Senator O'Neill a degree of confidence. That's a proposition. You don't have to accept it immediately. You might choose to reflect on it, but
Senator Smith,
I think a couple of times now, actually more than a couple, the Secretary has found it necessary to remind Senator O'Neill that there is a legal process underway.
Which we're all aware of.
Senator Smith, my thoughts on this are that if an official needs to take a question on notice in order to consider whether there are any implications of that question being answered, that is appropriate to do so. And I note that Ms Quinn has done that on a previous question without any concern from Senator O'Neill. Can I get an indication from you, Senator O'Neill?
I've only got a couple more to go, and I think I'm pretty close to the end of my questioning. Here. So there's some overlap, I think.
An option available to the committee at any point during the course of this evening.
Yeah, thank you very much for those thoughts, Senator Smith. On the basis that Ms Quinn is capable of taking things on notice if she wants to reflect on the implications of any answers, on the basis that Senator O'Neill has said that she's nearly finished with the line of question, I'll give the call to Senator O'Neill.
Thank you. And you indicated that on the Ms Quinn, you indicated that on the 8th of December 2021, the Prime Minister requested the only briefing that he requested in the time that he was in the role as the Minister for the Department of Industry, Science and Resources, that he did not request an incoming ministerial briefing. And just to be clear, apart from that PEP 11 December 8 request from PM&C on behalf of the Prime Minister, which will be asked about in a later session, did the former Prime Minister make any other decisions in the portfolio?
So I just want to be clear, I can't speak to what the Prime Minister's own department may well have provided him. I can only speak to what information the department then, including the energy responsibilities, provided him. And so the awareness we have in our department is that, just to be really clear, there's an awareness on the 21st of April that the Prime Minister had been appointed to the resources portfolio. There was an awareness on the 8th of December via Department of Prime Minister and Cabinet that the department was advised that the Prime Minister had been sworn in and would be the decision maker for the purposes of PEP 11. The department then provided briefing to the Minister in that role as a decision maker for the purposes of PEP 11, and to our knowledge the department only provided briefing to Mr Morrison via the Department of Prime Minister and Cabinet in relation to this decision alone. And we're not aware of other briefing or advice provided in his capacity as Resources Minister. I can't speak to other information provided to the Prime Minister from his own department or others. And I note that Ms Bell has been asked to inquire into this matter and will be reporting back on the 25th of November.
The 25th of November. So one of the roles of the department that you're tasked with is keeping the Minister's office briefed on developments in the portfolio and providing advice. Again, apart from PEP 11, did the department provide briefs or advice to the former Prime Minister or his office in relation to any other matter in industry, science, energy and resources portfolio?
So I can't speak to industry, science, etc. I mean, we provide information through Cabinet and through other processes, but certainly in relation to decision making, no other than the PEP 11 case.
Exclusively PEP 11. And just sort of for the mechanics of it, so I understand a little more, how was it decided whether questions on notice or matters requiring Minister's attention were sent to either the former Minister Keith Pitt or the former Prime Minister Scott Morrison? Or did you send them to both?
So when you say questions on notice, I'm just kind of clarifying what...
So if there were questions asked about a matter that might have an overlap between the two ministers?
So, as I was saying, the department was clear for this matter. The Prime Minister, for PEP 11 decision, the Prime Minister was the decision maker, so information was provided to him, as it would be. Minister Pitt was decision maker for other decisions and other administrations, and information was provided to him as a decision maker. So that was clear to the department who was the decision maker for certain matters, and that is not dissimilar to other portfolios I've worked in where there could be multiple ministers who could be a decision maker on particular matters. For example, when I worked under the Competition Act, there were multiple ministers that had different responsibilities, and it was clear who gets the briefing, and we provided that information on decision matters. So that element is not unusual to have more than one minister in a portfolio that may be the decision maker.
But you had very clear delineation. So as of the 8th of December, it was very clear to the department that all communications and requests for information about the PEP 11 matter were, from that point on, the responsibility of the Prime Minister alone in his additionally self-appointed role as the Minister for Department of Industry, Science and Resources.
That is the advice I have before me, yes.
And no further communication about PEP 11 therefore went to Minister Pitt because his responsibilities ceased as of the 8th of December, is that correct?
So this is where I'd like to take it on notice, because there are multiple elements in terms of application processes, etc. It's likely that some of the parties involved were also involved in some other decisions. So I'd like to take that particular question on notice to get a clear advice in terms of decision making, and make sure that we don't cross any lines between the inquiry and the legal court case.
Thank you, Ms Quinn. Thank you, Chair.
Senator Bragg.
Thanks very much, Chair. Thanks very much for being here. Congratulations to you, Ms Quinn, on your appointment as Secretary. I know you bring extensive experience in the Treasury portfolio, so I think you'll do well in that role. Now, I may be mistaken, but can I ask you about space?
You can ask about space. Technically, space is in 1.2.
Is that tomorrow, is it?
On Thursday.
Okay, well, I won't ask you about space then. Is that right? I should do that tomorrow?
I'll just double check. I have my list.
You'll be back tomorrow, will you?
Thursday we're back on.
Okay,
So I'll just
hopefully space will still be there.
I'm pretty I'm sure space will still be there.
Good.
And I can confirm that I have on my list, which I believe was shared with the committee, the breakdown in terms of the gap is under 1.2.
Yeah, 1.2.
Yeah.
But I mean, if we want to ask questions to the department, that's the space agency?
Space agency is in the department.
Okay, so there'll be an official there I can ask questions about. Okay, and what about R&D?
So R&D is also under 1.2.
Okay, well, that's it. Thank you very much. All the best for the future.
Oh, actually, sorry, correction, it's under commercialisation. It is under this item.
Okay.
Sorry.
Okay,
I'm getting to the bottom of
Can I
my
ask you
list.
about that?
Yes, you can.
Yeah, great. Well, it's great to be back.
You got there.
And it wasn't too much of an interregnum. So I just, I mean, as you know, we had this issue with software and the endless sort of processes that we went through in the last parliament to try and get this right. And the principle I think that we were trying to achieve, or certainly I think the industry was looking for, was how do you provide some certainty that software can be part of the offset, particularly when it's software as a service, and particularly when it's an organisation that might not have a huge amount of regulatory capacity. So where is that up to now?
So I'm very happy to take the high level on this and then get officials that can answer in more detail. There was a review of the R&D tax incentive, colloquially known as the 3Fs review, and that resulted in reform changes to the arrangements. those reforms have been bedded in, and the advice I have is that it has made some improvements to the operation of the system. There are still issues, as you would expect with any regulatory regime, where people have issues on how to account for things and how to measure things and the implications. And software is something that stakeholders raise from time to time in terms of their concerns about how it's accounted for. It does get complicated when we're talking about things that can be moved between different parts of a business and how to kind of capture it. So it's always going to be a little difficult to be precise. But if you want to go into more detail, I'm happy to throw to my colleagues who've got much more expertise on this matter.
So do you have a breakdown of where the R&D expenditure goes, tax expenditures go?
So I'll bring the experts to the table for you.
Hello.
Hello, Tara Oliver. I'm the General Manager of the R&D Tax Incentive Branch, and I can talk in more detail to software and the RDTI.
Okay. Well, can you... so is it Aussie Industry that supports the judgments here, or is that part of the department?
Senator Kylie Ryan, I'm the head of Oz Industry.
Okay.
The RNDTI branch sits within the Oz Industry division, but it's not necessarily driven by the Oz Industry, let's say, brand, as we're out in with, say, regional managers and things like that. It's quite separate.
Okay. So do you have a breakdown of where the tax expenditures are going across the economy?
Yes, we do by industries, and I can give you some information about software in particular, or ICT registrations.
Yeah, I'm interested in what percentage that might be.
Yeah, absolutely. So in recent years, software registrations have represented about 40% of total registrations that we receive under the scheme.
Sorry to stop you, but you mean in terms of the volume of the claims or the volume of money?
That's right. That's in terms of the volume of the claims, and it's typically been over 35% of total registered expenditure.
Really? Okay. So, and what's the trend over the last 5 years on that?
So I've got some figures here around software over the last few years, and we've seen actually quite a big tick up in the last financial year. In 2020-21, total percent of total expenditure is 46.5%, having jumped up from 41.8% in 2019-20. And in previous years, in 18-19 and 17-18, it was hovering around the high 30% mark. So we are seeing a recent trend upwards in terms of expenditure.
Okay. What sort of industry engagement are you doing?
We're doing quite a lot of industry engagement, particularly with the Tech Council of Australia.
Yeah. What are they saying to you?
So they're certainly talking with us about how we might be able to improve certainty for software companies about eligibility under the program. And off the back of the recent Board of Taxation report, I'm not sure if you're aware of, they inquired into the dual administration arrangements of the scheme in 2021. And they looked at this issue in particular, and they found that the best approach to improving certainty for software companies was to focus on administrative reforms, and found, in fact, that a separate program for software was not recommended at that time.
Yeah.
And just to add to that, so guidance in terms of how software-related activities should be considered was refreshed by the Australian Tax Office in April 2022. So that's one sort of active step in terms of providing additional information to stakeholders who might claim, particularly those stakeholders who might not have as much regulatory capital in their organisations. So that's April 22. So in terms of how that guidance has helped, it's probably a little early. It's not even 12 months yet, but that would be the sort of discussions, is finding out whether that guidance is clarified, whether people are comfortable that it's made it easy for them to understand. But as you know, it can be very difficult to define eligibility when things are moving very quickly in a particular industry. And the intent of the tax incentive is to incentivise additional expenditure in the research system over and above what people would have done otherwise.
Yeah, of course. Okay, so just, I don't want to take any more time, but just the nub of the issue is really, are there any existing proposals on the table that the government is considering? Because it's obviously quite complicated, and the reason this has been a bit of an intractable issue is because it's been caught in between different parts of the Commonwealth. So I guess I'm trying to get a sense, is there any further proposal that's being considered at the moment, or is the approach you're taking to wait and see how industry responds to the new ATO guidance and the like?
We are working actively with the Tech Council of Australia. So as the Secretary mentioned, there was new guidance put out in April 22, and further guidance is in progress and expected to be put out by the ATO in coming months.
Sorry, you're saying there's going to be more guidance?
Yes, that's right.
In addition to what was published in April this year?
Yes, that's right. So
okay, that's not very old.
No, well, that will be more looking at the ATO side of the R&D.
Sorry, you're saying guidance from Oz Industry?
So we consulted with Treasury and the ATO and stakeholders and the Tech Council of Australia in that guidance that was put out, and that was relating more to the Department of Industry's functions under the scheme, which is about registrations and what is eligible for R&D tax incentive. The next tranche of guidance will focus on the ATO's responsibilities, which relate more specifically to validating the expenditure under the program. So, for example, once R&D activities are registered with our department, the expenditure related to those activities is then submitted to the ATO as part of the company tax return.
Okay.
And that's when the ATO gets involved. So there is further guidance planned there, and we will work with the ATO on that as well. We're also working with the Tech Council of Australia on a possible pilot, working with up to 20 small software companies and taking them through our advanced findings process. So an advanced finding.
What's your timetable for that?
We're in active discussions with the Tech Council of Australia currently, so I would say perhaps in the next few months we'd be looking to put that into motion.
Okay, look forward to talking about that next time.
Yes, we're looking forward to the learnings.
Senator Canavan.
Thank you, Chair. And I too would like to echo Senator Bragg's comments and congratulations, Ms Quinn. And I agree with his sentiments. You are a very esteemed economist. I'm not. I'm an agrarian socialist now, but if I remember my economics textbooks correctly, and I'm picking up on Senator McDonald's questions before, if we were to put in a price cap, I'm talking about these price caps for gas, wouldn't that lead to a shortage of gas? If the price was below the equilibrium price that we're seeing now, I presume that's why we'd want to do that. Why wouldn't that lead to a shortage of gas in Australia?
So I just refer to my answer before, which is a complicated market and lots of different sections of the market. The East Coast gas market's very different to the West Coast gas market, for example.
I should say I'm referring to the East Coast here because that's what we're all worried about. But yeah, why wouldn't that?
So you do have to be very careful when you think about regulatory interventions to make sure you don't have unintended consequences. That is part of any analysis of any regulatory intervention, either on the quantity or on the price.
And going to some of the specifics of the complexities of this market, it seems to me over the last few months that one of the driving forces of the particular spike we saw in gas prices was during winter the increased demand from gas power stations who were desperate for the gas to keep the lights on. They'd almost pay any price to guarantee that. I mean, have you looked at how a cap might operate in the event where there is a surge in gas demand just to keep the lights on for electricity production? Would that cap bind on those consumers, or would there be different arrangements for them, etc.?
So they're all very good questions, and part of the issue you have to think about in terms of the market is the different components. As Senator McDonald said earlier, there's producers, there's the transmission system, there are different users including the electricity generators and industrial users, In relation to the electricity generators, you'd also need to think about the implications for the electricity market, which we've got different generators with different cost structures bidding into the market. So it's a complicated system that needs measured and considered analysis to work through the issues and the implications. And as you're absolutely correct, that different interventions have different pros and cons, and that's part of the discussion and work.
What about the non-price factors in contracts? And I'm particularly talking about the length of the contract, the potential price risk, demand risk that a producer or consumer might take on that, the penalties for non-delivery, or how much non-delivery can occur without a breach of contract. You said earlier, I think, when I was listening, that there's not always that great transparency at the moment. I mean, do you have transparency at this stage into all of those contractual terms that might exist between different industrial, and I'm particularly interested in the industrial sector here, but the industrial sector and gas producers or suppliers?
So it is a very complicated market. You mentioned the seasonality issues as well in terms of when gas is being delivered, for what purpose and in what volume. There's a lot of negotiation between parties, and a lot of that's commercial in confidence, and so there is a lack of public information, and for example, we don't have full visibility of all the contracts by any means. The ACCC has more through its inquiry process, using its powers under the Competition Act as part of its ongoing inquiry. It produces aggregate information and analysis in its reports, and it is complex, and you do need to work through the consequences. There has been a structural change in the gas system with the reduction in gas supply out of the Bass Strait and an increase in gas supply in Queensland. That has implications for different parts of the market that is still working through the system as well.
Well, I was going to sort of go to that too, about the transportation costs as well. I mean, are you looking at any kind of interventions based on a wellhead sort of price? Because obviously different consumers in different parts of the country pay different prices for delivery of gas. How is that being factored in?
So that's one of the considerations. It's absolutely the case that the transport costs factor into the retail price and even the wholesale price, depending on what your arrangements are. So all of that complexity is part of the discussion.
I don't know if you heard earlier tonight in this committee Treasury, or the Treasury Secretary who was absent, but in his opening statement, Dr Kennedy flagged that energy price interventions should be considered. They wouldn't really go into specifics of what they might be. Certainly didn't dismiss price caps. Is this department being consulted by Treasury, or were they consulted before Dr Kennedy's statement this evening?
So we have been in discussions, as I went through with Senator McDonald, with our colleagues across the public service on what's happened in the gas market. This department has been in those discussions for a large number of years because providing advice on the export arrangements and the heads of agreement and production issues. So it's an ongoing discussion. The short answer is yes, we've been discussing with Treasury and others on what's happening in the market.
Did you know Dr Kennedy would make that statement this evening?
Not precisely. I mean, I've talked with him as well as other people in the system on different views, but I'm not party to his sent estimates opening statement.
Do you know, Minister, if the ministers were consulted about Dr Kennedy's statement?
I don't know.
Could you take that on notice? Thank you. There's been a lot of focus on, I suppose, interventions that go to issues like price caps, potentially talk of reservation. If you were to introduce any of these sort of measures, as I mentioned, it would presumably put some pressure on the clearing the market, because there would probably be extra demand than what we see now if the price is artificially kept low. Seems to me the corresponding need here, if we are to intervene, is to increase supply at the same time to try and alleviate such pressures. Are you looking at advice to the government of how we could increase supply in the short term of gas in Eastern Australia in particular?
So we're looking at all of the options, as ministers have expressed publicly. So there are, it's a complicated market. There are a lot of different moving parts. We're looking, and have in the past looked at all the elements of the system.
are there any particular options in terms of increasing supply that you're focused on at the moment?
So the questions about regulatory, on the regulatory side, and I sort of mentioned a few times, but we'll have our resources colleagues here on Thursday. But obviously the government has released the acreage release in terms of opening up more parts of the system for possible exploration. So that's one specific policy that's...
How many, were any of those in Eastern Australia though?
I would have
You might have to wait, I
I
think.
have to wait for the experts.
Almost
but
all of those might have been disconnected from the eastern market, I think. As I was particularly asking about Eastern Australia. I mean, I noticed in the budget the government has cut a significant amount of funding to gas projects, over $50 million across the Beetaloo and Cooper basins. I mean, have you done an analysis of how that will affect the supply of gas, especially for industry in the next few years?
So we would have provided advice on those particular measures.
Okay. And were those decisions, were they made in this portfolio or were they...
They are in this portfolio.
They're in this portfolio, okay. And they come under Ms King or Minister King?
Yes.
Yes, okay. I note also that recently in the last week, the Department of Environment, or the Minister for Environment, I should say, has asked for, I think, 18 major coal and gas projects to be reassessed under the EPBC Act. Was the department consulted before the Minister of Environment made that decision?
I'd have to take that on notice for our resource colleagues who are not here because they're on Thursday. So happy to take it on notice and provide that information at the time.
I wanted to pick up on Senator McDonald's questioning about, you mentioned before about cost curves in the industry and what have you, and the impacts of price caps. You said, did I hear you say you're doing more modelling now on the costs?
I don't believe I used
constructing
the
a
word,
cost curve? Or,
I
shouldn't say
the word
modelling. I'm sorry, I shouldn't use the word modelling. More analysis.
Very careful with using that word.
Yes, more analysis of the cost of production for
So
Eastern.
it is. I mentioned it's a factor in the process. One of the opaquenesses in the market is the differential cost structures across its incredibly commercial sensitive information, particular companies' cost structures. So that is information that would be really helpful to the discussion.
There has been some analysis of that in the past, though, particularly the ACCC reports.
Yep, there are.
I mean, I would have thought one
there.
difficulty here is you'll never get a precise estimate anyway, because cost accounting is not a not a precise science.
It's a complicated issue because the technology in different parts of the country, you have to take into account labour costs, capital costs. It shifts obviously with what's happening in the broader economy. So it is important to look through those issues, and the different technology options do make a difference. So it's all a factor in any production market, what the cost structures are, what the competitive dynamics are, what the supply dynamics are. So it is, I'll say it again, I feel like I'm a bit of a broken record, a complicated issue that's been with us for some time, and we'll continue to work on it and provide advice.
What about on the industry side of this equation? So that's on the resources side. The costs are sort of if you like, a break-even price that gas producers would need. What about for the industrial customers, and particularly focusing on the manufacturing industry? There's been more limited analysis of that, I believe, in ACCC reports, although they have often, Rod Sims from memory has often referred to a figure of around $8 a gigajoule being a sort of a pinch point for many industrial consumers in Victoria. Are you doing any work on that, on what price they need to stay alive before we lose too much manufacturing?
So that is also part of the factor is on the different cost structures faced by industrial users and the electricity generation sector, and it depends all very much on exactly what they're using gas for, what their substitution points are between gas and electricity, for example, where they're located, what other options they've got. It's not the case that there's one single price for all the different industrial users either, because of those factors depending on what they're using it for, what their cost of capital is, how energy efficient they are, what their other options are for reducing their demand for gas as well. And the government announced some, not in this portfolio, but in another portfolio, about energy efficiency measures. So there are, on both the supply side and the demand side, these cost pressures, competitive dynamic, and as I said, it's complicated.
Yeah, and that's going to be our problem here. I mean, I just come back to the point here that there might not be easy answers, but there are simple ones, and the simple one is to increase supply. That would help lower the price. That would help lower, create more gas for everybody. Trying to retrofit on different interventions are probably going to create more perverse outcomes than otherwise. In regards to industry and manufacturing, how are you reaching out to that sector at the moment to not necessarily work out these break-even prices, but what discussions are you having with bricks manufacturers, petrochemical manufacturers, people that are highly exposed to these high prices?
So we have different avenues for engaging with stakeholders. We have our network of regional managers. I'll get the terminology right, someone will correct me. We've got people on the ground that are engaging with industry on a regular basis. They collect intelligence and information through that network and feed it back to policy. But we also conduct individual discussions with different groups of stakeholders.
Have you or any of the deputy secretaries hosted roundtables with manufacturers recently?
Not recently. There have been individual approaches when we're talking to different manufacturers about things, and we have a series of roundtables depending on the issues.
Has either Minister Husich or Minister King hosted a conference or meeting with industrial users recently?
We had a large number of roundtables in the lead up to the Jobs and Skills Summit, which covered what was happening in the particular industries and how to focus on jobs and skills, but it did look at other issues to do with...
but not a specific meeting about this issue?
There have certainly been stakeholders who have approached both the department and Minister's office
to talk about... So they've got to approach you, you're not reaching out to them at the moment?
We reach out to them on a regular basis, but we haven't had a specific thing in the recent weeks on this issue.
I thought I heard before there's no interdepartmental committee on this issue, is there?
So there are lots of discussions across the public service.
But no IDC focused on energy prices?
So there are discussions on all different levels on a regular basis.
There's no IDC to deal with energy or gas prices?
So there are mechanisms to talk across the department.
That's not my question, Ms Quinn. With all due respect. I mean, it's a pretty simple one, and I don't think it's one that
But different people have different names, whether it's an IDC or a working group, or we're just having a meeting or a discussion. It's clear we've been tasked
this
to
perhaps
work on
is a question of the Minister. I mean, my concern here, it doesn't seem like the government's taking this issue very seriously. I mean, when we were in government and this was happening, I remember when there was a gas shortage, we had a number of major roundtables in this room, one of these rooms, with manufacturers, with the gas producers. The Prime Minister was involved in those discussions. There was an interdepartmental committee. But to me, it seems like all the ministers are all at different odds with each other, and the departments don't seem to have any formal processes to collate these issues. When is the government going to get serious with proper processes here to allow the industry, which is suffering in this country right now, to have their voice heard here?
Well, I think I might take that question. I mean, Senator Canavan,
you're not. You're flailing around at the moment.
If you want to contrast the relative senses of urgency and record of the government, Mr Morrison's government that you were part of.
Senator Canavan.
Zero work done on this question in the lead up to the election.
Exactly.
All about power, no interest in energy. Well, we could do that all night, and I'd be very happy to do it.
Because you're now using the only thing you've done is to use the thing we left. You spent months complaining about the USM, and now that's all you
drone on for the last 15 minutes, and I'm going to answer the question. I'm not going to be interrupted by him. There has been a very clear process. And we are going to run a fair income government.
Minister, sorry, can you just... We've been having a very respectful conversation over the last few hours, and it's very helpful if when, as I have said earlier, when one person asks a question and then a person answers a question. So, Minister, you have the call.
Thank you. As I was listening carefully to the discussion that you and the Secretary were having, these are urgent issues and they're complex issues. And what they require is a proper cabinet-style government that deals with these questions in a careful and deliberate way. Now, on the questions of short-term supply, as has been outlined this evening, the government reached agreement with the gas producers about 5 weeks ago. There are questions that relate to price and the kind of interventions that are being considered by the government. As I think the Treasurer said a few weeks ago, all of the options are on the table and have been worked through in a very careful way. And that's what Australians expect. And we'll do that in a way that produces the best possible policy result. I should say, Chair, that I think there was a question that that Senator McDonald asked about Minister Husick's meetings with gas producers that we agreed to take on notice, but I'm in a position to answer it now if that assists. He had there's a series of meetings here, Monday 27th of June with Appia, Wednesday the 24th of August with Santos, Thursday the 25th of August with INPEX, Monday 12th of September with Origin Energy, Wednesday 12th of October with ConocoPhillips Australia, Wednesday 26th of October with APLNG, and Thursday 8th of November with Shell. Of course,
so
he
was
is...
this Minister Husick?
Yes, yes. And of course, he's the Minister for Industry and Science, and I'm sure when we come to the discussion in the resources portfolio, there may be other questions about other meetings, but I'm in a position to answer for him tonight. So I thought I should do that rather than leave that question linger on notice.
Thank you. Could I just follow up on that?
Senator McDonald, sorry, can I just do a bit of timekeeping and see who else may have questions? It's you, Senator McDonald? Okay. And I believe Senator O'Neill has some questions. Thank you, Senator McDonald.
Just to finish off on this point, on the 26th of October, Phil Curry wrote in the Australian Financial Review, last week Dr Chalmers and ministerial colleagues Chris Bowen, Madeleine King and Ed Husick began examining options to try to force down prices without creating sovereign risk. It is understood a departmental task force has been formed. So,
the department.
I'm sorry?
It's the department.
Yes. Well, I've been asking questions of both Treasury and now this department. I'm curious as to, the Minister Ayres spoke before about we're going to have a fair dinkum cabinet process. We're going to have, systems and collaboration. And an interdepartmental committee or group or task force, or as you say, whatever you want to call it, would be a key part of that process normally. And so I'm interested that Phil Curry thinks that a departmental task force has been formed, and yet in all my questions I can't find anybody to refer to a task force by any other name. So I just wanted to have one more opportunity to ask this specific question. Is there an interdepartmental task force, a committee, a collaboration, a CAMEL, a committee by any other name that is working specifically on options to force down prices that would have been created by Dr Chalmers, Chris Bowen, Madeleine King and Ed Husick?
I think there was a long discussion earlier on that you led with the Secretary about the kind of engagement across government on this question, and I think she answered that very carefully and thoroughly. Whether the Google search term gas and task force has elicited Mr Curry's article or not, or how you might have otherwise brought yourself to that article.
To be fair, Senator Ayres, there was a line of questioning that I used at officials from the Department of Prime Minister and Cabinet.
It sounds to me like a question for Mr Curry.
And they were just as elusive They were just as elusive.
So I couldn't hear because I was trying to answer the question
on the
and you were...
28th of October to officials from the Department of Prime Minister and Cabinet, and they were equally elusive.
The minister's just answered. The
around.
minister's just answered a question. I'm just wondering what the current question is, Senator McDonald or Senator Smith.
Well, I think the minister was making some aspersions that I couldn't come up with questions on my own.
No, I would never do
I've certainly not had any communications with any journalists on this matter.
I'd suggested that that's the form of words that Mr Courier's used.
It's his claim, I think, was the point.
You've had a long discussion with the
it's his
Secretary.
claim.
She's characterised it the way that she had, and I'm very comfortable with that.
And I think Senator Smith, well, I won't speak for Senator Smith, the point he was making was...
The Secretary has used, I'm paraphrasing, but the key word here is there have been discussions with colleagues, etc., around the gas market. I'm interested in knowing what is the formal process that is being used to facilitate those discussions across government.
So the usual mechanisms apply to any policy discussion where departments of state do the analysis as they're responsible for under the administrative orders. We provide advice. We work with colleagues to work up options if that's appropriate, if there's shared responsibility or knock-on implications for issues, which we are doing in this case. We provide briefings to our ministers who have ministerial level discussions. So I can assure you that there's discussions at ministerial level, at secretary's level, at deputy secretary level, at assistant secretary level, at junior levels across the system on this issue. There is no shortage of cooperation, collaboration and discussion.
I think to follow on from Senator Canavan's line of questioning, I think we would like to know at the junior official level, at the senior official level, at the ministerial level. We don't need to know at Cabinet because I think we're all quite familiar with how that process works, but all the processes that sit under that usually have a name, usually have a membership, usually have a chair, and what we're seeking to try and understand, is there one, and if so, what is it called and what is its membership, and if there is not one, then there is not one. So Secretary, is there not one?
There are different administrative arrangements and discussions at the different levels. Happy to take it on notice in terms of...
So then the second question is
why responsibility.
Why over the course of the week, when I had a similar line of questioning to officials at the Department of Prime Minister and Cabinet, and now today on Tuesday, the 6th of November, a line of questioning I prosecuted unsuccessfully, unfortunately, because I got the same response as I'm getting from yourself at the moment on the 28th of October. Why the need for secrecy? Because I would have thought that businesses, consumers, others would be very, very interested, would be looking for a level of confidence that the government is not just discussing this, but there are formal processes in the government that are informing its deliberations. Senator Ayres has said this is going to be a fair dinkum cabinet-style government. Well, I think interdepartmental committees, task force, whatever they are called in this particular instance, is a characteristic of a fair dinkum government-style, cabinet-style government. So I can't help but think there's cause for concern if there's no committee or no mechanisms that you're prepared to share with the committee, or there are, but you're still not prepared to share. I don't understand why there needs to be this level of secrecy.
I don't know that I would characterise my answers as any level of secrecy. I just know that it's the 8th of November today, rather than the 6th of November. There are discussions across government at different levels, as would be appropriate. Ministers are discussing this issue. They have been public about discussing this issue. We are working through...
How are they discussing it? Under a tree, in a coffee shop, in the car park, because in other conversations, I don't mean to talk over you, Secretary, but in other conversations on other matters over the last few days of this estimates process, the word task force, the word interdepartmental committee has been willingly shared with other committees as a way of demonstrating progress on issues. The Secretary's Board took on notice my question about all the various subcommittees. The Department of Prime Minister took on notice. My question about interdepartmental committees and what is their membership and who's being... So I think we're very curious, very, very curious, why on this particular issue, which is of such significance and importance to people living on the east coast of our country, are we being a bit elusive? My word.
Minister. Senator Smith, versions of this question have been asked and answered. The answers may not be to your satisfaction. They clearly aren't, but the question has been asked
to be
and
fair to the
answered
Secretary, the answers have been getting
multiple times by yourself, Senator McDonald, Senator Canavan. I am just noting for the purpose of management of the hearing that the question has been asked and answered multiple times. It may not be to your satisfaction. I know the Minister and the Secretary may want to have one final answer to this question that has been asked multiple times, but my appetite for the same question is running out, and Senator O'Neill does have some questions. The Minister.
Well, I just observed that the Secretary has answered this question in detail. If the apprehension amongst coalition senators is that there is not a careful, deliberate process across government of discussions and briefings and a proper cabinet-style process, I can assure Senator Smith that that's not the case. This is not a government like the previous government that does things by press release and attaching marketing and labels to issues rather than actually dealing with them. We will be assessed on the substance of the response. We'll be assessed on the substance of the response. This is a difficult and important set of issues in front of the Australian economy.
Exactly.
The quality of the outcome, that's right.
Yeah,
That's
not
right.
just a special name to make it sound important, interdepartmental
Okay.
committee.
And-
Oh my
and-
God, let's get the
and having
name right.
finished-
Forget
and
about
having
the
finished on
substance.
that point, I just have to make one small correction, and that is that the meeting with Shell was the 8th of September, not November, and I just assure Senator McDonald if there is any other information in relation to that, we will come back on notice on that issue.
Thank you, Minister. I'm going now to Senator O'Neill.
Thank you very much. I just want to ask a question about a matter of considerable importance to me and the country, I think, and that is the tech sector. In particular, the skill shortages that are going on in that space. It's very clear, I think anybody who's been following the debate around this important sector in the Australian economy is that the skill shortage just hasn't happened overnight. I'm wondering what are the factors that are really driving the shortages and if there is any change over time, or if it's just an exacerbation of the same factors over and over.
Just to be equally fair across this, technically in item 1.2, which is on Thursday, happy to do it at a high level and have officials here in more detail. Whenever there's a significant increase in demand for skills, it does take time for the systems of government and society and industry to respond. And it is the case that there is an increase in demand for digital and technology skills in the economy. And it's important that systems, in terms of the education system, in terms of industry training systems, respond. And it is the case there's a gap. The other factor here is the restrictions on immigration during the period of the pandemic, where we have historically had skilled labour coming into Australia through our immigration system that has an ability to fill immediate needs. In the digital and skills system, it's also the case that historically not all parts of the labour market or all parts of society have seen their future possibility in these sorts of jobs. And so there's been a focus over time of increasing the number of women, for example, who may be interested in digital and skills. The current government has got a focus, as explored during the Jobs and Growth Summit, on expanding the pipeline of people from disability, people with different ethnic and cultural and linguistic backgrounds, and First Nations people. they typically are unrepresented, lower representation in the digital and skills area, and the wider we can widen the pipeline of people interested in these jobs who have the ability to access the training and entry-level opportunities, or reskilling if people need to add those capabilities to their existing skills, then we're likely to reduce the skills gap in this country.
Thank you very much for sort of giving me the outline of the shape of the problem. Particularly referring to reskilling as such a critical thing for people to have hope that they can change if the industry that they're in is declining in its importance, and they have to invest to make a change, and that's been an impediment for many people, particularly across the regional areas that I spend so much time in. But I'm kind of keen to understand the particular actions in your portfolio area currently to address the skills shortages that you've just been describing. You've named quite a few initiatives.
That's right. So coming out of the Jobs and Skills Summit, joint work between this portfolio and the Department of Employment and Workplace Relations is the Digital and Tech Skills Compact, and that's focusing with working on through a working group with employers, government unions, training and education providers, looking at the possibility of a digital apprenticeship scheme. There are a set of programs which the team can take you through if you're interested, particularly on Thursday under 1.2 around the Next Generation Artificial Intelligence and Emerging Technology Graduate Programs, Cybersecurity Skills Partnership Innovation Fund, a focus on quantum research PhDs, for example, a focus on programs for women in STEM, which the government's announced a review of those programs, and particularly thinking about whether those programs could be adapted or expanded for different diversity groups. And also work around space industry in terms of the workforce pipeline for those industries. They're just a few. There are other initiatives outside this portfolio and a set of things the government's looking at in terms of the vocational education system and how those can be adapted for the technology and skills, higher education. The industries talked about digital traineeship arrangements and things like that. So how can government partner with industry to help industry fix some of these issues themselves as well?
Thank you. I'll probably have some more detailed questions on Thursday when we get to 1.2. You mentioned STEM and you mentioned women. Are there any particular programs that are addressing this issue right now?
Yes, there are. If you would like more detail, I think I'd like to take them on notice and have my experts here on Thursday.
I think we will wait for that. Thank you very much, Ms Quinn.
Thank you, Senator O'Neill. I understand from my colleagues that we're in a position to release corporate. Sorry?
Just not cross-portfolio.
Okay. So we're in a position to release corporate. There was a break on the program, but I think with the agreement of the committee, we think we may make good time if we push through. And so that's where we're at the moment. And Senator McDonald, I believe you have some questions in relation to program 1.1.
Well, it is
Outcome
still,
1.
I think it's going to be a mixture of cross-portfolio and outcome 1.1, so I continue to be guided by the Secretary on...
Senator McDonald.
Where I am. Thank you. Ms Quinn, I wanted to ask you about the ACCC Code of Conduct. How is the department contributing towards the ACCC's review of the Gas Code of Conduct and the government's consideration of making it mandatory?
So that's technically under our resources team, which is 1.3. But at a high level, we're working with the ACCC. Officials from my department have been working with officials from the ACCC, including in discussions with industry around the the voluntary code of conduct that's in place. We've also been having discussions about the voluntary code of conduct, but also about the government's reforms for the gas security mechanism.
Will this extend beyond producers and include retailers, manufacturers, pipeline operators and so forth?
So they're all design questions about the current voluntary code does not cover that full breadth as you've mentioned. It's but in theory a code can cover all or part of the market and it varies depending on all the different industry codes. But those are questions for the Treasury portfolio that look after the competition.
Thank you. I want to move to industry engagement roundtables and summits. How many roundtables or summits has Minister King or representatives from her office attended since the 22nd of May this year?
So I'd have to take that on notice. There were a large number of roundtables in the lead up to the Jobs and Skills Summit. It was just as I arrived in the department, but I think it was sort of in excess of 20 or so. But how many hours were? So there's
How
jobs
about we take that on notice?
Absolutely, because there's
please?
been other ones around other policy issues, etc. So happy to take on notice. So you asked roundtables.
Roundtables or summits.
Okay.
And could I have a list of these events, dates and where, who was invited, were the events application or invitation only or a combination of that?
Happy to take that on notice.
Thank you. On the 31st of August, the day before the Job Summit, the Prime Minister posted a video to social media saying that we know the summit has brought people together already in more than 100 consultations and roundtables and mini-summits that have been held. The Prime Minister also mentioned these in his concluding remarks. What was the department's role in organising these summits and roundtables?
There were a series of roundtables. The department did the usual things in terms of supporting invitations, managing attendance, organising events, taking notes, shaping the discussion, recording views, providing that information into the system in preparation of the summit. But my colleague who's just joined the table might be able to expand on that in relation to particularly to the Jobs and Skills Summit.
Thank you.
Thank you, Senator. Vivienne Johnson, Head of Strategic Policy Division. So the department coordinated 8 pre-summit roundtables supporting both Minister King and Minister Husic. The proposed invitation list was developed by policy areas of the department. We worked with peak bodies and key industry and community stakeholders to ensure the roundtables represented a cross-section of stakeholder and sector perspectives. This included diverse representatives from small businesses, multinational startups, business groups, industry peak bodies, unions, academics, and education sectors, and First Nations people. I can run through the list of roundtables and the dates if you like, Senator.
No, I'm happy for you to provide those on notice. Okay. Thank you. What were the outputs of these summits and how did they feed into the main summit?
So the outputs for the summit were collected in terms of feedback from the table. We collected minutes and we provided that information to the Department of the Treasury, who fed that into the holistic Jobs and Skills Roundtable process.
Just to be clear, they also provided to our ministers who considered them as part of their portfolio responsibilities as well.
Yes, very good, thank you. When you provide the list of these summits, their locations, the attendees, their cost and the action items, please? Would you be able to provide that? Thank you. How did political party signage find its way into at least 2 of these initiatives?
I'm not aware that it was, Senator. I can check that for you.
Thank you. So take that on notice.
It might help if you've got specific information to narrow it down.
I will provide you with that.
Thank you.
Thank you. I've got a quote, Minister, from the Australian Workers' Union from September 2020. More gas should mean more affordable gas. More affordable gas means more competitive manufacturing and cheaper electricity. Do you support this statement, Minister?
But before I address that, just on that last question, I'd be very keen to see the example. I can tell you that there were many of those fora conducted, round tables, many of them by members of the government, not ministers. So, yeah, I'd be interested to see. I'm sure that something conducted by the department wouldn't have political party signage up there. Give me your quote again, sorry.
Thank you.
From 2020, was it?
Yeah, September 2020.
Oh, yeah.
More gas should mean more affordable gas. More affordable gas means more competitive manufacturing and cheaper electricity.
Well, you're talking to a representative of the government that's just put just short of 47,000 square kilometres more exploration space up, both onshore and offshore. The question in front of the government now is not the medium-term and long-term question of more gas supply being opened up in Australia. It is the immediate question of the excess gas being generated in Australia and the supply agreement that the minister reached with the gas producers. That is the fundamental question in front of the government now in terms of supply. So broadly, I agree. The question that we've spent much of this evening traversing is what is the correct policy response to deliver security, particularly for the kind of gas consumers on the industrial side that Senator Canavan was talking about earlier, and that is the issue on price that the government is engaged in now. What is the correct policy response that will deliver certainty and security for those businesses and for households, and in terms of its knock-on impact into the electricity market?
You mentioned onshore supply. Can you speak more specifically to that, please?
Yes, I could. One of the issues here, of course, is consistency. And I've noticed some interesting commentary from around the country. I noticed that the New South Wales Treasurer, who says he thinks that there should be gas reservation, while the New South Wales government has not made progress in terms of the Narrabri project. It's still been held up. So there are questions of consistency.
Queensland the same. There's projects there that are.
But the immediate question that
that
we're engaged with, of course, is supply tomorrow, supply on January 1, price on January 1, and let's not pretend that these longer-term questions of gas supply are immediately engaged.
I think what you said was that your government provided onshore exploration areas, and I think you misspoke. I just want to check those.
Yeah, I'm just checking as we speak about those.
Normally it's the state jurisdiction.
Yeah, they're offshore. They're offshore. Yes, you're right. Thank you.
Thank you. Minister, as a former State Secretary for the Australian Manufacturing Workers Union, do you know the AMWU's current position on gas?
I don't have a sort of I don't have a copy of the AMWU's current position on gas. I'm not sure. I'm not sure. I'm a person in this parliament who's very proud of my record working with that particular union, advancing the interests of manufacturing workers in New South Wales and around the country. They make they, along with the AWU and the ETU in particular in this area of policy, make important contributions.
All right, so I'll refer to...
You're not going to make much progress with me by contrasting the different positions of different unions in the Australian Labor movement and asking me to comment on them. That's going to be a sort of cul-de-sac that we could spend all night in, I suppose. But it's not very unusual for these organisations to express different views and then come together in a way that's pretty constructive.
Indeed. All
And
right.
it may not be relevant to the estimates process if that were a direction that
and it might not even
you were
be
inclined to go
That's
to,
right.
but Senator McDonald.
Thank you for providing that guidance, Chair. I was
here to help.
specifically going to ask you about Mr Stephen Murphy's comments where he made a media statement, May 2021, where he noted that the former government's National Gas Infrastructure Plan was wasteful spending by a gas-guzzling government intent on denying the futures of manufacturing workers in renewables. I'm just wondering, would you like to say if you agree with that statement or not?
You know, Steve Murphy, the National Secretary of the AMWU, is one of the country's finest labour movement and trade union leaders. If you want to know more about Steve's views on any subject, he'd be delighted, I'm sure, to come and see you. I could probably give you his phone number if you like.
Marvellous.
He's got plenty to share about the issues in front of blue-collar workers, particularly blue-collar workers in the regions, and I reckon you'd probably enjoy meeting him.
Thank you. So, simply then, you do support new oil and gas projects, specifically Narrabri?
Well, I think as people in the government have pointed out, all of these projects have to make their way through the regulatory processes. Much of that, of course, is in the domain of the states and territories. They all have to satisfy the economic requirements of their investors. It's uncontroversial, I think, that there is going to be a requirement for gas in the Australian market, both in terms of its role, in terms of its firming capability in the power industry, and in terms of its role in households and its role as a feedstock for industry. There is going to be a continued requirement for that. There is also going to be continued demand from our offshore customers for Australian coal and gas in particular. And the government's position has been very clear in relation to that. We've got a determination to introduce as much low-cost renewables and storage into the Australian system to put downward pressure on energy prices, and we will continue to export to offshore markets while there is a global market for those products. And in relation to some of those products, there is quite some global market and demand for quite some time.
So I was going to ask you about Minister King's support for new oil and gas projects, but I think she's been quite clear on that. Does Minister Husic support new oil and gas projects?
Well, I think Minister Husic's position and Minister King's position on these questions are entirely consistent, and they're consistent with the position of the government.
Very good. So consistent that he also supports new oil and gas projects?
I think yes, and I think that if you have more questions of detail that go to resources and energy, Thursday is the day.
Fantastic.
For those
All
questions.
Right. Minister, are you aware which basins make up the Strategic Basin Plan, which was designed to develop and bring online more gas supply?
I'm not aware of the list of particular basins. I don't have it in front of me, but I'm happy to take it on notice. Yeah.
Or refer that to the department?
Happy to.
Or?
Happy to come back on Thursday and have the officials here to provide
Okay.
details on that.
Are you aware of how much potential gas exists across these basins?
I'm sure the relevant experts are, yes.
Okay, so we'll leave all of those till Thursday. Critical minerals.
Which is also under resources, which is on Thursday.
So at a high level, this is, I was trying to find out when the new critical minerals strategy was expected to be announced. Would you have that sort of information?
So we're working with the government at the moment on the critical minerals strategy, and so it's a matter for government when it's released.
Okay. So I've got 2023, but we'll wait with breathless anticipation for the new
Given we're in
critical
November, it's a
minerals.
reasonable chance it'll be 2023.
All right. What is the process for developing the new strategy? Consultation with industry, feedback from the Trade Department?
All the usual things that you would expect in developing a strategy. Certainly discussions with the sector, with stakeholders, with all the components and other departments that have policy responsibility. It won't just be domestic, it's also important that we consider the international market and international stakeholders. Critical minerals are in great demand across the world, and it's a great opportunity for Australia to be part of the solution in providing those resources for countries to transition to net zero emissions. So there'll be domestic and international engagement and consideration. I'm happy to come back on Thursday with the officials looking after it to provide some more information in detail, if that helps the Senator.
Terrific. Then if you could just give them a heads up that I'll be looking for industry consultation and involvement, terms of reference, because it's not that long since the last critical minerals strategy was announced in February. So I'm keen to explore the changes. Can you tell me anything about the Critical Minerals Development Program, or should I come back on Thursday for that as well?
It'd be best to come back on Thursday.
Okay. Has the department conducted or been asked to conduct or been consulted on any modelling or profiling analysis, I think we landed on, in regard to altering the current tax regime for gas?
So we have had discussions at departmental level with the Department of Treasury on PPRT. We always do, and historically. In terms of the exact back and forward, once again, happy to have the people involved in those discussions who could provide more information than I can talk to it on Thursday.
Okay, so again, looking for consultation with industry about changes to tax arrangements for future investment in the industry and what analysis there is. Minister, on the 27th of May 2022, it was reported that the Prime Minister stated in relation to a super profits tax or a change to the PRRT, quote, "We won't be going down that track." Minister, do you support the Prime Minister's statements?
Well, it's been made very clear as this discussion has evolved that the government is considering a range of options, and when there's a decision made by the Prime Minister and the Cabinet, everyone will be told. And the set of questions that the government is working through, we've traversed quite a bit of that over the course of this evening, complex and difficult considerations that go to the interests of consumers and producers and getting the balance right for Australia. We're going to work through it in a careful and deliberate way, and we're going to make sure we get the outcome right in the national interest.
So that's not still the position of government. Is that what you're saying?
I've just
That
set out
we
are working carefully through these issues.
Is that a broken promise to the industry?
Absolutely not.
Okay. Has the department conducted any modelling or analysis on what would happen to Australia's gas supply if a price cap was introduced?
So we're working through different policy issues as we've mentioned before. As as we work through it, we will be providing information to the different relative parts of the system depending on their responsibilities. We'll provide and make available all of our expertise in that policy discussion.
So you have not yet been asked? I'm sorry, I wasn't quite clear. Were you saying that you will provide it in the future, or that you're currently working on it?
I am, the discussion around gas has been going on for a long time. Happy to take on notice a bit more sort of specificity to your question. Have we provided analysis on policy implications related to pricing and quantity and export controls and all the rest of it? Almost certainly, because the previous government made decisions around this and the department was involved in it. Are we involved in those discussions now with colleagues? Yes. So yes, we'll be providing information if we've got it, and analysis. As I've had many discussions before, when people kind of use precise things like modelling or analysis, most processes that go through discussions do regulatory impact statements. Those regulatory impact statements have analysis, quantitative implications, different options, pros and cons, all those sorts of things are always considered.
Okay, well specifically this is on gas supply, if a price cap was introduced, because I would be curious to know if the department believes a price cap would work in Australia when it's never worked anywhere else.
So it would very much depend on the design parameters of the policy that's before us.
So the department, we touched on Argentina previously, but is the department aware of what happened in Argentina when they introduced a price cap on oil and gas?
So I'm aware at a very high level. Officials that work more closely on this, I can take that question to them on, and they can give some information on Thursday. But sort of hypothetically speaking is really hard to answer. It always depends on the context of the situation, the specific components of the market. We are talking about a situation at the moment where prices are extraordinarily high internationally. They're not as high domestically as they are in other countries in Australia, partly because of the structure of our market. So it very much depends on the regulatory environment in which other regulatory factors are put into place. So it depends on looking at the system as a whole. It's really difficult to give a hypothetical answer because it's a highly regulated market and we are facing sort of extraordinary circumstances.
I think that was a similar environment to Argentina. So specifically, if the department could come prepared to answer specifically what happened in that market. Is it true that production levels fell? Is it true that they had to start introducing fuel rationing? And is it true they had to start importing LNG?
So happy to take it on notice. It's not clear though that we obviously advise on what's happening in Australia, and we would understand our Australian context much at a deeper level than we'd understand the Argentinian energy market and system. So happy to take it on notice and see whether we have got that sort of level of detail. We may well not have, I'm not quite sure.
I hear what you're saying, and I understand what you're saying about this special environment or the potential different environments in Australia, but I think given that that was a country that faced quite similar issues and used a mechanism, I think it would be, it would be foolish not to at least examine the circumstances there, because it did lead to the investors withdrawing from the market, and they had to then subsidise investors to come back to the market.
Yeah. So take it on notice, ask officials. I am on public record as having pointed out that Australia is very different from Argentina, and we've been well served by our regulatory environment and legal structures. And so that's in terms of a historical economic analysis of why is Australia different from Argentina. We've got a lot of benefits going for us in terms of our legal frameworks, our regulatory structures, confidence in our institutions and our decision making. So I think it's unlikely that what happens in Argentina is comparable to what happens here because of all those other factors that go into making the Australian economic system strong and resilient.
Senator McDonald, I have been advised that other senators do have questions.
Okay.
And
Could
so
I
I
just
might
finish a question on this topic and then
and would
share
that
the ball?
conclude your focus on gas related questions and resources questions, which really belong on Thursday?
Well, some of it is specific to Thursday, but some is the crops portfolio part that I'm trying to get to. But perhaps if I ask this question, I'll go back and sort through what I've got left.
Yeah, and then we'll go to Senator Smith after your next question.
Thank you. So I guess the interesting point is that we, as Australians, particularly at resource levels, both at state and territory jurisdictions and federal jurisdictions, like to think that we are immune from the sovereign risk issues that we see in these other overseas jurisdictions. But I'm getting very clear feedback from investors currently that they are putting future investment in Australia on hold because of the uncertainty around future regulatory decisions, and are either investing offshore or just keeping their money in their pockets. And as you know, with gas, the moment a wellhead starts, production is declining because they're not forever. And so if we don't have more projects coming online, we have a declining supply issue. So
I just make the observation that internationally there's been a great deal of action in the regulatory space relating to energy markets, with a large number of regulatory interventions across the globe in relation to the spike in energy prices across all energy forms as a result of the unjust war in Ukraine. And so clearly international investors need to think about opportunities, and they always do. I would argue that on the face of it that the Australian situation we are still an excellent place for people to invest. We have sound regulatory environments and good access to international capital, highly skilled labour and all the rest of it, infrastructure, provision, etc. So it's a relative comparison, and some of the interventions in other parts of the world have been extraordinary in response to extraordinary international situation.
Senator Smith.
Thank you.
Thank you very much. Thank you. Secretary, I was hoping that the official that is the head of the Strategic Policy Division might be able to return to the table.
Very strategic.
Welcome again, Ms Johnson. In response to Senator McDonald, you offered to provide a list of the Job Summit events hosted by the department, and I got the sense that you might have had that list with you now, and
Yes.
you might actually be able to read it out for us.
Yes, I can,
Thank
Senator.
you.
So on the 11th of August, we had a resources sector East Coast Roundtable, chaired by Minister King. It was held at the Brisbane Commonwealth Parliamentary Offices in Queensland, and some catering was provided. Would you like the cost of that catering, Senator?
Yes, if it's there, yep.
$38.96
In total?
in total.
Very modest event.
It was a modest event. There were 19 guests and 2 departmental staff.
And the Minister.
And the Minister.
Thank you, yep.
On the 17th of August, we had the Digital Skills Sector Roundtable for Minister Husic. It was held at the Sofitel in Sydney, and the chair was the Deputy Secretary at the time, Mary Wiley-Smith. There were 29 guests, 12 departmental staff, and catering catering was $675, venue hire was $3,000, and audio-visual ICT costs made the total cost inclusive of that to $11,940.51.
Benefit of using Commonwealth resources and not private hotels.
So unfortunately on that occasion, Senator, there was no availability at the
Sydney CBA.
At the Sydney office. Yeah. On the 17th of August, we had the Science and Commercialisation Sector Roundtable on behalf of Minister Husic, and the chair was the Acting Deputy Secretary at the time, Narelle Leketi. This was held in the Department's New South Wales State Office in Sydney. There were 28 guests and 6 staff. Catering was $513.08. On the 18th of August, we had the Manufacturing Roundtable for Minister Husic. The function was held at the Sydney Department State Office again. The chair was the Acting Deputy Secretary at the time, Narelle Leketi. We had 22 guests and 8 departmental staff, and catering was $497.46. On the 18th of August, we also had an Industrial Union Sector Roundtable on behalf of Minister Husic, again held at the Sydney State Office. Acting Deputy Secretary Narelle Leketi was the chair, 15 guests, 8 departmental staff, and catering of $604.55. On the 19th of August, we had the AI Sector Roundtable for Minister Husic. That was held at Industry House in Canberra, where the department is based. The Deputy Secretary at the time, Mary Wiley-Smith, was the chair. We had 10 guests and 3 departmental staff, and catering of $298. On the 23rd of August, we had the Large Industrial Employers Roundtable. That was hosted by Assistant Minister Ayres, again at the Dyser Industry House in Canberra, chaired by Assistant Minister Ayres. It was also facilitated by Professor Roy Green, given his strong industry and skills workforce knowledge. We had 17 guests attend, 2 staff. Catering was $258, and there was some costs associated with Professor Green's facilitation, which brought the total cost to $542.85. And on the 26th of August, we had the Resources Sector West Coast Roundtable on behalf of Minister King at the Perth CPO offices, chaired by Minister King, 20 guests, 5 staff, and catering was $591.
Thank you very much. Did Minister King or Minister Husic promote the events on social media? I don't remember seeing any images of these roundtables on their social media.
I'm not aware of that, Senator. We'd have to take that on notice.
You can take that on notice, sure. Can you confirm that the distinction between Job Summit roundtables, those that you've identified for me, that there was a clear distinction between the Job Summits hosted, organised by the Labor Party as distinct from the government?
So, Senator, the roundtables that I've just spoken about and reflected the details on, they were hosted by the department on behalf of either Minister Husic or Minister King, specifically for the Jobs and Skills Summit as a precursor to that.
So the distinction between them in their roles as members of the Labor Party and them operating in their roles as ministers of the Crown, that distinction was maintained.
Yeah, absolutely, for the eight events that I just ran through.
Were there other events that the department was involved in organising at all?
No, Senator.
Just these ones?
Just these ones.
Sorry. I just, perhaps on notice, you could just make sure that there were no departmental resources that might have been used if Minister King or Minister Husic were doing events in their ministerial capacity but in local electorates.
certainly check that for you, Senator, and take that on notice.
Some ministers did local job summit events in the electorates of their Labor Party colleagues that involved where the distinction between them acting in their roles as Minister of the Crown and Labor Party material wasn't so clear, wasn't so obvious. So I'm just keen to be very, very clear, Secretary, that there were no departmental resources used in organising events for Minister King or Minister Husic that consciously or inadvertently included Labor Party signage or material or references.
Absolutely happy to take that on notice. As you might know, that these are sorts of things that we watch closely and have discussions with Minister and their officers about their respective roles. So there's usually a fairly clear distinction between ministers understanding which hat they're wearing for particular events, and it is something we keep a close eye on in terms of the obligations of the public service to not be involved in party political matters.
Excellent. Thank you. Thank you, Ms Johnson.
Thank you.
Thank you, Senator Smith. Senator McDonald,
Thank
bringing
you.
us home.
So, if we could turn to carbon capture, utilisation and storage programs, please.
Those programs are a matter for the Department of Climate Change, Energy
Indeed they are.
and Water.
They were taken away from Minister King, I suspect because she's a supporter of the fossil fuel sector. My question is, when was the decision made by the government to transfer responsibility for CCUS programs and policies from the Department of Industry to the Department of Climate Change?
So if you just give me a moment. So the carbon capture and storage policy and programs are managed by the Department of Climate Change, Energy, Environment and Water. And this department still has responsibility for offshore carbon capture and storage under the Offshore Petroleum and Greenhouse Gas Act because of the strong links to the resources sector and industry growth. So there's a shared responsibility in terms of policy and programs, and then the regulatory functions in terms of offshore CCUS components. So it's not that I think your characterisation was that all things were taken off. That's not an accurate discussion. In terms of the Ministry of Government arrangements, the AAOs were announced on the 23rd of June 2022 that covered most of the arrangements. I just want to check with my colleagues. Some issues were discussed afterwards. There's often a post-discussion about various issues, so I just wanted to check whether there was any, I'm not sure. So we have our member of our Ministry of Government task force who might be able to add something. Sam, over to you.
Yes, thanks. Samantha Chard, I'm the lead on the Machinery of Government task force for the Department of Industry and Science and Resources. The Secretary's account is correct. The responsibility for the CCUS programs was affected through the original AAO changes that were made in June. There were some subsequent discussions between departments and ministers to clarify responsibilities, but they're effectively captured by those initial AAOs.
Okay. So the breakdown between, so the carriage of the programs is with the Department of Climate Change, Energy, Environment and Water, onshore.
Correct.
But offshore
The regulation of offshore
remains with this department.
remains, yes, but not policies and programs to the extent there are any.
Okay. When did Minister King or her office become aware of the transfer of responsibility for the programs from her department to the Department of Climate Change and Energy?
I would think we would have to take that on notice, Senator.
Did Minister King or her office seek advice or information about transferring responsibility for CCUS program programs and policy out of the Department of Industry, Science and Resources and into the Department of Climate Change, Energy, the Environment and Water.
So I'm almost certain that we provided some information of some form as part of the Ministry of Government changes. The officials that were involved in that will be here on Thursday.
Right. So will this part of the department, cross-portfolio, have any information on when this advice was requested?
No.
On whether or not the Minister wrote to the Prime Minister or any other Minister regarding transferring responsibility for the CCUS?
So that would be the officials that were involved in this particular area.
All right, then if I could please turn to, excuse me, the National Reconstruction Fund, the announcement of $1 billion for value adding and resources.
So the National Reconstruction, I can once again answer at a high level. Technically it's under 1.2, which is also on Thursday, but I can absolutely answer at a high level. So we're following the program as set out in the parliamentary budget statement and as provided to the committee. Today is covering cross-portfolio, which is and corporate, and the 1.1 and 1.2 and 1.3 are scheduled for Thursday.
I do understand that, but I'm you know, it's a cross-portfolio program. I'm not sure why the department has not come prepared to answer some of these sort of questions.
So happy to answer questions at a high level, but in terms of following the schedule and having officials available at the right time, we are following the schedule as set out in the PBS.
So what did you come prepared to answer questions on?
So sort of 1 point corporate and 1.1.
1.1, supporting economic growth, productivity, creation. Is that not what the Reconstruction Fund is supposed to do? So
there are arcane and deliberate rules about different programming, and the National Reconstruction Fund is under 1.2. Happy, as I said, to answer at a very high level, and maybe we could cover all the questions that you have.
Let's see. Has the department been given any specifics as to how this fund will be implemented within the resources sector?
It's the ministerial responsibility of Minister Husic. There are specific details set out in the election commitment in terms of the guidance of the National Reconstruction Fund, including indications of the 7 priority areas and indications of funding that might be allocated to those priority areas. So those program parameters are being encapsulated into the advice on setting up the National Reconstruction Fund, and so that includes allocation to value added in the resource sector.
Can you, on notice, give me the 7 priorities that you just referred to?
Happy to read them out to you if you'd like.
Fine, let's do that. Thank you.
Okay, so the renewable and low emission technologies, medical science, and I can give you the up to numbers as well. So the election commitment was under renewable and low emission technologies up to 3 billion. The medical science up to 1.5 billion. Value added in resources, which is the one I just mentioned, up to 1 billion. Value added in the agriculture, forestry and fisheries sector, up to 500 million. Defence capability, no specific number. Transport, no specific number. Enabling capabilities, and then we've got advanced manufacturing and critical technology fund, $1 billion each.
Sorry, just $1 billion for, just spell out both of those.
Advanced manufacturing and critical technologies.
$1 billion each. 1, 2, 3, 4, 5, 8 billion we're up to.
8 out of the 15 commitment.
15. So there is, so what were the ones that were no specific number?
Defence capability, enabling services, transport. And there would likely be other sectors that are available as well. The intention is that it covers the whole economy in terms of all the different sectors, and that's to be worked through in the implementation detail. More guidance on the precise investment mandates and co-investment plans and more specific detail is to come.
Okay. Does this department have carriage of the $1 billion fund?
So we have carriage of the setting up the National Reconstruction Fund. The intention for the National Reconstruction Fund is it's set up under legislation and then makes decisions on particular investments at arm's length from government.
Right, so DSIR will have carriage of the whole $15 billion fund?
So the National Reconstruction Fund itself will have carriage of the investment envelope. The department is doing the legislative and policy work to establish the National Reconstruction Fund.
Okay.
And have ongoing arrangements and maintenance similar to the other investment funds that the government has, such as the Clean Energy Future Corporation, as one example.
So the $1 billion for value adding and resources, will you have carriage of, I know you said it was independent to government, but what engagement, advice, panels, whatever, will this department have with that fund?
So the intention is that there will be enabling legislation for the National Reconstruction Fund that sets out the broad parameters. And below that there will be investment mandates that are also instruments as decided by government. And the department will be providing advice on the shape and form of those instruments going forward. And then once the investment mandates are set up and the National Reconstruction Fund is operational, it will be independent of government, subject to the ability for government to change investment mandates or to change other arrangements as set out in the legislation. And the department will continue to work with industry in terms of building their capability, in terms of advising them on the processes, checking the operation of the National Reconstruction Fund and the like. Very similar arrangements to other investment funds that have been set up under previous governments.
So the funding for this National Reconstruction Fund, is any of the money being appropriated from DSIR's funding or is it from another source?
So that's to be worked through as part of the government's legislation, which it intends to introduce into Parliament. So the arrangements around the funding and things like that will be at a high level in the legislation. The actual funds themselves are not being sourced from existing funds directly.
Where will I find that in the budget papers?
The 15 billion. So that in itself is, I'd have to double check actually. There are discussions around the setup costs, the departmentals for setting it up and things like that. The 15, once it's been legislated, will then kind of move into the processes, but it's not been legislated yet. So,
but in the budget.
Sorry, Russ Campbell, Acting Deputy Secretary. In the budget paper 2, so the measures document, if you go to page 153, that outlines the National Reconstruction Fund establishment arrangements, which includes the 15 billion, talks about the 15 billion allocation and the $50 million over 2 years to establish the NRF. And it talks about the NRF generating revenues from investments, which will be quantified as part of the policy legislation design of the NRF, which will follow some further public consultation. So that's part of the investment mandate discussion. There'll be more details to be published there.
Okay. Is it... I'm sorry to go back a step. So can you provide clarity on what this fund will do, specifically the value adding and resources?
I just put it this way, Senator McDonald. The Secretary has gone about as far as she can in terms of the, there may be other details that are publicly available or have been canvassed. This is the subject of a design process at the moment, consistent with the announcements that the government made over the course of last term when we're in opposition and since assuming government. There will be legislation that will be the subject of Cabinet deliberations in due course.
Okay. I note the Department of Industry is receiving $50 million in departmental funding for this execution of the...
For the setup of
setup,
the fund.
thank you. Can I ask whether the investment decision-making process will remain within the department, or whether a new entity will be established, or will existing entities like the CEFC or the Australian Business Growth Fund be utilised?
So that is part of the discussion around setting it up.
Okay.
It won't. The department won't be responsible for the investment decision. It will be the responsibility of the governance of the National Reconstruction Fund. The government is exploring the best way to set up the National Reconstruction Fund, including how it can leverage the capabilities within the system from other collective investment vehicles. It is the case that there has been synergies and the use of other arrangements to help set up entities, and that's something that's being explored.
Okay, so there's no point me asking how many ASLs that will cover. I mean, really, you've got $50 million allocated to do this project, but you really don't have any more information on it, on the design, on...
So we're working through it at the
fund.
moment. The team working on this will be able to go into more details. We have got... we know what we need to do roughly. There is setting up the legislation, which we're working on intensively at the moment. Then there's the investment mandates, which will involve consultation and discussion across the different areas of focus, because it's unlikely that there'll be one investment mandate for all of those different areas, because they have different circumstances and considerations. And then below the investment mandates, there's the intention to look at co-investment plans about how different things can go together for particular industries to be able to support them, for industries to and firms to be ready for co-investment. The National Reconstruction Fund is expected to look at co-investment, but also guarantees and other kind of instruments of support, potentially equity in some circumstances, depending on constitutional constraints. So there are the kind of different steps and layers. Then there's setting up the governance arrangements and the structures for the actual Reconstruction Fund itself to be an operational entity to make clear investment decisions against those mandated investment mandates in terms of engaging with industry. And then there will be an obligation on the department to continue, as we do with other entities, the governance arrangements and the policy design and establishment and evaluation of the process. I'm sure that the team have got some cost estimates that go to the $50 million. It's unlikely our Department of Finance colleagues signed off on things without more detail, so we're happy to take
that's true, isn't it?
Take that for Thursday.
Quite particular. All right. Is there any public consultation that is informing this design process?
So we have been in discussion. we have been in discussions with people around the arrangements. There will be further consultation as we move through those layers that I've just talked about.
Is it public consultation? Would I see an advertisement anywhere, or had you gone out to stakeholders to ask their advice? How's that consultation?
So at the moment we're talking
manifested?
to particular stakeholders about particular issues of expertise. There will be more public processes as we go through the investment mandates and the co-investment plans.
Okay. I do just finally want to ask on that, which stakeholders are being approached for each element of the fund?
So happy to take that on notice. At the moment we're working through the details of the legislation and how the legislation can be framed. So we've certainly had discussions with people from the legal fraternity, from those involved in the operation of other collective investment vehicles and the like, but happy to take on notice other stakeholders that have been discussed in terms of the legislation phase. And, we've got plans for the next phase, but we've not enacted them yet.
Okay.
I think if I just intervene. There is, and it may be that you pursue more questions about this when we come to this section in estimates on Thursday. It is entirely proper for the committee to seek evidence about the budget allocation that Mr Campbell referred to and the way that is being worked through. It is, however, the subject of a cabinet process at the moment. So there is a limit to how far either myself or the department can go in terms of these design questions. And that may be frustrating, but we want to be as helpful as we can in terms of what we can discuss that go to what's in the budget papers thus far. But it's very much circumscribed by a cabinet process that will be resolved when it's resolved, and will produce, as the Secretary said, legislation, but other design features as well.
I think we can feel confident that we've breached no cabinet confidence. We've breached nothing. We have discovered. I'm just agreeing with you. We have learnt nothing, so we've not breached any confidentiality or been told anything we shouldn't, because we know no more than we did at the beginning of my question.
Well, I'm confident that cabinet confidentiality has been breached. I'm sure that if people listened carefully to the Secretary, they would have learnt many things. But sometimes when you're asking the questions, it's hard to listen carefully as well.
Okay.
What I want to do is just manage expectations, Senator
Thanks.
McDonald, about what in the subsequent discussions we have about this, what evidence you might be able to elucidate.
Yes,
Thank
exactly.
you.
Look,
Senator
I think.
McDonald, you've still
Thanks,
got-
Chair. I think my takeaway from tonight is that the way we've broken Treasury and this department into two parts over the 3 days is not entirely efficient, because you don't have people who could have answered cross-portfolio matters here. And I get how this all works. I've followed it for a few years, but I think next time we might think about as a committee how we might do this in a more expeditious manner. That
I understand the frustration. It's also important that it's a large impost on the system to have all officials here for all the time. So we have a program and schedule to make it kind of efficient for both sides. Cross-portfolio is a very vague term, which makes it difficult to know exactly what questions might come up. So it's easier to think about the portfolio budget statement and how things are set out. The National Reconstruction Fund is clearly in the kind of 1.2 bucket. I just want to clarify, so it is a public commitment that the National Reconstruction Fund will be a corporate Commonwealth entity established by legislation. It's also a commitment that it'll have, as I mentioned before, independent investment decisions guided by an investment mandate, and that mandate will be issued by the Department of Industry Science with the Minister for Finance, so a co-ministerial arrangement. So that's just a little bit of extra that is publicly available and was part of the election commitment and is part of the design principles that we're applying.
I appreciate that estimates and the time involved is an impost on the department. Unfortunately, it is the process. It is the only process that the Senate has to go through and hold departments and officials to account. So,
sure.
System of government. And I think, the Deputy Chair did right asking the Secretary of both departments to come prepared to answer broad questions.
Thank you, Senator McDonald. We aim for continuous improvement in our processes as a committee.
Yes.
Are there any further questions?
Just one last little package. Does Senator O'Neill want to have a go and then come back to me?
We're in your hands, Senator McDonald.
Terrific. Okay. I want to ask some questions around around Assistant Minister for Foreign Affairs Tim Watts MP travelling to Africa in September of 2022 to attend the West Africa Mining Security Conference in Accra. Media reports stated he was there to campaign for the Australian mining industry. Am I going to have department officials here who can assist me with questions on this?
Not aware of anything.
I would have to take that on notice and or refer to Department of Foreign Affairs and Trade. An assistant minister in the Foreign Affairs and Trade portfolio, I would.
No, this is definitely resources because we have some specific projects over there that I wanted to talk about, particularly given that the minister went to campaign for the Australian mining industry.
So could you repeat the name of the minister?
Foreign Affairs, Tim Watts.
I
wonder if that's...
We can take a question on notice, but I do not believe that the department will be in a position to answer questions about the travel and responsibilities exercised by the Assistant Minister for Foreign Affairs. There are Foreign Affairs DFAT estimates. They go for...
Perhaps I should...
Traditionally go for 2 days.
So perhaps I should tell you about, this is specifically around a dispute with an Australian mining company, Cassius, and with a gold mine run by a Chinese state-linked Shangzi mining company that's committed trespass and theft and caused the death of at least a dozen miners. The dispute has occurred with an Australian mining company, Cassius, where allegedly Shangzi has tunnelled into the Australians' mining claim and stolen tens of millions of dollars for gold. And this was all part of the Sydney Morning Herald's blood gold investigation. So will the Department of Resources have any knowledge of an Australian mining company that's operating?
So thank you. Sorry, thank you, Senator. I'm not aware of the background or that report. The Honourable Tim Watts MP is an Assistant Minister in the Foreign Affairs portfolio. I'm certainly not aware of our department having provided any support to such a visit, but happy to take that on notice and check that matter for you.
Yeah, thank you, because specifically what I'm looking for is whether the department has provided support or advice to Cassius, the Australian mining company, or any other Australian mining companies operating in Ghana or Africa. And if not, then I'm curious as to how an Australian official would be travelling purportedly to represent or fight for, campaign for the Australian mining industry without taking advice from the Department of Industry, Science and Resources as the foremost authority on Australian mining.
I think, Senator McDonald, we will take it on notice, but the department, except in, and the Secretary will correct me if I'm wrong, except in very limited circumstances, would not be engaged at all in the operations or policy in relation to Australian mining interests overseas. That is, to the extent that, qualify this by saying this is my understanding, to the extent that the government engages with those issues, it's through the Department of Foreign Affairs and Trade. In Foreign Affairs, in Trade itself, and of course in Austrade and the agencies that deal with those questions. If there are questions that you have in relation to that matter, Foreign Affairs, Defence and Trade estimates are squarely the place where they should go. We will take the question on notice and see if there's any aspect that of the department's operations that tangentially touch this, but overseas mining interests are not normally within the province of this department.
Okay. In my experience, the Department of Foreign Affairs and Trade, if they're providing a briefing note to an Australian official travelling to somewhere like that, particularly with the specific purpose to campaign for Australian mining, it would seem surprising that they wouldn't have contacted the Resources Department to ask anything.
Well, as I said, there's very little touch points between this department's operations and Australian interests, Australian mining interests overseas.
I think this this question's been taken on notice.
I think it has, yes.
Yeah, but I just wanted to frame that again, expectations about whether we can actually be helpful on that question.
Okay, well, the good news is that I've provided you with a whole lot of pre-notice about what I want to talk about on Thursday, so I look forward to that with enthusiasm. Thank you for your patience, Chair. You've been very good.
Thank you, Senator McDonald. I ask this with trepidation. Are there any other questions from senators? There being no further questions at this time, the committee's consideration of the 2022-23 budget estimates will suspend until Wednesday, 8 November 2022. I thank Assistant Minister Ayres, Secretary Quinn and officers of the Department of Industry, Science, Energy and Resources portfolio who have given evidence to the committee today. Thank you also to Hansard Broadcasting and the committee secretariat. I declare the hearing adjourned.
Thank you, Chair. Thank you, everyone.